when I do that, my team say, you know, Jean-Paul, you should not, you should not bother with that. Let us do it.
Do you review though the end product every time, or how does it work?
As much as, you know, I have meetings with, of course, with all the brands, not all the times, of course. I travel in many, many countries around the world, and I'm just trying to help, to make sure that we are taking the right directions, pushing in the right innovations, understanding enough the consumers we are dealing with, trying to pilot the ship.
L'Oréal's Sharing Beauty with All program, launched in 2013, was designed to transform the business. Jean-Paul Agon was determined to make the company ethically and environmentally sustainable. It's been recognized for its efforts, awarded a AAA for water management, climate, and action against deforestation.
So when did you start thinking about sustainability?
Pretty a long time ago, you know, especially when I came back from the USA and I took over as a CEO. I really understood at the time that for a company like L'Oréal, especially because we are the leader of the beauty industry, we had to make sure that also we would do the best and the most to make the planet a beautiful place.
You know, what started it? Is it because you say we sell so much so we have to make sure that it doesn't go to waste? Or is it also because the consumers want something that's more sustainable? Or is it because the employees you hire want something more sustainable?
Very good points. I think it's all of that. First, because we have a moral duty. Secondly, because it's what our employees are asking for. Third, because it's what consumers want. Fourth, because it's what the society expects from a big company like us. So that's why we really went into this direction.
Does it make a difference for the consumer? I remember you telling me maybe, well, a couple of years ago, that if a consumer has a choice of a sustainable shampoo or a shampoo that makes our hair better, we'll always go for the shampoo that makes our hair better.
Yeah, but now what we want to do is to make a shampoo that makes the hair better and sustainable. Because now in fact, you're right. Our vision is that we have to find a way that it's not opposite, that it goes in the same direction, and it's the same for economic performance. You know, for example, the sustainability performance should not be opposite to the economic performance, and in fact, we are able to prove that. For example, in the past 10 years, we reduced our carbon emission by 67%. When at the same time we were able to increase our production by 30%.
How do you do that?
We work a lot. We transform all our factories. We have now 10 sites that are carbon neutral. We completely transform the way also we engineer with water. We have what we call dry factories, that they don't use water at all. They completely recycle the totality of the water that they use. We eliminate waste, so it's a very comprehensive effort on all fronts to transform completely the way we produce, we distribute, etc.
And shareholders are behind you every step of the way for sustainability?
Yeah, absolutely. They are very. I think that our shareholders are very proud of what we do. I cannot say that they are pushing us hard to do it, but they are happy and proud.
Do you think Generation X cares more about this than millennials? The younger you are, the more you think about this?
I think that everybody now cares. You know, I think that it's very well understood that there is an urgency. Clearly, we are not talking anymore about a potential threat. I mean, there is a clear and present threat to the planet, and if we are not all doing the maximum in the very short term, it's going to be very difficult. So I think that every generation now understands that.
If I speak to you in 5 years, what will be your story?
In 5 years, probably I will tell you that the most important mission has been the transmission. Because, of course, I will not be CEO forever. And I will be, by the way, very glad to pass the baton one day to my successor.
So if you think a lot about succession, what kind of successor would you like, and what would you like your legacy to be?
I will be proud to have been able to adapt L'Oréal to the new world. I think that we are living in a very special period. The world tomorrow will be very different from the world we knew a few years ago. And you know, my absolute priority right now is to adapt, transform the company in order to make it as successful as a leader, as performant in the new world as it was in the world before. And I'm very confident about it, because that's what we are doing. You know, we are doing a cultural revolution, a digital revolution, a sustainability revolution, and so the L'Oréal will be a fantastic company. And then someone else will take the baton and will drive the adventure further.
Jean-Paul Agon, thank you so much.
Thank you very much.
What do the world's tallest building, KFC in the Middle East, and e-commerce site Noon all have in common? They're all owned by billionaire Mohammed Al-Abbar. His investments like the Burj Khalifa and the Dubai Mall have become iconic landmarks, and he's diversified into hospitality, retail, and e-commerce. He was named the most influential man in Dubai and consistently ranks amongst the top 5 most powerful Arab business leaders. But it's not all business all the time. He's also a sportsman. He's an active member of Emirates' horse racing community. Today, on Leaders with Laqwa, we meet Mohammed Al-Abbar, the founder and chairman of Emaar Properties.
Thank you so much for joining us. You've really built a conglomerate. You've built a company that has multiple interests, multiple units, multiple portfolios. Did you diversify because you saw an opportunity or because you had to?
Well, I think all of us, we look at opportunities. We don't really have to do anything. But I think looking at the Middle East and looking at the the industries that I went in with my team, I think we saw amazing opportunities in the Middle East in these sectors. And I'm glad that even though we've got difficult years, the past 2 years have been difficult years for us, still these businesses are operating well. So definitely it's based on opportunities and the sector's long-term growth potential.
Where do you see the most growth coming from? Which portfolio, which part of your business will do better than others?
The food operating well and strong in the region as a whole, especially with the food delivery business, and that's another story. I would say that our real estate business is still flying really strong. I mean, last year we grew about 28% in the region as a whole. Our e-commerce business is something that's very, very interesting. And we've got an amazing team looking at it, and that's also growing quite fast. But even with this growth, I think one have to be realistic as well. So you look at this growth and you look at what's going on in the Middle East, government policies, you look at the world economy and what changes might take place. So you have to be alert at all times.
Okay, what does that mean? Do you expect a lot of the growth, in the Middle East? If you look at e-commerce, and we'll talk a little bit more about that, do you expect it to go threefold, fivefold over the next 5 years?
Well, I would say that our real estate business should continue to grow at about 20% a year. Mm-hmm. And that's the shareholders' expectation. And it's hard work to achieve that number, and keeping costs under control, margins under control, and political and macroeconomic issues in hand. So food business, I think we should be growing 10% a year, year on year as well in the region. And keep in mind that we're talking about the Middle East, where there is a need for most of industries to grow, just because that I think the Middle East still has room to grow. And the other thing is that if you look at the population in the Middle East as well, and the whole demographics is in our favor.
Because they're young, and therefore these are, I guess, the youth will spend a lot more in 5-10 years.
Yes.
How will the economy shift?
Well, I think the economy will shift positively, only because I believe Middle Eastern governments are really working harder than any other time in the past, and you see the changes that are taking place, positive changes that are taking place in Saudi Arabia. I think that's the same thing within UAE. I would look at Egypt. I'm quite interested in Egypt as well, and the change that's taking place in Egypt, with all the other issues that we have in the Middle East, where I believe that I don't think it's going to get any worse than this. I think we're looking forward to a more positive trend in policy and in politics and economic growth as well.
In terms of growth, country by country, which is a country that will outperform the others in the Middle East?
The majority of our focus is Saudi Arabia, UAE, Egypt. And I would say Egypt is going faster now. Saudi Arabia, I'm quite optimistic with the changes that you see taking place within the coming 24 months. I think you'll see quite a good trend, and the the UAE as well. You've got, of course, the other Arab countries who are some slow, some moving forward, but majority of our business are in these countries.
I mean, you're holding a big investment with the PIF on e-commerce for Saudi Arabia. Will there be more, for example, on property in Saudi Arabia?
Well, the Public Investment Fund, they are with us in our e-commerce business, but they are also with us in our food business. Now, are we going to do more together? I think there's a possibility. There's a lot of work that they're doing in Saudi Arabia and outside Saudi Arabia, in the region and outside. So I would expect that maybe we should look at real estate together as well, because I think Saudi Arabia will look very interesting the coming years.
How much can it grow? Property in Saudi Arabia over the next 5 years?
Oh, Saudi Arabia, I think it's at infant stage. I think Saudi Arabia can really grow if you talk about pure infrastructure, if you talk about retail, industrial, hospitality, residential. So you just have to make sure that you are going at the right category of residential or the right category of retail. So there's plenty of room to go that way.
When you look at how you spend your time for each of the units and also each of the countries, how do you do it? How do you keep on top of it all?
Well, I try. I still say that the real estate takes a majority of my time.
Is that 50%?
I would say the real estate takes about 40% of my time. And then the rest is a split. Noon takes a lot of my time. as well. The food takes the least of my time because the team that sits on top of that business is really world-class team, and they've been in the industry, they know the industry well. Noon is a vibrant team. It's a new organization. I need to give it more time. While my real estate business, I have an A team, but I'm emotional about real estate.
Yeah, I mean, this was like the foundation of it all, right? Do you still see it as your baby?
I think my name is really linked to the real estate more than anything else, while all these other businesses, I've been with them now for about 2 years. So it's a new brand of product that's associated with me.
When you look at the various IPOs and the various units, was it to unlock value, but did you ever feel like it was also high risk?
I think mainly to unlock value, and we have investors who have put in their money with us, and it's time for them to get rewarded. But at the same time, I really like putting management under pressure, because IPO is quarterly results. You're out there in the public eyes, under pressure to perform. But mainly value creation. I think that's the business we're in.
A value creation because shareholders understand what you do more, and it almost focuses the mind of managers more?
Well, that is one, but many of our units is that if they're under the mother umbrella, I think value-wise, they're not fairly valued. So as we put them on the side and put them as separate entities, I think you create better value that way, and then you cash out a little bit and put management under pressure.
Are you looking at IPOing any other units or portfolios?
When you look at our business, we have businesses. We have India, we have our hospitality business, we have Turkey business, we have another business in Saudi Arabia. So the reality is that you can take all these businesses public at the right time. I think within the coming 3 years, we'll probably have India going public. We'll probably have hospitality as well going separately to the public route.
But so how much bigger will you be if I speak to you, and I hope to speak to you before, but if I speak to you in 5 years, how much will your holdings be worth?
I think we should be double in value, because we should be growing in value 20-25% on an annual basis. And I hope that my management and my boards really put that as a focus. And to be honest, I think we're capable of doing that. We just have to focus and have to make sure that we have the right people to do it. And we do this day and night. And that's really how we do business in our region.
But that's acquisitions or that's organic growth?
I would look at organic growth. If you talk about acquisition, which we have not done much of, I'm expecting that we do more acquisition in the coming 2 years.
Mohammed Alibar, thank you so much. Coming up next, going from bricks and mortar to clicks, we talk Mohammed Alibar's big push into e-commerce and how his company Noon could become the Amazon of the Middle East.
Mohammed Alibar is not only a titan of property, he's also betting on e-commerce. His startup, Noon, launched its operations in the UAE last year. The site is described as an Arabic-first e-commerce platform and is rivaling the Amazon purchased souk, looking to take over 15% of the growing market. One of the biggest investors in Noon is Saudi Arabia's public investment fund, which put up $500 million. But Alibar is not just competing against Amazon. He's also a major player in the luxury space. He's partnered with Yux Net-a-Porter Group to offer a premium retail service to the Middle East's fashionista set.
So Mohammed Alibar, do you ever feel like there's a conflict that you actually own Dubai malls, but at the same time you're trying to sell on e-commerce platforms?
The issue is that, are you relevant? That's really the big question that we have, is that I don't think it's if there's a conflict or not, but are you relevant to the space? So are we really relevant in this retail scene, or in the whole, the economy is becoming so digital? If you are not thinking about it, if you're not acting to do something about it, I think there is a risk of your business being probably at huge danger the coming 24 months.
And so how do you stay relevant?
I think staying relevant, first of all, I have to talk to my kids all the time. And I learn from them because, I have a little girl that sells jewelry to women in Korea out of Dubai on her Instagram. I mean, what type of world is this? So therefore, I think all of our business, from real estate to retail to hospitality, I think the digital scene is changing all that. So if we talk about e-commerce specifically, or if we talk about Net-a-Porter, it is just moving your business to the digital scene. And I think the whole economy is moving that way, from healthcare to education to retail. So therefore, I think we just want to be relevant. And I don't think there's any conflict, because at the end of the day, there ought to be a collaboration or a connection between the real world and the physical world. And can we really try to find a solution and work them together and stay relevant in our business?
But so how much of your sales will actually be done on your e-commerce platform in 5-10 years? And in general, for the Middle East, are you a step behind in actually selling on e-commerce? And so is the potential much bigger than here in Europe or in the US?
Well, remember, I mean, when I look at the Middle East right now, I mean, e-commerce is between 1.5% to 2%.
Tiny.
Which is tiny compared to the rest of the world. So there is room for all of us to grow. Where will this be? I think it will go much faster than the rest of the world, and it will get into the 10-15% quite fast, again, because of the demographics of the region. So we owe it to our society, we owe it to our 300 million Middle Eastern Arabs, that there ought to be a native organization that look after this sector and participate and learn and serve.
What will Noon become? And are you nervous at any point that you're going to head with the most successful retailer of all times, Amazon?
Well, Noon, of course, it will be an ecosystem. And am I nervous? Of course I'm nervous. I'm nervous from everybody. In my real estate business, I'm nervous. In my e-commerce business, I'm nervous. In my Net-a-Porter business, nervous, because competition is severe and markets are open. Anybody can come in. The big players are going to come in. Some of them came already. More are going to come to the region. But I am from that part of the world, and I think it's our duty to participate in the scene. And remember, we as Arab businessmen, we're a bit tribal, which means that I am from this society. I have a duty that get into business and be aggressive and achieve the numbers, achieve success. But that's a duty that I feel responsible for, that competition is good for the consumer in the region, rather than one player come and controlling the life of our customers. I think it's fair to have competition and let the customer win at the end of the day.
Okay, but how do you decide? I mean, how will you go against Amazon? Do you have to convince retailers to sell on your platform instead of Amazon's platforms, or is it a price war? I mean, how do you see the kind of the fault lines?
Well, we are working with the local retailers, and we are their partners. Now, how other international players, they do it through sourcing overseas or working in some other methods, that's their business. But we differ is that our partners are the local retailers. Maybe our margins will be a little smaller, but that's okay. We'd rather win on the long term rather than alienating the local retailers. Now, will there be a price war? Well, the past 2 months, there's a price war. Customers are winning. everybody's 20% or 15, 10% cheaper in some of the product. So I'm so happy that people in my region, they don't have to buy milk for their kids at 10% more expensive. There was one operator or one monopoly controlling, the human life. I think this is good for all of us. So of course there'll be a competition. But the amazing thing is that the world is open. So much new technologies are being provided to everyone that want to go into the scene. But are you planning long term? You have good people with you. Are you serious about it? Are you willing to provide quality service?
But is it the service or is it the products? How does the Middle East actually shop? What's selling at the moment and what will sell in 5-10 years?
Well, if you look at the mix of what's happening on the e-commerce scene, it's not much different from what's going on in the world. People want delivery, fast delivery. People want quality.
Will they pay for the delivery?
For the time being, we're subsidizing delivery. Because, as I said, people are just learning the art of e-commerce, and that's what global companies are doing. They give it to you for free first, they get you used to this way of life, then later on take a little bit of margin, maybe control market, the usual trick. But what I'm saying is that people want it all. Want quality, want value, want consistent, want delivery time that's fast, and we want the product that they want, which changes from 1 month to another month. And therefore you have to provide that and then get ready to provide the new thing that might be happening next month.
Okay, how important is market share? And how important is market share right at the beginning so that people get used to your platform and not Amazon's?
Market share is very important, and at the beginning you have to be aggressive and you have to probably provide the best service ever. You will be cutting prices as usual because we see it, it's a live competition, there's nothing wrong with that. But the good thing is that the market's big enough. 2 players can come in. But imagine if you do business in UK and there is only one operator. How fair is that to your family?
But isn't there only Amazon here?
Well, there are many other players, I think, in UK as well. I prefer that more than one player in a market. And in the Middle East, there will be more than one player and will be one of the major players in the market.
Up next, we talk the leadership skills it takes to create both the world's largest mall and the tallest building in the world. More with Mohammed Alibar next. Emaar Properties has grown more than threefold since 2011 and expanded heavily in the Middle East and North Africa despite political instability in the region.
So what kind of leadership does it take to shepherd a global company through turbulent times? Well, Mohammed Alibar, chairman and founder of Emaar Properties, is here. What kind of leader are you? Throughout the program, we were talking about encouraging your leaders, your regional leaders, and also your portfolio managers to be aggressive. Do they always need to be on their toes?
Well, I think, number one, they have to be relevant because the change that's taking place in the world. So are you relevant? And the other thing I like is that I think we all have to believe in the reset. Are doing this upgrade? Are we upgrading every 1 month? Because there's so much happening. And do we really act? I mean, that's, so we have to be relevant, we have to act, we have to have discipline, we have to believe in the best people, and we have to take care of our society. These are things these are the elements that I really depend on to manage my business.
Okay, but what does it mean being relevant? Because in more traditional times, you could, ask a customer what they wanted, and you're saying, okay, I'm relevant. But now the change of pace is so fast. Well,
relevant is that, are you watching social media daily? What's going on with your customer? And what's going on with your business? There's no more, I'll do a research and I'll wait 30 days. How alert are you? And how alert about how your customer feel, or alert what's going on to the industry, what's going on with politics, what's going on with the economy, what's going on in new tools of management, how fast can you go? So I think, are you awake?
What do you need to be awake for more? Is it for your clients, or is it politics, or is it how your business interests are going?
Well, it's about my customer, number one, my people, number two, the society, what's going on in politics, what might happen to interest rate. You almost have to have all that construction risk in my business, what's going on in technology, what's going on in digital. You almost have to be alert of all this but number one, people. And then you have to make sure that you share with them this environment, and are they fit in this environment?
So what does that mean? What do you see your role? Are you putting the fire under your manager's feet to kind of keep them going, or do you micromanage?
I don't think I micromanage, but there's a situation where I do have to go and micromanage, and I think that's we should be able to go down in case we want to. And remember, I came from my mom's kitchen. I used to work in my mom's kitchen, and when we were all 13 kids living in one room, so I know how to do that. So I can pull back and be the chairman of the organization. But if there's need to move in, I can comfortably move in. But I have reasonably good qualified people with me. But I really think that I'm the target creator. I'm the guy who does the monthly performance reviews. I'm the guy who push the limits. I want people to work hard, because I think we as human beings, our productivity is still low.
I mean, you spend a lot of time in property because that's where you came from. That was the first company. Sure. But what excites you the most in all the others that you're doing? So hospitality, retail, e-commerce.
I would say e-commerce excites me a lot, because when I look at how the digital world is changing our lives, I come back to my real estate business and I say, maybe this office is null and void. Maybe this is all not required anymore. But also, if you look at the digital guys and you see how fast they work, or the process they use, or the age of people in these offices. Therefore, I really believe that the younger generation are running the world, and they run it extremely well. So much learning in the digital side of the e-commerce. But I think my investment in MEVP, which is a private equity firm that specializes only in digital and technology in the Middle East, with almost 80 ventures, that's amazing learning about what's going on in the Middle East as well, and the industry that are about to come.
Do you focus a lot on diversity for your companies? Is that important?
Yes, very important, very important. And I think it's happening naturally. I mean, we don't even have to do it anymore. It's just naturally. That's how.
So do you have metrics?
We have metrics. We have KPIs for that. But as I said, it's so nice that it's really embodied in the organization. It's happening automatically, and I like that.
Do you think it'll increase with time, or are you going to see more female workers?
Well, the female workers are really taking charge. I mean, if you look at the people who run my organization, most of our organization, I would say most of our organization, our food boys have to have more of that. But look at our government. Highest percentage of senior people in government anywhere in the world.
Mohammed Alabar, thank you so much for joining us. He is, of course, the chairman and founder of MR Properties.
Thank you so much.
Thank you.
Thanks.
Europe's next big deadline, the General Data Protection Regulation, known as GDPR, goes into effect next month. How significant will it be for business? MiFID II back in focus. We talk how compliance has been in the first quarter since the law went live. And the Dodd-Frank debate begins again. How many changes will be made in Congress? We get the latest from Washington. Welcome to Bloomberg Markets Rules and Returns. I'm Naira Chehich in London. Rules and Returns is the show where we delve into the regulatory challenges and opportunities for financial markets around the globe. But first, let's get a roundup of this week's news on financial regulation. Here's Sebastian Salek. Seb.
Naira, European Commission Vice President Valdis Dombrovskis says the EU should not participate in the trade spat between the US and China. But he says the bloc could leverage its role as the world's largest market to uphold the rules of international trade. He spoke to Bloomberg at the Ambrosetti workshop in Chernobyl.
It's not so much about taking sides, it's about respecting internationally agreed rules and trade disputes. There are always trade disputes. If there are trade disputes, to solve them within WTO.
Telecom Italia's board has said it'll take every legal action necessary to block activist investor Elliott Management from pushing ahead with its own slate of directors at the company's next shareholder meeting. Telecom Italia's second biggest shareholder, after Vivendi, wants to replace 6 Vivendi-backed directors at Italy's former phone monopoly with its own candidates at the company's AGM set for April the 24th. Telecom Italia criticised its auditor's decision, saying that the vote should go ahead. The European Central Bank is considering a proposal that would make it easier to help banks being rescued from insolvency. The plan would let the ECB inject cash into viable parts of a lender that has spun off a failing financial institution, the so-called good bank. That's according to a confidential document obtained by Bloomberg News. And China's president has reiterated pledges to open sectors from banking to auto manufacturing. Xi Jinping made the comments in a speech that also warned against returning to a, quote, Cold War mentality amid trade disputes with US counterpart Donald Trump.
I am confident that with these efforts, China's financial sector will be much more competitive. Our capital market will continue to enjoy healthy development. The building of a system of modern industries will be accelerated. Our market environment will be greatly improved, and intellectual property rights will be effectively protected. In short, China will enter a new phase of opening up.
And Goldman Sachs Group is taking on the exchanges to win the business of fund managers eager to keep their stock trades hidden in the era of MiFID II price transparency. The bank has set up a so-called periodic auction service that matched its first trades on March the 21st, allowing investors to buy and sell shares without tipping their hand to the rest of the market. And that's your regulation news roundup. Naira.
Thanks so much, Seb. Now, the next big post-MiFID II deadline is drawing closer. The European Union's General Data Protection Regulation, known as GDPR, bit of a mouthful, expands individuals' rights to control how their data is used. It also sets new standards for any holder of sensitive data, from Amazon to your local government council. The revamped rules take effect on May 25th and will dramatically impact how companies collect, store and use data. Joining us now is Naomi Bowman, Managing Director of Financial Services at BRG. Naomi, great to have you with us, and thank you for giving us some of your time. So the GDPR rules apply to any company globally that collects the personal data of EU residents. That's a lot of companies. How are organisations doing so far in terms of complying a month away?
It's a great question. I think that the first thing to say is, particularly when you consider from a UK standpoint, we're actually talking about a revamp of pre-existing law. So we have currently we are in the UK under the 1998 Data Privacy Protection Act. And therefore, actually what this is a revamp of a 20-year-old policy. Organisations have had the past 2 years to look at the impact and assess the impact of GDPR on their own organisations.
Yeah.
And so therefore, this isn't something new, and this isn't something that should come as a shock, particularly in an environment where technology has just transformed the way that we live and the way that our organisations function.
So in financial services, for example, what sort of changes will need to be made with the advent of GDPR?
So I think the key things are, particularly in the larger corporates, really what this is looking for is making sure that organisations are clearly documenting and clearly have procedures for the storage and retention of customer data. This is, when we talk about GDPR, we talk about individual data. We're talking about personal information and sensitive information. Personal information can be anything that can identify an individual. It might be their date of birth, it might be their address, it might be their email address. Sensitive information can be anything from an individual's political or religious beliefs that could be potentially their sexual orientation. It could be something that, if was leaked, would be particularly sensitive for that individual.
Right.
And so organisations really already should have had policies and procedures in place around the storage of this information. But what GDPR is asking for is a European-wide and EU-wide approach to the sensitive storage of this data.
So in terms of extra costs then, whether they come in terms of dollars spent, time spent, head count, firms and organisations, a survey of Fortune 500 firms shows they are on average setting aside $1 million for the added tech costs. Is this in line with your clients and the people you work with?
Yes, I think that is a sensible estimate. I think that the impact of GDPR and the cost of regulation is somewhat less than some of the other regulations that we've recently seen. Over the last 5 years, for example, I helped organisations understand the impact of FATCA, the Foreign Account Tax Compliance Act, on particularly on financial institutions. And by and large, that kind of regulation has a much greater financial and operational impact on organisations. I see GDPR as actually a good thing and a necessary thing, a very sensible piece of regulation that organisations should be able to implement in a relatively pragmatic way.
What are the costs of not complying then? Isn't it as much as 4% of global annual revenue?
Correct. So there was an estimate recently that if you looked at the fines around data protection, data privacy and the loss of data, the potential impact, if you applied how much the UK Information Commissioner Commissioner's Office have fined organisations recently. If GDPR had been in force, the impact of that fine could have been 79-fold. We're talking about 4%, as you say, of annual turnover. It's or 2 million euros, whichever is greater. 20 million euros, sorry, 20 million euros. I think, though, that most of the EU information sort of supervisory bodies that have been appointed by each country to oversee this particular regulation are going to take a practical view of this. Yeah. Certainly, Elizabeth Dennon, who's our UK Information Commission's officer, has stated very clearly that she wishes to not unduly penalise individuals that are really trying to make a real effort of implementing this.
Naomi, briefly, we talk a lot about unintended consequences of MiFID II. Could there be any unintended consequences for GDPR for financial firms?
Yeah, one of the things that I've spoken about recently is the requirement for organisations greater than 250 people of having to have a data protection officer. Yeah. Now, some organisations will choose to have this particular role as an individual who's already within their organisation, and they will combine that particular individual's pre-existing role with the new data protection officer requirements. However, I actually believe that a lot of organisations will need to recruit that particular role because of the seniority and the expertise required. Yeah. And frankly, the importance of that role, I think a lot of organisations will have to recruit. And you know, realistically, the data protection officer is not going to operate on their own. They're going to need a team. So I do think there's going to be some recruitment effort that's required.
And that could be an added cost on top of the tech cost that we've already talked about. Thank you so much to Naomi Bowman, Managing Director of Financial Services at BRG. Thank you for joining us. Up next, MiFID II has been in effect for a full quarter, but how have firms been coping and what challenges are they still facing to comply? We'll discuss that next. This is Bloomberg. This is Bloomberg Markets, Rules and Returns. I'm Naira Chehich at Bloomberg's European headquarters in the City of London. MiFID II was meant to impose unprecedented transparency on traders and seek to curb conflicts of interest. The vast set of rules has now been live for a whole quarter. So what impact has it had on firms and what challenges are they still facing to comply? Joining me now to talk all things MiFID II is Michael Thomas, Corporate Financial Institutions Partner at Hogan Lovells. Great to have you with us, Michael. So let me start by asking, in terms of the firms that have been affected. We know the obvious, the banks on the sell side, and then we've talked about the buy side and the brokers and the trading venues. Any firms that we might not be aware of that have been really affected by MiFID II globally?
One type of firm that has been affected have been the overseas firms who are clients of EU financial institutions. A lot of law firms would have been getting questions at the end of last year from corporates based in America, Asia, and all around the world. Do I need a legal entity identifier? I'm being asked to provide information that I haven't previously been asked to provide. Why do I need to provide it? And is it necessary? And the answer is yes, it is, unfortunately. So there's been a bit of an extraterritorial compliance burden for firms that wouldn't have expected to have been part of MiFID II's scope in the outset. Yeah.
And 3 months in, how are firms doing on compliance then?
I think it's a bit of a mixed picture. I think there are firms that would have started their compliance planning maybe 2.5 years ago, and there would be firms that started their planning 6 months ago or 9 months ago, due to differing views as to the time it would take to get ready. And I think the FCA has acknowledged that there's going to be a differential level of compliance by firms, and they're giving them a little bit of leeway to comply during the first quarter of this year. But yes, I mean, there are one of the challenges for firms that are actually fully compliant, or at least as compliant as can be, is that some of the counterparties they're dealing with may not be themselves fully compliant.
Well, yeah, what I wanted to ask you about is how much of the compliance is actually outside of firms' control and how much of it is actually people just not getting ready on time?
There's a bit of a mixture of both. There's a bit of a, for example, some firms may have underestimated the level of work that would have been required to actually upgrade their systems, upgrade their terms of business, and get their compliance processes ready for launch. They may have underestimated the actual scale of MiFID II itself. It's 1.7 million paragraphs of law. But
all of which you've read, I'm sure.
Of course. Not me and my team. Yeah, but there will be aspects of firms' compliance that they can't really control. So, for example, ensuring that you've got terms of business signed up with your counterparties and with your clients. Well, that takes two to tango, and there will be different firms getting different advice in the latter stages of 2017. And not all of them will have been wanting to accept the terms that are offered to them. So there's been a bit of a battle of the forms between various counterparties that is still ongoing now.
Yeah.
And the other uncontrollable factor as well has been that a lot of EU member states themselves have not fully implemented MiFID II in accordance with the timescales they were supposed to. So there is that level of uncertainty as to what interpretation those jurisdictions are going to put on the requirements. Anyway.
Gosh, battle of the forms sounds thrilling, doesn't it?
It does. It's a bit less thrilling in practice.
Yeah, gotcha. Now, one of the latest developments, of course, was the curbs on dark trading coming through from ESMA as part of MiFID II. Periodic auctions are increasingly sort of being seen as a way of sidestepping those curbs. Have you seen ways that firms are sidestepping aspects of MiFID II and being successful at it?
Well, I think one of the ironies of MiFID II is that although, as I said, there's 1.7 million paragraphs of law and you'd expect it to be sufficiently precise that no alternative interpretation could possibly be made.
I love that you talk in paragraphs, not pages as well.
Yes, yeah, I know. The pages are significant. Yeah. But notwithstanding that, there is still quite a lot of ambiguity in the drafting. There's still a lot of scope for differing interpretations to be taken by different firms, different regulators, and different advisors. So yes, there are firms that are looking at specific aspects of MiFID II and thinking, well, that doesn't sit very neatly with my business. It doesn't really feel right for the type of activity I do. So I'll try and, rationalise that it shouldn't apply to my business, or if I structure my business in a slightly different way that it wouldn't apply. Now, in some cases, firms might be taking a bit of a sort of reasoned judgment as to the risk that they're taking in the interpretation that they're giving to the rules. But in some cases, you will see different regulators taking a slightly different view.
Yeah. Of the types of firms that you work with, your clients, out of the sort of industry groups or types of firms, which have found it most difficult to comply, have found it most challenging, and why?
Well, I think all firms have really found it quite challenging, and the challenges are different. So investment exchanges, for example, we advised investment exchanges and clearinghouses. Some of them have had to undertake quite significant changes to their trading structures to accommodate requirements for example, straight-through processing of derivative transactions. It's all part of the wider sort of global regulatory agenda that started in 2009 with the G20 Pittsburgh Accords, where there's a great push to put more business through central clearing, more business through exchanges for derivatives. But that does mean re-engineering the way in which some of those transactions actually occur. But other than the exchanges, I think what some of the firms that are suffering the most are the firms that are needing to look at their remuneration structures and the way in which they receive benefits from third parties, so fund managers and brokers who may be providing or receiving investment research, which is a big hot topic.
Absolutely, the research unbundling. Thank you so much to Michael Thomas, Corporate Financial Institutions Partner at Hogan Lovells. Thanks for joining us. Up next, the Dodd-Frank debate continues. The House returns from recess to discuss the future of the Volcker rule, among other things. Will the big banks get some relief? This is Bloomberg. This is Bloomberg Markets Rules and Returns. I'm Naira Chehich at Bloomberg's European headquarters in London. Now, the Dodd-Frank debate begins again this week as House Republicans return from recess to discuss Mike Crapo's banking bill. House Financial Services Chairman Jeb Hensarling faces a choice: pass the bill as it is or make as many as 30 amendments. Senate Democrats have vowed to walk out if any changes are made. Now, for the latest from Washington, D.C., let's speak with our senior government analyst, Nathan Dean from Bloomberg Intelligence. Nathan, great to see you and to have you with us. Look into your crystal ball. How many changes are we actually likely to see from the House?
Not many. Of those 30 bills, what we tell our clients is really only a few of them are really all that big and impactful. Most of them are small and technical changes. A lot of them are bipartisan. The problem you have here is a principal argument. If the House comes back and says we're going to attach these 30 measures, you then expose, or at least you put the Senate Democrats into a difficult position. It was difficult for them to support the bill on the first time. It's going to be extremely more difficult for them to support the bill the second time. So I think what you're going to see here is a couple more weeks of the House saying, yeah, we're going to look at this or we want to attach that. But I think ultimately what we're telling our clients is that we think this bill passes as is or very close to as is sometime in the second quarter.
Right, and the winners and losers then would be who exactly?
So definitely the mid-sized regional, the U.S. mid-sized regional banks. This is not a Dodd-Frank bill. It's more of a mid-sized regional bank bill. The SIFI threshold goes from $50 billion to $250 billion. So if you're a bank that's below $250 billion, we think that you're going to save some substantial regulatory costs. You probably see some increased M&A activity as well. The losers of this bill really are the PNC, Capital One, PNC, Capital One, and SunTrust, BB&T, and U.S. Bank. Those banks are either above the $250 billion threshold, or they're just at it, which means that you can't grow, or you're not going to get a lot of relief. You're still going to be looped in with the investment banks. Now, the big banks, the Bank of Americas, the JP Morgans, the Goldman Sachs, they really don't get anything in this bill. It really doesn't do all that much. There is one other provision out there that we're telling people to keep an eye on. It's the custodial bank leverage ratio. So State Street, Bank of New York, Northern Trust. There's a provision in the Senate bill that's already passed, and we think this will become law, that will allow them to exclude deposits at the Fed or the ECB from the leverage ratio. That's billions of dollars in relief amongst the three of them. So definitely they're going to be the winners in this as well.
Yeah, and what about the Volcker rule aspect of this as well, Nathan? How likely is it that the Fed will have sole authority?
So you're talking about a House provision, and this is actually one of the 30 that we think is very important to look at. What this bill does is that it would put the sole jurisdiction of the Volcker rule under the Fed. Right now, the Volcker rule is a 5-agency rule: the Fed, FDIC, OCC, SEC, and CFTC. That's a lot of letters. But if the Fed wants to go forward and say, right, we want to weaken this rule or we want to amend it, you need all 5 agencies to agree. What's this language say? What's that language say? If the Fed has sole jurisdiction, they're going to be able to increase it, move it up quicker. They're also going to probably have a more bank-friendly view towards the Volcker rule. So you're probably talking about saving 6 to 9 months off the timing of the Volcker rule. Plus, you're probably going to get some more favorable language in there to the banks. So it's something to keep an eye on. Unfortunately for the banks, though, I don't think this is going to become law. I think this is one of those provisions the Senate Democrats are going to say, we just can't support it.
OK, and then let's switch to another topic as well, Nathan. CFPB, Acting Director Mick Mulvaney testifying about the CFPB state of play. What are we likely to hear?
So, he's testifying to Congress this week. This is part of his semi-annual report to Congress. There's really 2 things to keep in mind with his testimony to the CFPB. One is the actual impact to the industries. The CFPB, and depending on who you are, it's whether it's a good thing or a bad thing. Banks, enforcement has stayed the same. You haven't seen a ton of proposed rules or changes in rules for the banking industry, so it's probably just status quo. If you're in a different industry like payday lenders, well, they've staved off their rule there, so that's a good thing for them. Now, that's the one side. That's the impact side. The other side that you're going to hear is what we call the noise side of the CFPB. There's a lot of talk here in Washington. You certainly see it in the news headlines when it comes to putting the CFPB under congressional authority for appropriations, making the director of the CFPB fireable from the president, requiring Congress to approve any rule that the CFPB puts out. That means the CFPB essentially wouldn't put out rules. That's the noise side of the debate. There's really not a lot of impacts to banks or the financial industry all particular, but it's driving a lot of headlines. So I think you're going to see more of the noise this week, less of the impact. That's still probably about 3 to 6 months in the pipeline.
Even when it comes to FinReg, we've got to distinguish between noise and signal. Thank you so much to Nathan Dean in Washington, D.C. And that is it for this week's episode of Bloomberg Markets Rules and Returns. If you have any questions or comments, you can email the team at rulesreturns@bloomberg.net. This is Bloomberg.
Good morning. Welcome to Bloomberg Markets, the European Open. We're live from our European headquarters in the City of London. I'm Anna Edwards, alongside Matt Miller in Berlin.
Anna, we had a mixed trade overnight, although Asian stocks look to be recovering into the close. Not a lot of concern about tariffs on an extra $200 billion worth of goods from China. The cash trade is less than 30 minutes away.
Ramping up, Trump slaps a 10% tariff on another $200 billion of Chinese imports, with a hike to 25% threatened for the start of next year. Tariffs, though, what tariffs? Chinese stocks surge in afternoon trade, shrugging off trade worries. Were investors already planning for this scenario? Make or break summit. South Korea's Moon Jae-in meets Kim Jong-un in Pyongyang as he hopes to revive talks on denuclearization. We'll bring you live pictures. Matt, good morning.
Good morning. Less than a half hour away from the start of European trading. Let's take a look at what's going on in futures across the continent. We're looking at equity index futures that are for the most part down, although, as I said, in Asia overnight we saw indexes down, with the exception of Japanese indexes, which have been on fire for the whole session, doing quite well. But we have seen a bit of a recovery into the close. So you may see something like that going on with the European trade as well. Take a look at treasuries right now, hovering very close to the 3% level. We were up over that 3% level briefly on Friday. This is the last three trading sessions. So here you see Friday, Monday, and today. Of course, yesterday we eclipsed 3%, and right now we're at 3.01. So it's a big round number for the rates market, and we'll see if it holds. Anna?
Yeah, let's talk about what's on the GMM, because it picks up on some of what you were talking about there about the late surge in Asian trade, or certainly in the Chinese session. Then, Matt, we've got the China CSI 300 up by 1.9%. So we know the date is the 24th of September. $200 billion worth of imports from China into the US will be tariffed at 10% from that date. It rises, as we said in the headlines, to 25% from January the 1st. So the market, so we are braced, it seems, for further tensions, because there's still the possibility of tariffs on all of these Chinese imports. The White House continues to talk about that, but the markets don't look as if they're bracing for that. Or did they forecast this? Did they all see this coming? Did they assume that this was going to happen? Or are we seeing some sort of intervention over in Asia? Certainly the Chinese equity market's very robust. We also see the Japanese yen making a bit of a surge over the last 20 minutes or so. The Japanese yen on the move in the last 20 minutes or so, as is the US dollar, and risk assets in general in foreign exchange markets, in particular the Aussie dollar, up by around 0.5%. Let's have a look at the copper price, because that features on the other part of this, on the commodities arm of the GMM. You see copper up by 1.3%. So once again, asking questions about why such resilience in Asian equities. Is it because actually the underlying picture for the Chinese economy is not so bad, or because we think that the PBOC and others will come in to protect the Chinese economy? Let's get the Bloomberg First Word News update. Desley Humphrey has that for us. She's in Dubai. Desley.
Thanks, Anna. In the US, the Trump administration will impose a 10% tariff on about $200 billion in Chinese goods next week, and more than double the rate in 2019. The move deepens what's shaping up to be a prolonged trade war between the world's two biggest economies. The president says that if Beijing retaliates against American farmers and industry, as it has previously vowed, the US will immediately pursue further tariffs on about $267 billion of Chinese imports. The US Supreme Court nominee Brett Kavanaugh and the woman who accuses him of decades-old sexual assault will testify next week before a Senate committee. The Senate Judiciary Committee will hold a new hearing on Monday, bowing to pressure from Democrats and some Republicans to hear from Christine Balesley Ford, who says Kavanaugh assaulted her at a party when they were in high school. The hearing promises to be an explosive public showdown in the era of the Me Too movement. Egypt's foreign minister has said Arab countries will step in to help the UN agency serving Palestinian refugees after America's decision to cut off funding. Sameh Shoukry made the comments in an exclusive interview with Bloomberg.
That has been since the Rome conference, and commitments were made by Arab and non-Arab states to fill the gaps that have been created by the withdrawal of American support to UNRWA, out of the recognition of the important role that UNRWA plays and the humanitarian needs of the Palestinian people.
Netflix has won the most Emmy Awards of any TV network, capping a sudden and dramatic rise to the top of the entertainment industry for a company that got its start as a DVD by mail operation. Netflix earned 7 awards during the primetime presentation of the Emmys and 23 overall, both records for the streaming giant. It's the biggest prizes came for The Crown, the period drama about the British royal family, and Godless, a Western miniseries. Global News 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna and Matt.
All right, thanks very much for that, Desley Humphreys there with your World National News. Now let's get more on a top story. President Trump's plans for 10% tariffs on a further $200 billion of Chinese goods to start next week. Joining us now is Tom McKenzie, our China correspondent, live in Beijing. Tom, what kind of response, what kind of retaliation should we expect now from China?
Well, shortly after the news broke out of Washington that these tariffs would be imposed on Monday, September the 24th, we heard that the Chinese would be convening, the top economic advisor to President Xi, Liu He, who's also the vice premier, convening a meeting in Beijing to coordinate a response. We're still awaiting the details out of that, but we've heard previously that China prepares or is planned to retaliate by hitting about $60 billion worth of US goods with tariffs, additional agricultural products, but also energy, parts of the energy sector as well. And we should expect those probably to kick in fairly shortly after the US tariffs take hold on Monday. We also heard, interestingly, from the vice chairman of China's securities regulator, speaking at the World Economic Forum that's taking place in Tianjin, the summer forum, saying that the Chinese, preparing for a worst case scenario and that they do expect ultimately Trump to impose tariffs on all Chinese imports into the US, saying that it could knock about 0.7% off Chinese GDP, but ultimately the vice chairman of the Chinese securities regulator saying ultimately he thinks the US and China will get around the table and negotiate this. But it seems like we're a long way from that at this moment.
Yeah, good morning to you, Tom. How much of a drag, then, are these tariffs likely to have on China's economy? You talked about that forecast of 0.7. I've seen others talking about 1.5 percentage points off growth. If we see the full, $500 billion worth of Chinese imports into the US being tariffed. So what kind of numbers are we talking about?
Well, yes, there is a range, of course, and it depends on whether it's 10%, 25% or something in between, and if we do get indeed that totality of Chinese imports hit by tariffs. But we've heard, for example, from UBS today saying that they think you could be looking at potentially between 0.5 to 0.7% of Chinese GDP trimmed if indeed 10% tariffs are put on the full range of Chinese goods. They do, though, say UBS, that what is going to happen, they expect, is an additional fiscal and monetary policy response from Chinese policymakers that could ease or dent that impact. And they say that if those full measures come into play, that you could see just 0.3% cut of China's GDP. So that's what we're looking for as well, the retaliatory response from China, but also the measures that they're going to unveil to ensure that particularly their exporters and their manufacturers are protected to some degree as these tariffs continue to be rolled out by the Trump administration.
Tom, thank you very much. Tom McKenzie, our China correspondent in Beijing, with the latest on the tariffs and the Chinese response. Let's get to some M&A news, just breaking here in London. Marsh & McLennan, the big US insurance giant, really, buying Jardine Lloyd Thompson in the UK, offering to buy that business. Jardine Lloyd Thompson, for those not familiar, it was valued at close last night at around £3 billion in terms of its market cap. International provider of insurance and reinsurance, and it's a brokerage for insurance as well. And in terms of some of those headlines coming through then this morning, they're offering £19.15 per share. It closed at $14.32 yesterday, so we could see some upside to that one at the start of the trading day. The offer is $19.15 in cash. Matt.
Got it. All right. Thanks very much for that. Now let's get more market reaction to the tariff story. Joining us from Singapore is Mark Cranfield, Bloomberg MLive strategist. Mark, it doesn't look like markets were terribly bothered. I'm sure that they'd priced in some sort of tariffs here on another $200 billion worth of goods. Certainly Bloomberg was reporting as early as Friday that this was going to happen. What do you make of this move, and what does it do to talks?
Yeah, good morning. There seems to be a few things going on here. First of all, as you say, almost certainly most traders in Asia had fully priced this into the markets. You can see the response of China equities in particular. There's also a bit of speculation that Chinese authorities may be supporting stocks as well. For some time, people have been saying that the Chinese market has been undervalued, and it's had 3 very bad months. So certainly from that point of view, maybe there's just not that much more downside. It's also interesting the way that the tariffs are split, 10% straight away. But the fact that the 25% may only come next year. Now, in between is the fact that we got the US midterm elections. So that could put a spanner in the works here. We might not even get to the 25% early next year, and that's something which people have been talking about today, that maybe the American election process will interrupt this. So all in all, it's not being seen as bad as it may appear to be on the headlines, and it's not a complete shock. So taking all those things into account, we're not having too bad a day in Asian markets.
Yeah, and one of your colleagues, good morning to you, Mark, one of your colleagues writing on the MLive blog that Asia greets the trade war escalation with a sort of business as usual shrug. That does seem to sum things up. So where does that leave reaction in FX markets then? I see that the yen has been quite active over the last 20 minutes or so. We've seen some weakening in the Japanese currency. The dollar was a little weaker earlier as well. What about how are the FX markets reading this?
Yeah, this is another interesting point, is we're possibly beginning to see a shift in the mentality of the FX market, where the US dollar is losing its shine. For a period of months here, we've had the US dollar has been the best of all havens. A lot of money has been moving into there. It's possible that people are reading this as the US has just gone a step too far. It is no longer positive for the US dollar. We're seeing some dollar weakness across the board. Some significant moves here today with the euro and the Aussie in particular. If euro can hold above 117, that's a significant change, and it could mean that the euro is taking the place of the dollar as the major currency. Now, these are like two big super tankers. When the euro and the dollar change directions, it's very slow, but there are signs that the euro is starting to take over. This could be a very big day, the start of a new trend in foreign exchange, and the Aussie jumping on the back of the China surge in the equities, of course, is a sign that people are a bit more of a risk-on approach to the markets here. So all in all, there's some big things bubbling below the surface here. Let's see whether it continues through the European day.
All right, Mark, thanks very much. Mark Cranfield there, Bloomberg MLive strategist, joining us. By the way, you can get all of his thoughts and the entire team's by typing MLIV Go on the Bloomberg terminal. Coming up, just weeks after the Saudis revealed they'd invested in Tesla, now the rival electric car maker Lucid, if you could call it a rival, says they have secured $1 billion from the same source. We'll bring you that story next as Audi introduces its first all-electric car. Competition's getting hot. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Saudi Arabia has agreed to invest more than $1 billion in electric car startup Lucid. This comes just weeks after it emerged that the kingdom's public investment fund had built a stake in Tesla. Lucid CEO Peter Rawlinson spoke to Bloomberg about the relationship.
We've found the most perfect strategic partner in PIF of Saudi Arabia. We're so aligned, PIF's objectives and the management here at Lucid, to create the very best car in the world, a mouth-watering creation which is really going to change the EV landscape.
Joining us now for more is Matthew Martin, Bloomberg's reporter in Dubai. Matthew, Saudi has invested now in 2 electric car makers. I don't see why Peter Rawlinson would say they're the most perfect, other than the fact that they had cash and they were willing to part with it. What's the idea for PIF?
Well, one of the things that Saudi Arabia's sovereign fund is trying to do is find places where it can invest that diversify Saudi Arabia's economy away from oil. And high-tech industries have been a huge part of that, and trying to get access to electric vehicle manufacturers like Tesla, like Lucid, help sort of fit into that strategy of moving away from hydrocarbons and betting on the future of automobiles.
And with that in mind, good morning to you. With that in mind, I thought that before PIF was interested in this business, they were dating a different business, and that was Tesla. They got a stake there. What does this mean for Tesla?
Well, I mean, that's a great sort of unanswered question at the moment. So the PIF themselves have never actually, on record, confirmed anything about their involvement in Tesla. All we really know about that is from some of Elon Musk's tweets and from some of our own sources who have told us that the PIF has built up this stake of just under 5% in Tesla. So now what does the future hold is unclear. Is the PIF now going to continue holding a stake and sort of betting on both horses in this race? Or is it now that Elon Musk is facing a few difficulties from some of the other activities that he's been up to over the past few months, is it now choosing a different company to bet on? So I think that kind of remains to be seen as to how they're going to ride this one out.
Well, now we're seeing electric cars coming out from Audi, from BMW. Pretty much everybody is in the race. Let's talk about a different part of the transportation market, a story that you broke as well. Uber is said to be in talks to buy Dubai ride-hailing firm Careem. What's the story there?
Well, Careem is a local startup that's been a very prominent rival to Uber in the Middle East. It's successfully launched across a lot of different markets in the Middle East. It has a good market share here, has talked about starting to turn profitable in some of those markets, so quite far advanced in terms of that. But of course, this rivalry with Uber means that both companies are burning through a huge amount of cash, trying to compete and trying to grab market share from each other. So it makes sense, as Uber has done in other parts of the world, for these two companies to tie up. And as we broke last night, Uber is now looking at a cash and stock deal to take over Careem, which will then mean that there will essentially be only one ride-hailing company active across the whole Middle East.
Matthew, thank you very much. Matthew Martin, Bloomberg's reporter in Dubai. Thank you very much for that. Now we're minutes away from the Open, of course. Up next, we'll take a look at some of the stocks that we're watching, including Zalando, after a profit warning from the online clothing retailer. We'll keep an eye on Zalando. We'll also keep an eye on ASOS and Boohoo and everything else that sells clothes online. It seems there could be some read across there. We'll also talk about M&A in the insurance space. Lots to discuss ahead of the Open. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. Minutes away from the start of trading. Let's get your stocks to watch from around the newsroom. Joining us now from our equities team is Paul Jarvis, covering Ocado. Bloomberg's Anne-Marie Horder, and looking at Zalando as well. Paul, let's kick it off with you. What's the story with Ocado?
Matt, good morning. So Ocado's reported third quarter trading numbers this morning. They're pretty much in line with its guidance for the year, with third quarter retail revenue up by 11.5%, orders up by a similar amount. Of course, with Ocado, that's not even half the story. Ocado really is basing itself around its technologies and not so much its online groceries, certainly in terms of its stock price. The stock has risen significantly this year on a number of deals they've done with the likes of Kroger, ICA, Casino, and what it needs now is it needs further fuel. The statement this morning doesn't really provide that. The thing to watch will be the company's conference call, where analysts will be asking about future deals, about negotiations with Kroger, and that really is going to be crucial in determining which way Ocado's share price moves today.
All right, Paul, thanks very much. Anne-Marie, what are you seeing with Zalando?
Well, already, Matt, in the pre-market, it's down more than 15% on TradeGate. Calls are saying it could drop as much as 20% when it opens. This is as it's cut its 2018 outlook, saying it sees full-year revenue around the lower end of 20-25% growth range, and the third quarter revenue growth and adjusted earnings to be significantly below analyst estimates. And as Anna mentioned before as well, besides Zalando, keep a look at ASOS and Boohoo. The read across from Zalando being under pressure could also affect those stocks.
All right, thanks very much, both of you, for joining us, Paul Jarvis and Anne-Marie Horder. And Anna, what else are we watching today?
Yeah, we've got a lot of other stocks to watch. In smaller caps in the UK, a bit of M&A in the insurance space, Matt, so we'll look out for Jardine Lloyd Thompson, an insurance and reinsurance provider. Marsh & McLennan over in the United States bidding for that business or buying that business. They've offered $19.15 per share. It closed at $14.32, so we would expect to see that going higher. Jardine's given an irrevocable undertaking to support the deal, which is interesting. So we'll watch out for that one. Look out for Husqvarna. This is an outdoor equipment maker over in Stockholm. A profit warning coming there. Also Spire, a profit warning in that healthcare business over in the UK as well. So lots to watch out for at the start of the European equity trading day. Nestle could also be interesting. They're selling Gerber Life Insurance to Western and Southern Financial Group for $1.6 billion, focusing on more profitable parts of their business. They're under pressure, of course, from Dan Loeb. So a host of other individual equity stories to pull together and watch how they open at the start of trade. Just 4 minutes or so away from the start of the equity trading day. The big picture, though, of course, remains around trade. This is Bloomberg. We are less than a minute away from the start of the equity trading day this morning here in Europe. Let's have a look at how we are set up for that market open. This is the picture on a host of assets as we head into the start of the equity trading day then. The euro is a little bit stronger against the dollar. We have a bit of dollar weakness. We have some yen weakness. We have euro strength and pound strength. Interesting to see how we are seeing positivity on Asian equity markets despite the trade threat, and interesting responses in FX markets. We talked about whether we are at a turning point for the dollar versus the euro. Where is the haven right now from trade tensions? Oil a little bit weaker, in fact, down by 0.3% compared to the previous close. As I say, the Chinese equity market surging into the close, up by 2% on the CSI 300 just ahead of the close, and the pound against the dollar. We've got that in there for you. A little bit of volatility in the overnight Asian session. This is the mixed picture in terms of the futures that we expect from the European equity session, because Asia has been resilient. How resilient will Europe be? Just getting through to the start then of the European equity trading day, and this is what we have. So we were expecting to be either side of the flat line, really, essentially, on these European equity markets this morning. The Asian equity session was pretty resilient. Nothing to see here in terms of trade tensions, it seems, or at least all priced in for now. What kind of sentiment shock could we see from here, though, if we do see a further escalation in these trade tensions? That's something that S&P are talking about. Saw flashes on that on the Bloomberg just coming through over the last couple of minutes. So we'll wait for these markets to settle down. We've got some interesting individual stock stories to talk about, Matt. But overall, the big picture is around sentiment, around trade. What kind of slice is this going to take out of Chinese growth? And how much of this is already priced in? Quite a lot, if the Asian equity session has anything to tell us, Matt.
Yeah, absolutely, because you didn't see Chinese stocks really falling overnight. Take a look at European stocks. This is the Bloomberg Europe 500 index divided into industry groups. And we do see some real weakness in consumer discretionary, in energy stocks, in financials, as well as healthcare. The only places you really see gains are industrials and consumer staples. Actually, you see financials sort of bouncing back and forth there. So it looks like financials are now doing fairly well and consumer staples are doing worse. This is a market that could change. We're watching it on the IMAP change before our eyes, and we saw the Asian indexes go from, especially in China, losses in the morning session to gains in the afternoon session. So we could see some real movement, volatility in European stocks as well. What do you see as far as the individual names, Anna?
Well, we're just watching for those individual names to see where they fall out. Then, Matt, some of the names we mentioned going into this trading day do appear on there. I see Husqvarna down by more than 5%. This is an outdoor equipment maker based in Stockholm, warning on their third quarter profits. So that's in there. We also see some negative moves from retailers in the UK. I wonder if this is read across from any of the other negativity around retail. We've seen Zalando, of course, guiding down quite significantly overnight. More than 20% down. And so we've got Marks & Spencer's, Hennes & Mauritz, both of those losing ground. Next also losing ground. So we are seeing some weakness in those retail stocks. To the upside, we've got Clariant gaining by 5% or so. Air France up by 2.4%. Casino, another day of gains for that business after its parent company got a lifeline, a credit lifeline. Of course, we talked about that. We'll just let that settle down for a moment and come back to it. Meanwhile, I want to mention some of the headlines we're getting out of China this hour. Of course, we knew what the US was planning here. We've been talking about that all night. And then the Chinese saying that they have been forced to retaliate. China saying that the US new tariffs bring new uncertainties to the talks. China will levy retaliatory tariffs simultaneously with the United States. So remember, September the 24th is the date that the Trump administration has told us. So perhaps this suggests that the Chinese will go on the same day. The Chinese equity markets fairly resilient in the face of all of this tension. In the run-up to these particular lines coming through from China, we'd seen resilience in China, in the Chinese equity story. China says that the US new tariffs bring new uncertainties. This is all coming from MOFCOM, the Ministry of Finance over in China. Let's get some further analysis here of what's happening. Peter Chatwell joins us here on set, joins us from the Zuho, of course. Peter, good morning.
Morning.
To you. So these latest lines just crossing from China, we're getting a sense of the retaliation to come. They say that the new US tariffs bring uncertainties to trade talks. They will levy retaliatory tariffs simultaneously with the US. No surprise in the sense, because they'd always said that they would retaliate.
Yeah, and this is exactly how they operated with the first round of tariffs. As soon as the US implements tariffs, then they retaliate. So I would expect that what we're likely to see is still this ongoing sense that I think the markets are slightly saturated with this news. This is why we've been able to rebound in Shanghai. I think this is why the dollar has been able to come off on some of these headlines. And I think more broadly, you can see that policymakers are also. They've talked a lot about the uncertainty, but now we're still seeing that the markets perhaps have priced a lot of the downside in excessively.
Does this make any difference, Peter? I mean, when we look at Trump's goal, at least we assume his goal is to get rid of the trade imbalance that we see with the U.S. and China. Huge deficit on the U.S. side, obviously a huge surplus on the Chinese side. If you take a look at a chart that Hillary put together, we see you still got a massive deficit, U.S. trade deficit, a massive Chinese trade surplus, even in the most recent numbers. So it doesn't look like it's making a difference. Will that change?
It's going to be a slow burn. I think the ultimate goal here is, one, to show that the president is doing something, but the goal here is to renegotiate so that US-China trade can be done on better terms for the US. So I think this implementation of tariffs is likely to continue until there is some tipping point reached between the two parties where they come to strike a deal. I think that's the way to look at this. So we're thinking very much along the lines that further tariffs could well be implemented, but this is still likely to be something that is within the confines of current market pricing.
And where are the havens in all of this then, Peter? We were having a really interesting discussion with our colleague Mark Cranfield on the MLive blog about the role the dollar has played. The dollar had been strong during the initial phases of this trade tension. We see a little bit, well, in fact, the dollar actually flat right now. The euro had been making some ground this morning. Is there a chance the euro or gold become havens in this story as opposed to the dollar?
Well, on the dollar, what we're looking for is the ongoing strength becoming a problem for the rest of the world. And we've seen that already in how EM has played out. So we're very cautious that if there is further upside to the dollar, it causes an inflection in riskier markets, which then causes the dollar to turn around. Ultimately, there should be a contagion effect into the riskier asset classes in the US if the EM story continues to deteriorate. So, in other words, the upside for the dollar is limited over the medium term.
How does that EM story, how is that contagious into the US, into riskier asset classes? Because that's the bit that the Fed, the Fed says it does its own thing because it just deals with the US. Yes.
So it's really about the EM asset class generally suffering. So rather than the weaker countries currently being hurt by the stronger dollar, if this turns into significant outflows from investors, from EM mutual funds starting to take the whole asset class down with it, then you start to see some contagion, because if you get the LATAM countries under a lot of pressure, then we'd expect to see more contagion into riskier markets in North America. Then this becomes more problematic. Then you'd see IG widening, high yield certainly widening, and then that becomes a problem for US financial conditions.
What will we see if the U.S. loses sort of safe haven currency status? The MLive blog is arguing that the euro would take over. Do you see the common currency sort of assuming that role?
I do. I mean, I think that there are a lot of structural reforms and measures that would have to take place before that can materialise. But one of the big reasons that the euro has been so suppressed over the past few years is, of course, the negative interest rate policy. And one of the reasons that we expect the euro to appreciate over the coming quarters, and in particular over the next quarter, is simply that the ECB's monetary policy is likely to be significantly tighter in about 1 year's time. And we think that that's going to mean that there are more positive yielding assets in the risk-free sector. We'd expect 5-year Germany can get a positive yield on it, for example, and that is going to mean that the currency once again can be invested in fully for those who have a very risk-free mindset.
OK, stay with us. Thank you for your thoughts so far, Peter. We'll be back with Peter Chatwell shortly. Now, the Bloomberg European Capital Markets Forum is underway in Milan. Our colleague Francine Lacroix is there. She's hosting a panel featuring a host of big-name guests. It's being chaired, as I say, by Bloomberg TV's Francine Lacroix. We are hearing from the Deutsche Bank CEO, Christian Sewing. Let's listen.
We will also see in the world economy a kind of a change of the trend. We have seen growth over the last 7 or 8 years. We may see some reversal of that trend over the next 2 to 3 years. And the role of a bank, next to establishing platforms, being the risk manager of our clients, is more important than ever in an environment which may be more challenging than we have seen over the last 3 or 4 years ago. And therefore, I think it's a disruptive change of moving into a platform industry and at the same time always profiling yourself that you are the risk manager of your clients.
David Harrow, you're one of the most famous investors in European financials. How much do you look at the transforming business in deciding where you allocate capital?
Well, businesses are always transforming, and so you have to stay abreast on what's happening with all these various changes. But on the other hand, you have to be cognizant of what is just a gradual shift in tastes and preferences, and what is a fundamental structural change. So you have to be able to manage the difference between structural changes in the industry and kind of cyclical changes of the moment. And I think as an investor in these various entities, we're constantly trying to analyze things from a step above so as not to get caught up in the heat of the moment. As we know, and as we're going to discuss today, there are so many various things you could get caught up upon that could alter your path when in fact they're just little cyclical changes. To us, as boring, long-only asset managers, our task remains the same, whatever the weather conditions are out there, what even the structural changes are, and that's to analyze businesses, price businesses, buy them low and sell them dear as disciplined long-term investors. So the environment's kind of always changing. We have to A, ascertain whether it's structural or whether it's just cyclical, and B, we have to be prepared to take advantage of other people's short-termism. With all of the macro news in the headlines, with all the geopolitical events, very, very often we see prices move.
OK, we will continue to keep across all of the headlines coming from that. As I say, the CEO of Deutsche Bank on that panel, David Harrow, you see him there speaking. Peter Chatwell, head of rate strategy at Mizuho, is still with us. Peter, we were discussing trade, we were discussing the policy from the United States and the retaliatory measures from China. We've had a question from a viewer who's talking about current account surpluses and where these exist around the world, and saying, you know, current account surpluses are run by, this viewer says Germany, Japan, and names some other countries in Asia. Is the US targeting the wrong party in this, suggesting China, I guess, for political reasons? I mean, there's politics, of course, behind some of this.
Yeah, I think that undoubtedly there is a political element here. You could argue that yes, the viewer is correct that there are other current account surpluses to be looking at, but the new entrant, or over the last 10 years, the biggest change in trade has come via much stronger Chinese exports, and I think that's potentially the point here, in that the euro area has been exporting a lot to the US for a long time, whereas made in China has really been the game changer.
All right, Peter, we're going to keep you with us. We've got more to talk about with Peter Chatwell. Up next, we're going to bring you the stocks on the move so far this morning. 12 minutes into the session, a lot going on today, including Jardine Lloyd Thompson after Marsh and McLennan agrees to buy that company. You can see JLT gets a 32% premium on the day. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. I'm Matt Miller here in Berlin. Bit of a mixed trade, 15 minutes into the session. Let's see what the individual stocks are doing with Anne-Marie Horder. And Anne-Marie?
Morning, Matt. Let's start with Zalando, down more than 19% this morning. This as it cuts its 2018 outlook. Third quarter revenue and adjusted earnings to be significantly below analyst estimates, the company saying. Also take a look at ASOS and Boohoo, some other companies that are being affected by this as well. Clariant up to the upside more than 6%. This is a reshuffle on the management level. It's naming Sabic's Ernesto Occhielli as CEO. This is starting from October 16th. The current CEO will move into the chairmanship role. Clariant says it's also upgrading its plastic divisions with the 2 additional assets from its largest investor. These 2 companies have been sketching out how they will be collaborating, but certainly the market seems to like the reshuffling news. And JLT to the upside, 31%. Jardine Lloyd Thompson. This is as really an M&A story. This is as the U.S.-based company Marsha and McLennan are buying the company for £19.15 per share. That acquisition values GLT at about £4.3 billion. Anna, Matt?
Very much, Anne-Marie. Now let's focus on Brexit and the pound. Prime Minister Theresa May is likely to survive in power to deliver the UK's exit from the European Union. That is according to a poll of academics. They also put the chances of a no-deal Brexit at about 50%. Interesting poll results then. Let's get the thoughts of Peter Chatwell, Head of Rate Strategy at Mizuho. So the politics is interesting here domestically. It doesn't seem to be the thing at the moment that moves UK assets. That seems to be what comes out of Germany or Brussels, doesn't it? But in terms of the domestic story, is the big question, whatever is agreed across the channel, can it get through Parliament? Is that the big stumbling block that we have to think about next?
Yeah, I'm of the view, excuse me, I'm of the view that the Chequers deal would be unlikely to get through Parliament. So I don't see how it's really desirable to either the Brexiteers or the Remainers to put that through. And so I see the likelihood of a general election as being pretty high. The question is, does that come before March the 29th or does that come after? And that, I think, really comes to the game theory of if you want to take the Prime Minister out and have a significant reshuffle, potentially a changing of the order in UK politics, do you first need to have a failed Brexit under your belt, or do you go beforehand?
When you're trading, do you trade on this at all? I mean, I don't really see a lot of movement in cable. I don't really see a lot of movement in the euro recently, even though it seems like we're getting a clearer picture of what's going to happen.
I think, well, the issue that I see here, the reason that you can't see it in cable that much is that there must have been significant short positioning, and hence why when there's some slightly conciliatory comments coming out of the EU or out of any of the major countries in the EU, then you see a pop in cable. But I think what's significant is that if you look at where the UK rates curve is, if you look at the gilt curve, still yields are super low, particularly in the front end of the curve. And I think that is factoring in a lot of risk aversion still, and is not factoring in the potential rate path of the Bank of England, either in terms of a soft, successful Brexit or indeed of the risk of a hard Brexit. I think in both scenarios, the Bank of England could be putting rates up faster than is expected, which cushions cable, of course, but should be materialising on the gilt market.
Yeah, so talk us through that a little bit more, Peter, because I know we discussed this with you before, the possibility of inversion on the gilts curve. You've talked about 2s to 10s. So you see this flattening, and you see aggressive flattening by as much as 40 basis points if the experience of 2016 is repeated. So run us through that scenario. Yeah,
so the scenario is that if there is a big shock at some point, both the EU and the UK decide this isn't going to work. Chequers, I'm not likely to get it through Parliament. I need to get a better deal. And then the EU says, well, no, you can't get a better deal than Chequers. In fact, we're going to push back on that. I think that will have both parties then conceding that a no deal is more likely than a deal. And at that point, there'll be a complete rewrite of all of the UK assets. I think then you'd have significant downside in cable. I think you'd have significant positioning for downside protection also in cable from the corporate sector.
And a hike from the Bank of England?
I think so. I think that the market doesn't really fully understand their reaction function, but yes, I think that the reaction from the Bank of England could be a sooner than expected hike. We have one penciled in for February of next year. That sort of bringing forward of hikes and also thinking about a more aggressive hiking path in the event of a hard Brexit, I think would really invert the curve quite significantly.
All right, well, that's in the event of a hard Brexit, though, as unlikely as that is. Peter Chatwell, head of rates strategy at Mizuho, is going to stay with us. We have more to talk about with Peter. Nouriel Roubini, chairman and CEO of Roubini Macro Associates, joins us as well later today. Don't miss that at 11 a.m. UK time. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Let's get a check on what's going on across Europe in terms of equity indexes right now. You see gains on the Iberian Peninsula, or at least in Spain. Can't see Portugal there, with the exception of the green corner. We do see France gaining 0.4%, Italy up, as well as Germany. So looks like a little bit of a loss in London, which is why this market is slightly mixed. Indeed, Ireland is down about 0.25% right now. Still with us is Peter Chatwell,
yes,
head of rate strategy at Mizuho. And sorry, Anna, do you have something on?
No, I was just going to say we'll send somebody to rediscover Portugal for you. But in the meantime, let's keep across what's coming from Mario Draghi. Exactly. He is speaking in Paris at an event there. Draghi, Nui, Villeroy, all speaking at this event in Paris. So far, he's not supposed to be talking about monetary policy. And in fact, he isn't really. He's saying that progress in completing the banking union is essential. Further efforts needed to reduce NPL stock. Let's get to Peter Chatwell, head of rate strategy at Mizuho. That last line is interesting on NPLs because this goes to the heart really of part of the concern around Italy, around the banking sector there.
Yeah.
You see any movement on that story soon?
No, I don't see any structural impetus behind this, really, for the banks to be able to clean themselves up. The last thing they need is a partial sovereign crisis. So, unfortunately, I expect that market conditions are such that their eyes may be diverted somewhat away from the cleaning up of the NPLs, because right now BTP yields are attractive, political risks are relatively high. Are
you buying Italian BTPs or no, staying away from that?
Oh, the 5-year Italian BTP relative to the 2-year and the 8-year, so on the curvature, is excessive, very excessive, and it's an asymmetric play on Italian political risks and recovery from this point.
OK, Peter, thank you very much. Peter Chatwell, Head of Rate Strategy at Mizuho, stays with us on the programme. And stay with Bloomberg. Shore Capital founder and chairman Howard Shore joins us after 9:30 a.m. UK time, so stay tuned for that conversation. Markets here in Europe then, slight move to the upside, up by around 0.1%, but London underperforms. This is Bloomberg.
We are 30 minutes into the trading. Let's get your headlines off the Bloomberg terminal for you. Ramping up. Trump slaps a 10% tariff on another $200 billion of Chinese imports, with a hike to 25% coming in a year. Beijing says it will respond with simultaneous levies. But tariffs? Chinese stocks surge in the afternoon trade, shrugging off trade worries. Europe also moves higher. Were investors already planning for a worst-case scenario? And make or break summit. South Korea's Moon Jae-in meets Kim Jong-un in Pyongyang as he hopes to revive talks on denuclearization. Good morning. Welcome to Bloomberg Markets. This is the European Open. I'm Matt Miller here in Berlin alongside Anna Edwards at our European headquarters in London. Anna?
Yeah, Matt, let's have a look at the MRR, member rank returns then on the Bloomberg. I pulled up the stock 600 in Europe, and this is what the biggest gainers and losers in percentage terms look like for us this morning. Clariant over in Switzerland up by 7%. We've had a change of some of the management over at Clariant and also a new strategic review, and that seems to be going down well with investors, up by 7%, as I say. Ocado Group, we previewed this in our stocks to watch, up by just over 3%. They put out sales numbers. Some people said they were in line. Some suggested there was some beat going on there in terms of the estimates. So that stock has been volatile, of course, used to be very shorted, less so now. Let's have a look at the downside, because here we have another online story that is really making its presence felt across European equity markets. That is Zalando, down by 19%. They warned quite significantly overnight about their prospects, and then that's brought into the fray over in the Nordics. Kinnevik, which is an investment company that invests in online digital businesses, that's getting a downdraft from the Zalando warning, so that company is down by 7%. IWG, that's got a downgrade from Credit Suisse, I think it was, down by 3.9%. And Husqvarna, another Nordic name on the downside, down by 2.6%. They make outdoor equipment, and they put out a profit warning as well. Let's get a Bloomberg First Word News update. Desley Humphrey has that in Dubai. Desley.
Thanks, Anna. China has this morning said it will levy retaliatory tariffs on the US. That came in response to the Trump administration announcing yesterday that it will impose a 10% tariff on about $200 billion in Chinese goods next week, and more than double the rate in 2019. The move deepens what's shaping up to be a prolonged trade war between the world's two biggest economies. US Supreme Court nominee Brett Kavanaugh and the woman who accuses him of decades-old sexual assault will testify next week before a Senate committee. The Senate Judiciary Committee will hold a new hearing on Monday, bowing to pressure from Democrats and some Republicans to hear from Christine Blasey Ford, who says Kavanaugh assaulted her at a party when they were in high school. The hearing promises to be an explosive public showdown in the era of the Me Too movement. South Korean President Moon Jae-in is in Pyongyang to meet North Korean leader Kim Jong-un. The landmark visit is an attempt to salvage stalled nuclear talks between the regime and the US. The three-day trip will feature a joint news conference tomorrow with Kim, who has resisted American attempts to spell out a timetable for giving up his nuclear weapons. The European Council's president has confirmed that EU leaders are now to discuss how to organise, quote, the final phase of the Brexit talks, including the possibility of calling another European Council in November. Donald Tusk's letter ahead of the informal meeting of heads of state in Salzburg also warned that a no-deal outcome is still possible. Egypt's foreign minister has said Arab countries will step in to help the UN agency serving Palestinian refugees after America's decision to cut off funding. Salman Shukri made the comments in an exclusive interview with Bloomberg.
That has been since the Rome conference, and commitments were made by Arab and non-Arab states to fill the gaps that have been created by the withdrawal of American support to UNRWA, out of the recognition of the important role that UNRWA plays and the humanitarian needs of the Palestinian people.
Netflix has won the most Emmy Awards of any TV network, capping a sudden and dramatic rise to the top of the entertainment industry for a company that got its start as a DVD by mail operation. Netflix earned 7 awards during the primetime presentation of the Emmys and 23 overall, both records for the streaming giant. Its biggest prize came for The Crown, a period drama about the British royal family, and Godless, a Western miniseries. Global News 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
All right, Des, thanks very much. Desley Humphreys there with your world and national news. Now, we are hearing from Mario Draghi right now, kind of the same things that we just heard from, that we're hearing from Christian Saving at Deutsche Bank as well. Draghi is saying that banking union has to be completed and that NPLs need to be reduced. So he wants banking union to cut down on NPLs. What Saving is saying is that with banking union, you'll have consolidation. And we know that Deutsche Bank, the organization which Saving is running, is considering the possibility of a tie-up with Commerzbank, and so are people here in Berlin considering that possibility. Let's get the thoughts of Peter Chatwell now, head of rate strategy at Mizuho. It's interesting, Peter, in the abstract to talk about banking union, but I can't imagine the European Union actually achieving this because it involves shared responsibility, shared financial responsibility, which states like Germany aren't likely to take for states like Italy.
Yeah, it's a massive stretch. The banking system in Europe is still extremely fragmented. You can see it in how the banks borrow and lend to each other. There's very little cross-border activity within the euro area. So I think that the reason why the ECB and others really want the banking union is because it would make the financial system that much more effective at passing on their monetary policy. But I think it's a hope. We need a catalyst. Probably we need another crisis for this type of drastic measure to actually get the political will for it to happen.
I was just talking about Christian Saving speaking, and we do have pictures of that as well. We showed it to you earlier. Let's listen into what the CEO of Deutsche Bank is saying.
Where we think we have a competitive edge in advising our clients globally, not only in Europe, but obviously with a focus in Europe, but then going globally. We want to remain an investment bank. That's the core DNA, and by that we help the underlying economy, and that's needed.
Mr. Saccomanni, how should we look at Italian banks? So we have the finance minister. There's been a lot of disruption on the markets because of the budget law. How would you explain it to an investor?
Well, I think the minister will probably provide the best answer. But I think we are confident that in the end, after all the discussions that normally take place before the budget law is presented, I've been Minister of Finance, so I know what it looks like. But I think we are confident that eventually the main point that the government has made, that their key objective is to reduce the deficit to GDP ratio and the debt to GDP ratio. I think it's going to be maintained, and I think the issues at stake are very high. I think the markets have reacted with some concern initially, but I see that there is now a more sort of I would say relaxed attitude in the hope and expectation that eventually the budget will be in line with the need of reviving the economic activity while keeping the key parameters of fiscal policy within the agreed guidelines at the European level.
And David, you stayed invested in European banks throughout the summer, Italian banks.
Yes, in fact, on some.
All right, there you see Francine Lacroix talking with that group of gentlemen there at the European Capital Markets Forum. You can check that out, by the way, on LiveGo. So if you want to continue to follow along with Francine's conversation, there's David Hero. We heard from Christian Saving, a number of others as well. Just check it out on the Bloomberg. Just type LIVE Go. Let's get back to Peter Chatwell right now, head of rate strategy. And Peter, I want to take this idea of the possibility of banking union a little bit further. What would happen if we did get, say, shared responsibility? For example, if you had depository insurance on Italian bank accounts backed by the ECB, backed essentially by Germany, right? And then I could go from here, take my savings out of a German bank where I'm getting 0% interest and go put it into an Italian bank where I would get maybe 1.8% interest without any fear of that bank failing and me losing all of my money. Is that, what would that do to rates across Europe?
Well, simply it would make monetary policy more effective in how it can get transmitted across the entire euro area, rather than it being transmitted effectively into easier monetary policy for the real economy in the stronger economies like Germany versus tighter, effective monetary policy in the weaker economies like Italy. So this would have a convergence effect for the real economies. It would have a convergence effect on market interest rates, even for the sovereigns as well. So it would be a big step towards a better euro area for all outcomes. It would be effective, and it would also allow the ECB to start normalising interest rates sooner, I would expect.
And you see that coming sooner than the rest of the market?
Well, I see the normalisation of interest rates coming sooner, and that's really a function of other central banks pursuing monetary tightening more aggressively than had been previously assumed.
OK. Peter, thank you so much. Thanks for your time. Peter Chatwell, Head of Rate Strategy at Mizuho. Peter will be joining us on Bloomberg Radio on Daybreak Europe on Bloomberg Radio. That's live on London, DAB Digital and elsewhere, of course. I'll be hosting the next hour of that programme with Marcus Carlson, so tune in for that on Bloomberg Radio. Up next, we'll talk cybersecurity with Nicole Egan, CEO of Darktrace. This is Bloomberg. Good morning, everybody. This is Bloomberg Markets, the European Open. We are 44 minutes into the European equity trading day. Time for something a little different now. When it comes to getting hacked, the saying goes that it's not a matter of if, but when. So how do businesses stay ahead of the race to keep out intruders? Darktrace is one cybersecurity company using machine learning to detect and respond to threats. The 5-year-old business was said to reach $1.25 billion valuation earlier this year. What plans do they have to make good on that? We'll see. Joining us now is the Darktrace CEO, Nicole Egan. I'm pleased to welcome you to our studios this morning, Nicole. So let's start with the business itself. How do you use artificial intelligence then to spot these threats before they emerge, to get ahead of WannaCry or whatever else you see coming?
We actually follow the principles of the human body's own immune system. So while we have skin, and that keeps us safe most of the time, occasionally we still get a bacteria or virus that gets inside. But our immune system has this very precise and rapid response, and that keeps us safe. That's exactly how Darktrace works. Our artificial intelligence sits inside a company's cloud or their network, and it actually learns a sense of self. And then when something that's not meant to be there turns up, it actually fights back. We actually like to call it the machine fights back.
What do you see in terms of regulation? We've had GDPR, which has changed the way a lot of businesses work on the internet, and I think makes consumers more aware of what's going on. But does that make things more secure? How does GDPR affect what you do?
Well, I think one of the things that GDPR did is it actually put in place what's called the 72-hour rule. So companies have to make sure that they actually notify of the breach within 72 hours. And that's very difficult to do. I think even with the recent BA attack, it took several weeks for them to be able to identify and report. And that's actually quite rapid. So I think that's going to put a lot of pressure on companies to probably use new forms of technology like artificial intelligence to be able to respond more quickly, if not automatically.
So you said that the technology tries to develop a sense of self, you know, what's normal and what's abnormal for this self, for this company. So how do you get around the problem of false alarms? One of my colleagues was talking to me about how these systems, yours, others, I'm not sure, but some, that there's talk about whether they create too many false positives, too many flags, warnings, if you like. How do you get around that?
So it's interesting, is what we're actually doing is we deploy in about an hour inside of companies' network. And within, I'd say, a week's time, we actually already have a pretty good idea of what we call the pattern of life of every user and device. And everything we're seeing is actually happening inside their environment. So really that alleviates the issue of false positives. On average, we're usually highlighting maybe about 5 to 7 events a week that are truly concerning.
I wonder what you do depending on who the hacker is, Nicole. I mean, for example, if I were to knock out an intruder in my house, at least in the U.S., that would be my right. But if the intruder's a policeman, then I'm going to have more of an issue. What do you do when the hacker is the CIA, the NSA, you know, some nation-state hackers?
Well, what's interesting is that gets into this whole area called attribution, and attribution is very difficult in cybersecurity. So what we're really doing is using the artificial intelligence to actually just neutralize the attack. So rather than actually fighting back on the offense, it's really just neutralizing the attack. Say, for example, when WannaCry happened, being able to help companies just stay operational during an attack.
So I was looking at who owns your business at the moment, Nicole, and, you know, there's a host of owners, KKR, Talis Capital, Hoxton Ventures, lots of others in there as well. What about plans for any of those businesses to get their money out? IPO plans, a chance to list the business or some other such decision. Is that in the offing at the moment?
So currently, we're just keeping up with the demand, to be quite honest. The company's been growing incredibly fast. And at this point, we don't have any plans for a public offering.
No plans at all, not being discussed at this time?
Not at this time.
No.
What about plans for other people to get their money in, Nicole? I mean, you know, with this kind of growth, surely you need funding. I'm sure other investors are interested in getting in alongside KKR and the others. Are you looking to do another capital raise round?
Well, because we do continue to grow the company, we do open up new offices and hire more people. In fact, we're just through 750 employees and continuing to grow, probably up to 1,000 employees this year. So that will require capital along the way.
Is it becoming increasingly busy, this space? Other companies, Vectra Networks, CrowdStrike, others offering machine learning-based cybersecurity. How do you rate the competition?
Yeah, I think one of the things that's interesting, first of all, there's no silver bullet when it comes to cybersecurity. So there's no doubt that companies are going to deploy multiple technologies and multiple approaches. But I think the other thing that's happening is there's quite a bit of confusion between what I'd call automation versus artificial intelligence. And so I think that kind of blurs the lines. Most of the competitors we see are really automating known processes, looking for previous attacks. But in cyber, the attacks keep changing. And that's why we felt this approach of using artificial intelligence, where you're actually having the machine learning do some of the work that human analysts would have had to done, as well as humans, if not better. I think that really sets us apart from all the rest.
All right, very interesting stuff, Nicole. Thanks very much for joining us. Darktrace CEO Nicole Egan there. They call themselves the world leader in enterprise immune system technology, which is quite a cool way to think about it. Let's get now to the stock of the hour. Anna, we've been watching shares in Zalando do terribly poorly today. It is a stock that at one point had more than doubled since its IPO, but in 2014. But today, if you're still in it, it's a stock that's down about 40% from the first day of trading. So there you can see the shares are down 16% right now. If you take a look at the graphic dashboard, I'm just putting it up. GD Go is the command for graphic dashboard. You can see Zalando shares are down, obviously, on the one day, but there were quite a few buys here. In fact, 15 buys and only 8 sells for a company that has really lost a lot of value for investors since it started trading less than 5 years ago. Now, up next, we're going to get the battle of the charts. We'll see what the most important graphic illustration is today for what's going on in these markets. This is Bloomberg.
Good morning, everybody. Bloomberg Markets, the European Open, 54 minutes into the trading day, so nearly the first hour done. Time for the battle of the charts today. Anne-Marie Jourdain is going head-to-head with Christine Aquino. Anne-Marie, let's kick it off with you.
I'm looking at Wall Street Pegs, a new report by the New York State Comptroller showing that it's the highest in a decade since the collapse of Lehman Brothers. Last year, it rose 13%. And this chart shows the correlation between those bonuses on Wall Street versus the S&P 500. And what it's showing is that the correlation, they're highly correlated, but while they still are increasing, the correlation has decreased since the financial crisis in 2008, saying that stocks are actually outpacing bonuses. So one to look at today as we have this new report out. And of course, as we've been marking the collapse of Lehman Brothers all last week.
OK, so that's one that no doubt will be popular with those on Wall Street and the financial services industry here in London and elsewhere. Let's get to Christine. What have you got?
And I'm looking at the biggest story of the day, which is, of course, Tariff Tuesday. And it's a bit of a tepid one in Europe based on the volumes in bond futures. Bond futures, as you know, would be the first port of call if European investors are indeed worried about tariffs, which they are not. As you can see, the yellow line here marks the 15,000 level. That has been a key level to watch in the past 3 months. It's only been breached 4 times in the past 3 months, and all of those times have been either trade-related or EM market-related. No such luck today. Volumes are under control, which means that European investors are taking all the tariff developments in stride.
Thank you very much to both of you. Christine, much enthusiasm in the delivery. Anne-Marie, great chart. I think we're going to go with Anne-Marie today because that one certainly would be a talking point. Could you take this as a banker on Wall Street? I don't know, Matt, as a banker on Wall Street, could you take this into your boss's office and suggest, look, I'm not paid enough. My bonus didn't go up as much as stock markets. Or maybe you're paid not just in bonuses. Maybe they're paid increasingly in base salary. Maybe that was something that happened after the financial crisis, certainly here in Europe.
Yeah, I'm sure you see a lot more salary component, but I think a banker could definitely take this. I mean, look, they're not judged only on the S&P, right? But if asset prices are rising faster than their salaries are rising, they could come and argue that they need to be paid more. And I think that's a fantastic chart, Anne-Marie Horder, and congratulations on that win. That's it for us here on the European market. Stay tuned for Bloomberg Surveillance.
and this is Bloomberg Technology. Coming up in the next hour, Uber is said to be driving forward with a takeover of its Middle East rival Careem. We'll look at what that deal means for both ride-sharing giants. Plus, first production, now delivery seems to be a problem for Tesla. Elon Musk tweets an apology to a disgruntled customer who's waiting for her car. And it is Visa's 60th birthday. We'll talk to the company's CEO about staying competitive in an onslaught of disruption from new technology. First to our top story. Uber is said to be in talks to buy its Dubai-based rival Careem in a deal which could value the Mideast competitor at more than $2 billion. Careem says it has more than 15 million users and almost 1 million drivers across 14 countries. It's not the first time the ride-hailing companies have considered a deal. Back in July, sources told Bloomberg the companies were talking about merging their Middle East operations. Joining us now, our Bloomberg tech reporter, Eric Newcomer, who of course covers Uber. So what do we know?
Well, we know Uber is sort of insistent on only growing at this point. For much of its history, it's sold its businesses in China and Southeast Asia to Grab. And so now India and the Middle East are two areas where Uber is competing fiercely. And so now there are talks about whether Uber could buy Careem, its main competitor in the Middle East.
Now talk to us about how this strategy differs with what they did in China and what they did in Southeast Asia, because it certainly shows what they've learned doesn't work.
Well, they took, sort of stakes in those companies, but had sort of super fierce competitors that were spending a ton of money and had a local advantage. I think in the Middle East and India, Uber has felt that it's better positioned. I think internally, Uber feels that it has more than half of the trips in the Middle East, so it just feels that it has a strong positioning, so it doesn't need to sort of yield to the local rival in the same way that it is done in other countries.
So this is an area, though, where they're in the midst of a rivalry with this particular company.
Careem, yep.
Careem is a competitor.
Right.
How bitter is that rivalry?
I think it's, fierce until it's not. I think founders like to run sort of their own country. This is, an important startup in the region. So to sell to Uber would certainly be sort of a bitter pill to swallow. But at the same time, Uber has this huge balance sheet that it's continuing to spend. At some point, you make the calculation, it's better to work with your enemy.
You mentioned India, where Uber's competing with Ola. Is this something that could happen there?
Could happen. I think nothing specific to report there, but there's no question that you have to believe it's a matter of price and sort of Ola's willingness to come to the table. But, Uber wants to sort of India and the Middle East continue to have sort of a major presence, and clearly sort of M&A is part of that strategy.
What has Uber CEO Dara Khosrowshahi said, the new CEO said, about his strategy for international expansion and how it might differ from the way Travis Kalanick approached it?
Well, it's certainly been one defined by cooperation. It's going to London and meeting with regulators there. It's also a matter of sort of more creative strategies, using Uber Eats to get a foothold in places where they might not otherwise be able to operate, sort of toying with sort of taxi-like businesses. It's this sort of creativity and openness to different regulated strategies to compete all over the world.
All right, Bloomberg Tech's Eric Newcomer, I know you'll continue to keep us posted, as you do. Well, it's one thing after another for Tesla. While production may have been a nightmare for the electric car maker, car delivery is now proving to be equally as difficult. In a tweet on Sunday, Musk apologized to a woman complaining about delivery delays and said, "Sorry, we've gone from production hell to delivery logistics hell, but this problem is far more tractable. We're making rapid progress, should be solved shortly." Now, even more uncertainty surrounds the company as Saudi Arabia's sovereign wealth fund invests $1 billion in rival Lucid Motors. This after Musk had cited the fund's interest in taking Tesla private. Here to talk about this more, who else but Bloomberg Businessweek's Max Chafkin. So Max, talk to us about how significant these delivery issues are on top of the production issues.
I mean, it's not that surprising given that we know that Tesla has been in this mad scramble and that they were in all sorts of ways a little bit out of their depth. At the end of last quarter, there was this thing where they had made more cars than they delivered, and it appears now they're really scrambling to get those cars out the door, and clearly they just Elon Musk and his team just do not have the infrastructure quite yet to do this at the scale they'd hoped to do. So it's one of these things where it's not a huge, I would say it's not a huge problem. We saw at various times the stock has been down and up earlier today, but I think it's one of those things you want to keep an eye on, because as Tesla tries to become, quote unquote, a real car company, as Elon Musk has put it, there are going to be all of these ways where they're going to be tested, and one of those is the kind of service, customer service, and just the ability to bring the cars to the customers.
Some other things the company is doing: limiting the number of paint colors you can get in your choice of car. Also, Elon tweeting a limited time offer to give new buyers free charging for life. I mean, are these good moves, or are they a sign of desperation?
I think probably the bulls will see it one way and the bears will see the other way. The color issue strikes me as, unless you really wanted one of those colors, probably good news for most Tesla supporters. I mean, in all sorts of ways, the company sort of bit off more than it could chew, and anything they can do to sort of limit that, I think, is a good thing. I looked at the this kind of limited time supercharger offer as a little bit of a red flag, because it starts to feel like, oh, you're pulling out all the stops. You're really doing everything you can to goose sales and to sell as many of these things this quarter, and you just wonder how many of those levers they'll have to pull, next quarter and the quarter after that and the one after that.
What's your take on this investment in Lucid by the Saudis, and what it means for their continued interest in Tesla? They do already have a 5% stake, but here you have them investing in a competitor formally.
I wouldn't read all that much into it. I mean, there are a lot of these companies that are trying to build luxury electric vehicles. In other words, competing head-to-head with Tesla. There's a Chinese company, NIO, that just went public. I think the real players here are the big automakers, BMW, Audi, et cetera. So that's where I would sort of think about the sort of competitive stuff. I do think this is it's just yet another way in which the drama of the previous month, where Musk claimed that he had secured funding from Saudi Arabia, doesn't look so good, because clearly they were talking to this competitor.
So, we should talk about this SpaceX event that's coming up tonight. Pretty big event for the company, and Elon has often used these opportunities to sort of prop up Tesla. What do we know that's going to be happening at this event tonight? What are you going to be listening for?
So we know that they're going to announce a private space traveler, and this has been promised for some time. And last week, possibly in an attempt to kind of change the narrative, Elon tweeted that they would be making this announcement. I think one thing that both companies have used to their advantage is that one company's accomplishments can sort of have a positive impact on the other one, because you see, oh, Elon Musk is capable of sending a private tourist to space. That makes Tesla investors feel more confident that he'll be able to get a mid-size, car out the door. So I think there's that. I mean, assuming it's a good show and everything, then that should be good for both companies. You never know. Elon Musk is a master of these kind of launch events, and you just wonder if there's some kind of trick that either Tesla or SpaceX has up its sleeve. So certainly be watching closely.
Got to ask you, Max, about this latest headline crossing about the Thai rescue diver, the one who's been leading that or led that operation, now suing Elon Musk for defamation. This is the same person that Musk called a pedo. He then apologized for that, but then elaborated on the comments in an email to BuzzFeed. How significant is this? So the diver has already said he was planning on suing. I think the main thing here is that Elon, if you're friends with Elon Musk, you'd hope that somebody would grab the phone and not let him use it for the next, 24 to 48 hours, because this back and forth he's had with Mr. Unsworth has been just, incredibly distracting for his companies. So we'll see. I mean, in any other situation, this would be sort of a small-scale dispute between, two individuals, but he's over the past few months managed to turn these things into major, news cycles. So we'll see what happens. All right, the cave explorer Vernon Unsworth looking for $76 million, according to these court filings. We'll continue to follow that. Bloomberg Business Week's Max Chafkin, as always, thanks for stopping by. Coming up, Visa shares up over 40% in the last year as the company faces an onslaught of new competitors thanks to new technology. We'll check in with Visa's CEO next. And And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com. In the U.S. on SiriusXM. This is Bloomberg. Over the last 60 years, Visa has become the biggest payments network in the world, with 3.2 billion cards driving over $10 trillion in payments a year. Shares are up 40% over the last year. This as Visa fights a backlash against the so-called interchange fees retailers are charged every time a card is swiped, tapped, or inserted. Obviously, all of this is changing as new technology continues to disrupt. Here with me now, we've got Visa CEO Al Kelly. Al, thank you so much for joining us.
My pleasure, Emily.
Special day because you're celebrating Visa's 60th anniversary. You've been running the company for 2 years. You were on the board a couple of years before that, and you worked at Amex for many years.
All true.
So as the payments landscape shifts as a result of all of these tech disruptions, what is your vision for keeping Visa competitive?
Well, the exciting thing for us is that 60 years is just the beginning. I think the payment space is getting more and more exciting every day. Number one, we've got the ability to continue to displace cash and check, which is still $17 trillion spent last year on cash and check. The ability to open new segments. It's not just about consumers to go buying at businesses, but now governments are distributing funds to their citizens. We've got the B2B space, which is extremely exciting. In fact, the cash and check displacement opportunity there is larger than it is in the consumer space. We're working on having our network rails work in the other direction. So rather than just necessarily pulling funds when somebody buys goods and services, we're pushing monies to people's bank accounts and creating new use cases there. So, and we're continuing to partner with a lot of new exciting players that are coming into the space. So I think the future is bright, and I look at us as 60 years very, very young.
The payments business is really interesting because it involves a lot of frenemies. You have lots of partnerships with companies that you also compete with. So companies like PayPal and Square and Stripe. How do you plan to use technology to compete with technology?
Well, it is a community of lots of frenemies. The payments ecosystem is very interesting because it requires lots and lots of players to come together to actually make it work. And the people that look to cooperate and work together make all the difference in the world. You mentioned PayPal. I spent a couple hours on Friday with Dan Schulman. That we have a wonderful relationship with them where together we're trying to grow the payments ecosystem space, and we're working with lots and lots of other players to do just the same. My view at Visa is that we should be open to talk to anyone about anything, and we should assume everyone can be a friend until they prove otherwise. And I think that's the only way that you figure out how to move ahead, is by making sure that you have wonderful engagement with as many people as you possibly can.
Okay, so on that note, we know that the online checkout experience has become a little bit cluttered. You see so many icons when you do that checkout. So Visa is partnering with MasterCard and Amex and Discover to come up with this unified button. What have you learned since you announced that decision?
Well, this is actually a standard coming out of something called EMVCO, which is the standard setting body that all those companies and others participate in. I think we're all united in the fact that there's a NASCARization of the checkout experience. There's all these different labels. And the reality is that the e-commerce experience for shopping and buying still is lousy. Too many people shop and don't get to the point of actually buying. Consumers get confused when they get to the actual situation where they actually have to pay for whatever it is they bought. And this is lost volume to retailers, lost volume to networks, lost volume to banks. So we're simply trying to make the experience for the consumer that much better, which makes it better for everybody. And we're in lots of discussions in the standard setting group about making sure that the technology is ready, and we're excited about the prospect of having this start to come to market probably sometime in the early to middle part of 2019.
That said, there's still a war for dominance in online payments, whether that is PayPal or Amazon. You mentioned PayPal as a sort of frenemy. Do you think PayPal could be included in this unified button in the future?
Well, I think we're open to anybody being involved. We're open to anything that makes the payment ecosystem better as we look to advance. I think the reality is that PayPal's got started with being the kind of the button, if you will, in the e-commerce space, and whether they would really look to this second button, I don't know. You'd have to ask PayPal. But I think the reality is that our goal is to make the payment ecosystem as easy as it can possibly be for the people playing in it, but most importantly for the buying consumers around the world.
Does this button have a name, and how have retailers responded to it?
Well, its technical term is secure remote commerce, but that's a lousy term. We'll have to do a much better job marketing as we kind of think about what it actually is when we decide to come to market. So that's still a TBD. I think that we're still working in explaining to merchants how it works. I think most merchants actually want a better experience at the checkout, at the point of checkout. They want to make sure that their consumers are enabled to buy as much as possible, and that's everything from having a great website to great navigation to having a great checkout experience. So I think that as we learn and have more discussions with merchants, they'll understand our motivation is very simple. It's to make the experience for the user that much better when they go to check out and buying whatever good or service they're looking to buy.
Now, mobile payments have been fairly slow to take off in the United States. By Visa's own estimates, as I understand it, less than 0.5% of volume on your network comes from mobile. How quickly and how much do you see that actually growing?
Well, as you probably know, Emily, we're on a bit of a crusade around the world to promote contactless payments. And in many countries, they've started to really take off. One of the countries that's behind much of the rest of the world, particularly the developed world, is the United States. The reality is that the infrastructure is largely plumbed to be able to facilitate contactless payments. Many of the terminals are ready. Many of the largest merchants are ready. The reality is, though, there's this embedded set of cards. You mentioned the 3.3 billion Visa cards. Obviously, many of those are in the United States. And only fairly recently did the issuers start putting a chip on the card. So most issuers are committed that as we start to move towards replacing cards over time, that they'll embed the near field communication capability that enables contactless payments. And I think as contactless payments take off, the form factor of both the card and the mobile phone, where the tap experience is simply better, will both be aided by the reality of contactless taking off in the United States.
Will this further hinder the adoption, contactless cards, of Apple Pay, of Samsung Pay, which, Apple seemed to be the declared leader in contactless pay just 3 years ago?
I don't see that. I think that the reality is that their partners, as well as many other partners in the space, many of the Samsung phones, the Apple phones, have embedded in their wallets Visa cards. And to the degree that this helps facilitate mobile payments that have Visa cards stored in their wallets, that's perfectly good for us, and it's perfectly good for the ecosystem.
Now, Amazon has shown no lack of ambition into getting into new markets, and they are going to be a huge player in the payments space. What sort of threat are you preparing for from Amazon?
Well, Amazon's a wonderful partner of Visa's. We have a terrific relationship with them and have for some time. They're also very customer focused, and they want to have the customer use whatever product they're most comfortable with. I think it remains to be seen exactly what Amazon does in the payment space, and you'd have to ask them.
Couldn't they use their muscle to muscle you out of some fees?
The reality is that I think that they, again, want what's best for their customer, and if their customer wants to use Visa, wants to use the Visa cards issued by our banks around the world, their customer-centric approach to business, I think, facilitates them wanting to make sure that they work with us and work with others to make sure that they offer the widest array of options to their customers so they don't turn away anybody. I think that that's central to their strategy.
You're working with car companies to load payments onto the dashboard. Can you give us any more specifics about what car companies you're working with or how you expect this all to evolve?
Well, thank you for the question. When I talked about some of the future being bright, I didn't talk about the Internet of Things, and I think connected offices, connected cars, connected homes are an incredible growth opportunity for us. We're the largest network in the world, as you said in your introductory comments. 46 million merchants around the world accept Visa cards, but we actually think that it should be 10 times that, and the Internet of Things is going to be one of those things that does it. We're talking to manufacturers in the automotive space as well as manufacturers of home appliances and office equipment. And our task at this point in time, Emily, is to make sure that we're creating an on-ramp for payments so that payment facilitation happens as these manufacturers build the next generation of cars and equipment and appliances, that payments are enabled so that when you're at your refrigerator and you realize that you're out of milk and butter, right there at your refrigerator, you can make a payment without having to go to your desk and jot down a note and then go buy later, either online or at the physical store. So we're not at this stage prepared to talk about who we're talking to, but I can tell you we're talking to a wide range of manufacturers around all of this connected space that transcends a consumer's life.
You've got a unique perspective on macroeconomic trends. There's a lot of political uncertainty. The U.S. is in the midst of a trade war. Do you have any concern about how this affects your business?
Well, we expect growth this year to still globally be about 3.3%. As we look at around the world, and as we look at 19 and 20, we see it slowing a little bit, but still north of 3%. I think that when we look at the U.S., the impacts of tax reform have been a real positive. It's increased government spending. That helps. Certainly, trade wars, potentially some inflation could dampen some of the positive tailwinds that exist out there, and it's something that we're watching closely. But right now, as we look into the future, I think that the economic situation looks pretty bright as long as we don't run into any geopolitical risks, which is frankly one of the things that concerns me the most when I look ahead.
Quick last question. Blockchain, Bitcoin, is it a threat or an opportunity?
Opportunity. I think that it remains to be seen exactly what happens in cryptocurrencies and whether they really can move from being more of a commodity and get into payments. But I think the blockchain technology is something that we're looking closely at, as are we machine language and artificial intelligence. Just down the road in Palo Alto, we've got a Visa Research Center that's focused on all those things.
All right. Visa CEO Al Kelly, great to have you back here on Bloomberg. Thanks so much for joining us.
Thanks, Emily. Good to be with you.
All right, much more ahead. Remember, Bloomberg Tech live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. up 8 years ago, Google left China over security concerns. Now it is planning to go back. But one research scientist is quitting because of it. Will others follow? That is next. And later this hour, a venture capital fund with sights on automation here with a major announcement. Find out what it's all about. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. In early August, it was revealed that Google wants back into China. And according to reports, the search engine was willing to work with the Chinese government to censor search results. One of the very things that led Google to pack up and leave China 8 years earlier. Now, a Google research scientist has left the company in protest, saying, quote, "I have cherished working at Google and hold the vast majority of my colleagues in very high regard, both professionally and ethically, but I cannot work at a company that will not internally clarify its ethical red lines in areas that it is actively engaging." Those are the words of Jack Polson. He joins us now from Toronto. Jack, thank you so much for joining us. So walk us through your decision to resign rather than trying to protest from within.
Sure. So I, like most employees, found out about this through the Intercept reporting on August 1st. I will say it was a very vocal 3 weeks following that. Within that week, I was trying to raise concerns internally. There was a lot of pushback and talking about it. It was phrased as a very exploratory project. Not many managers really knew anything about it. So as an employee, when you try and raise such a concern, you're essentially told, you know, just wait for a company-wide discussion, and then your concerns will eventually be handled. A few days of this, I submitted a conditional resignation saying if this turns out to be true, then I'm forced to resign for ethical reasons. Still, even after submitting that conditional resignation, still I essentially received no clarification on what red lines might be crossed. And then after enough time passed, say another week and a half, I submitted a formal resignation, wrote a 5-page, very well-cited document explaining my reasons, some of which you quoted at the very end, and then circulated that throughout the company.
Another part of that document, Jack, that you wrote, you say, you know, I'm forced to resign in order to avoid contributing to or profiting from the erosion of protections for dissidents. There is an all too real possibility that other nations will attempt to leverage our actions in China in order to demand our compliance with their security demands. Meantime, what Google has said about all of this, they say we've been investing for many years to help Chinese users from developing Android through mobile apps like Google Translate and Files Go and our developers tools. But our work on search has been exploratory, and we are not close to launching a search product in China. You know, what are your real concerns about Google going back into China and potentially censoring results in according to Chinese law?
Yeah, so I would defer to the Human Rights Coalition letter that was written on August 28th from 14 organizations, including Amnesty International, Electronic Frontiers Foundation, Human Rights Watch, Human Rights in China, the list goes on. They laid out their concerns pretty clearly. They can say it much more eloquently and with more authority than I can. So I would call on everyone to read that. And in particular, part of the reason I ended up resigning is before I left, that letter came out. And I tried to raise it as a point as to why the human rights concerns have, you know, are an issue, and that letter was still not responded to either internally or publicly. Now, to your point about this only being exploratory, I think it's really important to call attention to the AI principles, which were laid out as a response to earlier internal organizing efforts, in particular surrounding Project Maven. So what's stated very explicitly in the AI principles is that Google commits to not design or deploy technologies whose purpose contravenes widely accepted international law or human rights concerns. Now, I'd say there's a lot of push for this to be seen as exploratory, but I don't think it's debatable that this at least passed the design phase. So I think that coupled with this human rights letter is a pretty clear crossing of the currently written down red lines. And so to quote a colleague, Meredith Whitaker, I don't think employees at tech companies should accept vague feel-good statements in exchange for meaningful accountability. So what I'm calling for right now is meaningful accountability. In particular, if we're stating we care about human rights, we need to respond to human rights organizations.
By our last count, more than 1,400 employees signed a letter demanding that Google appoint someone to assess the, quote, urgent moral and ethical issues raised by this particular plan. Do you have any new metrics about the scale of the frustration there? Any stories you can share about your colleagues and how they're feeling?
I don't want to speak too much for my colleagues except to tell them that you're not alone. And if this is something that you have concerns with, there's a broad movement that you can join, including the Tech Workers Coalition and Tech Solidarity. Within Google, there was, as I stated earlier, very effective internal organizing surrounding Project Maven, and most recently with the Ethics Code Yellow Call, which was, for better or for worse, leaked to the New York Times with those 1,400 signatures.
Now, in the recent months, we've seen dissenters at Google protest the company's work with the Pentagon. Google, in that instance, decided to let its contract with the Pentagon lapse. There's also been dissent on both sides about how Google handles diversity, where you have diversity advocates within the company say the company is not doing enough, and others like James Damore who feel that they're being ostracized as a result of these efforts. Do you think Google cares about dissent?
I'd say that that's almost beside the point. What I really care about is accountability as opposed to what the care is or is not. And I think in this case, it's pretty clear that there hasn't been accountability so far. And that's part of why I'm resigning, is to call for accountability and a response to human rights organizations.
So what will you do otherwise now that you've resigned?
I'll say that it's been pretty surprising exactly how positive the response has been. Within the last, 2-3 days, I've had 30 job offers, let's say, an endless stream of extremely positive unsolicited emails, and I think I've received 1 hate mail and 100 positive messages at least. So I'm not worried at this point, to say the least. And I would encourage other employees thinking of speaking out to realize that this isn't as scary as it may sound.
Jack Paulson there, former Google research scientist from Toronto. Thanks so much for sharing your side of the story. Coming up, a VC fund is making waves with a $137 million announcement aimed at automation. Find out why. Plus, another tech exec follows Bezos' lead to journalism. What to expect from Time Magazine's new Silicon Valley owners. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. Base 10 Partners just announced they've raised $137 million for its fund, focusing on what they call automation for the real world. The sum makes it the largest fund of its kind for a venture capital fund led by a black investor. The new fund will lead investments in early stage companies, mostly seed, Series A, with checks ranging from $500,000 to $5 million. Here to discuss Base 10's co-founder and managing partner, Ade Ajao. And Ade, you've been on the show before. You launched Workday Ventures. Exactly. And have spent the last 18 months or so putting this new fund together.
Correct.
Automation for the real world, what does that mean?
That means focusing on companies that are helping the largest sectors of the economy, like construction, real estate, or waste management, adapt to automation. The way we like to think about it is companies that are solving problems for the 99%, and that think more about the problem they are solving than about the technology first.
So what are 1% problems that you think too many investors are focused on?
You know, we think that the next deep neural network is super exciting for the 1%, and particularly especially for those of us that are nerds, but it's unlikely to have an immediate effect in something like waste management. So we are actually focused on the other 99% that think of things like, where do you find a home? Or how do you get rid of your trash? Or like, how do you have better crops? And we think that there is not enough focus on Silicon Valley on those problems, and there was no fund that had an exclusive focus on that.
You've been raising money for the last 12 months. What was the reception like?
It was very good. So we are extremely happy and proud of the LPs that have supported us. I think that a lot of them describe our focus on real economy versus AI like a breath of fresh air in a world that is all the time talking about the machines are coming, are taking everyone's jobs, and we are actually like, no, automation could be a good thing if we invest in the kind of companies that believe that we should all benefit from it rather than 1%.
So, you make a point to point out that this is the first fund, largest fund of its kind led by a black investor. Why do you think that's important?
It's interesting. For me, it has been a journey realizing that that is important, because where I grew up, and I'm half Nigerian, half Spanish, because I grew up in southern Spain, I was the only black kid around. And that made me don't have a racial identity. What is interesting about the US, and I have found over the last decade, is that the US gives you a racial identity, whether you want it or not. And we are in a place where historically people have been treated differently because they look differently, and that has resulted in issues like the ones you have been talking about in lack of diversity in tech. I realized that that put me in a unique position, and I realized that it's important to move that conversation forward.
So is it something that you now play up? So many women investors have told me, well, I don't want to be the woman investor. I just want to be a good investor.
Yeah. So here's an interesting thing. When we were fundraising, it was not until we had 95% of the fund completed, like about 120 million, that one investor told us, hey, have you thought about talking to investors that have a diversity focus? And we're like, oh yeah, I realized that that might be a competitive advantage for us, but we didn't. And part of that is, because we're very prideful about the fact that, I'm black and I'm here and I'm investing in other people like me, but it doesn't need to be our main focus, because what we believe is that if you invest in people that are solving problems for the 99%, you're going to end up with a pretty diverse bunch, because those are the kind of folks that are actually going to internalize those problems and work on them.
Now, you have a fascinating background, because not only did you immigrate from Spain, but you founded a rival to Uber in Latin America called Cabify.
So I was the founding investor of Cabify. I did with a couple of classmates of mine from Stanford. It's a fantastic company. Juan, my friend and CEO, is definitely giving Uber a run for its money in Latin America and Spain. And I think part of what has made Cabify very successful is the focus on regional communities, where the drivers have true pride of what Cabify does for the community, for the region, and for their families, and that deep understanding of the problem you are actually solving and the people you are serving has been a huge differentiator for the company over the last 7 years.
We've seen Uber sell its businesses in other global regions where it wasn't able to compete, whether it's China or Southeast Asia. We also just reported on a story about Uber in talks to buy its Middle East competitor, Careem. How do you expect Uber versus others' state of play to evolve in Latin America?
Yeah, I'm not in the day-to-day of Cabify, so that will be more for Juan to speculate. What I can say is that the numbers of the company and in general the excitement on the company just goes up month by month. So it is definitely a very important region, I think, for anyone, but Cabify feels very good of the position where it is.
All right. Base 10 co-founder and managing partner, Ade Ajao. Thank you so much.
Thank you very much, Emily.
Great to
pleasure.
have you. Coming up, Time's new tech owners. The legendary magazine is being sold to a Silicon Valley billionaire. That's next. This is Bloomberg. was Jeff Bezos buying the Washington Post. Now another tech billionaire is buying a journalistic institution. This time, Salesforce co-founder Mark Benioff and his wife, Lynn Benioff, buying Time magazine for $190 million. The Benioffs are unloading the fabled publication from Meredith Media in an all-cash deal. It's a personal purchase, meaning it is unrelated to Salesforce. So why are they doing this, and what does it mean for Time? To answer that, I want to bring in John Klein, chairman of TAP Media. Before that, he was president of CNN. And with me here in the studio, I have Bloomberg's Nico Grant, who covers Salesforce, and Mark Benioff. So, Nico, first of all, I was trading messages with Mark last night. He's very excited about this. Why is he doing this?
So,
why are they doing this, I should say, because Lynn is involved as well.
Yeah, and I think that's crucial. Mark Benioff has tried to pitch himself as a civic leader, and I think he really wants to be part of the conversation when it comes to criticism of President Trump and his policies, or when it comes to sharing his progressive values. He tends to be pretty outspoken. I think one of the tenets of that is he appreciates a free press. Right now, people on the left tend to lionize the press as an important check on power. And I think that when you see an institution like Time magazine, he thinks this is a perfect brand, this is a perfect opportunity to save a news outlet that has done really great work and give him an additional platform.
Here's a tweet from Mark Benioff. The power of Time has always been in its unique storytelling of the people and issues that affect us all and connect us all. A treasure trove of our history and culture. We have deep respect for their organization and are honored to be stewards of this iconic brand. John, this as Jeff Bezos has bought the Washington Post, you've got Lorraine Powell Jobs and The Atlantic. As Nico said, Mark Benioff and many of these tech magnates not shy at all about their political views. What does that mean for the publication and for the media?
I don't know if this has much to do with politics, other than there's been a huge Trump bump that the Washington Post has gotten from aggressively covering the goings-on in the administration. Same with the New York Times. And Time magazine has missed out on that almost completely because they haven't had the resources to do aggressive reporting and investigation. And this may give them a chance to get back in that game.
The relevance of the magazine, though, has shifted, John. How much do you believe that Time magazine and the Time cover still matters?
The Time cover, interestingly enough, seems to have far more impact than the magazine itself. It's still got a lot of cultural currency. The president cares a lot about how many covers he's been on, but people talk about it a lot. And I think they could do a lot more with it and leverage that power. I think that this is really kind of a Moneyball play by Mark Benioff. That is, he understands the power of artificial intelligence really well. Salesforce has a very sophisticated in-house AI program. And I wouldn't be surprised that if he were looking at Time magazine as a very powerful brand that, given the proper dose of artificial intelligence, enabling it to really understand its consumers and find new audiences, could become even more valuable over that next 20 to 25 year period that the current editor, Ed Felsenthal, said Benioff has been encouraging them to think.
Nico, do you think the Benioffs will run this as a business or as a loss leader?
I think that the Benioffs are going to stay away from operational matters. They said they won't be making any editorial decisions. I think at the same time it's going to be important to them to make sure that Time has all the resources needed to go forward. They know that they don't have the expertise. They're still partnering with Meredith on making sure that distribution and advertising will go forward. But, regardless of any of the details, how it plays out, this is really the debut of Mark Benioff in some ways on the national stage. Salesforce can be so inside baseball as an enterprise company. People around the country today are talking about Mark Benioff.
And he has, as you said, been not just pretty outspoken, but very outspoken about his politics, about things like equal pay. He's been very critical of Facebook, for example. John, if the Benioffs are saying they're not going to get involved in editorial decisions, do you think that's really possible in this day and age? That they and their politics and their personal views could have no impact on the publication?
I think it's possible and critically important for the credibility of the publication, and they probably know that better than anyone. We've got the example of Bezos with the Washington Post. There hasn't been any evidence of him tampering on the editorial side. I think there'd be a lot of noise, starting with the Time magazine employees themselves if there were any kind of attempted interference. He knows what he's bought. He's bought one of the beacons of independent journalism that has fallen on harder times lately, and if he really wants to revive it, he's going to just arm them with the tools they need. You know, they can now afford to triple the size of their Washington reporting staff, for example, and they can know more about their audience than they've ever known before, so they can invest in technology in order to get there. If he's smart, that's what he's going to focus on and not worry about editorializing too much.
John, would you expect to see this when it comes to other publications? There certainly are other struggling publications with iconic brands out there. Fortune comes to mind. Will we see more of this?
I think we will, because I think it's very appealing on an emotional or personal level, but it also provides a legacy of sorts. You know, when you've made a few $100 gazillion, you're probably sitting there thinking about what it's all going to add up to and what impact you might have. And especially for people who understand technology and its potential to take brands to the next level and beyond, it may become irresistible for them to adopt one of these struggling publications, and there are more to come. I mean, we see every day, you know, these giants of publishing just looking to sell off individual titles. So I think there are sellers for sure in the marketplace, and I do think that there will be more buyers in the vein of Benioff.
Now, Bezos's purchase of the Washington Post, Nico, has not been without controversy from within and, you know, outside the organization as well. And the president has certainly trained his ire on the Washington Post and on Jeff Bezos. Could we see something similar happen here?
If it does happen, I don't think Mark Benioff would mind, given his criticism of President Trump and the fact that he hasn't been on the president's radar. But I think the big distinction that I see between those two is that Amazon permeates, you know, every aspect of American life these days. And when it comes to Salesforce, it is a much smaller player, and he bought, you know, a national news magazine rather than a tech magazine, for instance. But this is ultimately a prestige play for him. You know, this is a man who just sponsored a new transit center in San Francisco to be named after his business. His company has the naming rights of the largest office tower that is west of the Mississippi. You know, this is a man who really appreciates prestige and has a personal family history of these renowned folks crucial in the development of San Francisco.
John, quickly, you think we could see a similar pattern in TV?
Well, that would be interesting. You know, maybe broadcast TV, which is the area of the business that is struggling most, or some of these cable channels. I hear from well-to-do individuals all the time who are interested in buying a cable TV network, because that's a tougher business these days. But you know, the Time magazine itself was a bit of a vanity play once it got going. Not at the beginning. It was a true startup back in the 1920s. But you know, eventually Henry Luce was using it as a vehicle to enhance his own reputation and to push his own politics. So the more independent-minded publication we know today is very different from the one that Luce ran when he was alive.
Right. All right, John Klein, CEO of TAP TV, former president of CNN. Thanks so much. Also, Bloomberg's Nico Grant. I know you'll continue to keep us posted on what happens here. And that does it for this edition of Bloomberg Technology. Be sure to tune in tomorrow. Alibaba Investor Day is underway with founder Jack Ma's recent announcement he'll be stepping down. We will have full coverage. I'm Emily Chang. This is Bloomberg.
morning, forget 200 billion and 260 billion of additional goods. Your new tax is 20 billion becoming 50 billion. Who knows? Do the math. Down the not-so-Silk Road, maybe 116.75 billion in new, fresh American taxes. It's a Trump math of the Trump trade war. No word this morning from Beijing. Quiet markets as Turkish lira weakens. Mr. Erdogan distracted as he and Mr. Putin agree to demilitarize along the Syria border. And in this hour, from Milan, Italy, David Arrow on EU banks. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York. Nayra Chayich in London, Francine Lacroix as well at our Bloomberg European Capital Markets Forum in Milan, and we'll get to her here in a moment. Nayra, fairly quiet markets today, but I am watching Turkish lira, not only with the politics, but with the finance of Turkey.
Yeah, absolutely. It's one of the worst performing EM currencies against the dollar in this session, Tom. But overall, as you've sort of said there, the market reaction to this escalation in the trade war has been very sanguine. We saw the Shanghai Composite rebounding by more than 1% after closing at its lowest since 2014. So markets are almost saying, so what? Perhaps it wasn't as bad as they expected, or they're just waiting for it to get worse further down the line.
Yeah, for the tit for tat, we're waiting for the response from Beijing. Right now, we need a response of our First Word News in London. Here's Sebastian Salek.
Tom, Nayra, President Trump has ramped up the trade war with China. The U.S. will impose a 10% tariff on about $200 billion in Chinese goods next week, and more than double that rate next year. Beijing today again vowed to retaliate, and if that happens, the U.S. will impose further tariffs on about $267 billion of Chinese imports. President Trump says China has been unwilling to give fair and reciprocal treatment to American companies. A Russian military reconnaissance plane has been mistakenly shot down by Syrian forces, and Moscow blames Israel. The Kremlin says the Syrians were fighting off an attack by Israeli warplanes, and the Russian plane was caught in the crossfire as it returned to base. All 15 on board were killed. And it will be high drama on Capitol Hill, an explosive public showdown with a seat on the Supreme Court at stake. The White House's pick for the High Court, Brett Kavanaugh, and the woman who accuses him of a decades-old sexual assault will testify next week before a Senate committee. The hearing has delayed the Republican plan for the panel to vote on the nomination this week. America's allies in the Middle East are trying to contain the fallout of President Trump's attempt to rewrite rules that have underpinned peace talks for decades. Among them, the U.S. has cut off fundings for Palestinian refugees and recognized Jerusalem as the capital of Israel. Bloomberg spoke with Egypt's foreign minister.
I think there's an obligation on everyone to avoid violence, to work to achieve stability and to consolidate the peace. But definitely there are many pressures that are created by unilateral decisions.
Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sebastian Salek, and this is Bloomberg. Tom, Nayra.
Seb, thanks so much. A headline out of Saudi Arabia here. No, not on Tesla. And, of course, what we saw there with their investment in electric cars. This goes to the heart of the matter, which is oil. Saudi Arabia saying they're comfortable with Brent oil above 80. I'm not quite sure what that means, Nayra, when you look at $50, $70, $60 oil down to $29 in the bottom of the crisis. But certainly $80 is a lot closer to that $100 nirvana that we saw a number of years ago. Nayra, let me do a data check right now and get into it before we move on with an important hour. Futures up 4, a churn to the market. I just have one data screen today, but Nayra, I would know, maybe you have it. Turkish lira back out to 6.37. That's up nicely from a 6.20 level. A weaker Turkish lira. Nayra?
Yeah, exactly. Weaker by about 0.8%. Weaker for a third day, Tom, looking at the Turkish lira, one of the worst performers in the EM space against the dollar in today's session. I'm looking at markets that largely seem to be shrugging off the imposition of additional tariffs by the U.S. on Chinese goods. The Stock 600 up some 0.2%. We saw gains even bigger than that in the Asian session. And metals really interesting because, look, LME copper now up 1.4%. We saw it drop as much as 1.5% earlier. Metals were pummeled yesterday, but rebounding today, and also the 10-year BTP yield. I'm keeping an eye on that because we're seeing reports in the Italian media of more sort of discussions, heated discussions over the budget, Tom.
Nara Chance, thank you so much for getting us started in this hour. Right now, we need to go to our Bloomberg Summit in Milan, Italy. Francine Lacroix is there with an esteemed guest. I know we're going to talk foreign exchange here as well. Francine, what is the summit? What is the character of this capital markets forum in Milan?
Well, Tom, good morning to you and good morning to all of our viewers and listeners on also London DAB Digital Radio. We just had a European capital markets panel, and then we were joined by the new Italian finance minister. He talked a little bit about funding. I have to say, maybe a lot of market participants were looking at what he said and thinking how he would fund some of the tax cuts that he was proposing. But overall, in the Capital Markets Union, we were joined by the chief executive of Deutsche Bank. We also touched on Brexit. We talked about how to avoid the next financial crisis. And one of the key panelist, of course, was David Harrow, who will join us for the hour, Tom.
Very good. Well, let us get started here, and we do that on emerging markets. The dynamics, a two-part U.S. dollar in developed countries and EM countries, and there's no one better to do that off the desk of Rabobank with Jane Foley, their senior foreign exchange strategist. Jane, good morning to you. Am I right that there's a two-part dollar dynamic right now? There's dollar versus euro, yen, and the rest, and then there's this whole separate idea of weak EM versus the dollar?
Yeah, I think you're right. I mean, it's difficult to completely separate the two, but the dynamic of the emerging markets this year has been very much part of this dollar story. And I think we've seen capital outflow over the recent months really pushing into the dollar. And of course, one of the questions is, why hasn't that capital outflow pushed more into those normal safe havens, perhaps the Swiss franc or the yen? And I think this is really quite interesting. And I think the strength of the U.S. economy this year, the interest rate differential in favor of the dollar, really has directed the flow back into the US. But what's been quite interesting, I think, in September is this discussion, perhaps initiated earlier in the month by Apple, but certainly this discussion now about whether or not that the trade tariffs will slow US growth, whether or not perhaps we've seen a peak perhaps in inflation. That's another topic that's coming out in with respect to the US right now. The strength of the dollar, of course, bearing down on inflation potential. So those sorts of discussions, right, I think, have become much more relevant into the dollar discussion right now.
And what's interesting about this, folks, is waiting for a response from Beijing before, I guess, Mr. Trump does round 3 of these tariffs, is we've got the EM disquiet. Let's do physics with Jane. We do physics with Jane on Tuesday. Bring up the chart here, and it's of Turkish lira. And here's the explosion from a 5 level on Turkish lira out to 7. We showed that a month or 2 ago. And Jane, this is absolutely textbook what's called sinusoidal function at a new higher level. Can you tell off a classic sinusoidal function which way Turkish lira will break, or do you just have to wait for the evidence?
I think the evidence have got to be really important, and I think what we've seen now, we've seen a reaction from the central bank. I think from most investors' point of view, it was late, but certainly better late than never. But it's not just about monetary policy. I think the market also wants to see the finance minister push through with his economic reforms. The talk has been good, but can he really walk the walk? We really need to see that too. And of course, also there's the issue, of course, hanging in the backdrop as well about Turkey with respect to tariffs. And I think the market needs further evidence, further clarity on that. So not just about the central bank. I think there is further evidence that the investors want to see.
Jane, good morning from Milan. I want to ask you in a second about pound, but first to renminbi. Where do you see renminbi going from here?
Well, to be honest, we've seen, of course, this week additional tariffs. We've got Trump really threatening about the next phase if China were to retaliate. And that is all about weaker Chinese growth. The market is, of course, trying to work out how much growth will be taken off Chinese potential. There's a lot of numbers being bandied around the market right now. And, of course, against that backdrop, China has to take some defense. We're going to potentially see more fiscal initiatives. And, of course, there's the currency. And with that backdrop, it does seem likely that we will see further weakening in the renminbi against the US dollar.
And where do you see pound from here? I don't know whether it's moving on the back of possible hope that actually we do have an agreement or some kind of outline of a Brexit agreement in the next couple of weeks.
Well, of course, last week, the week before, we had these glimmers of hope that, yes, we'll get something in November. But, of course, there is still a lot of reality associated with that. And the reality is there's a lot of infighting in Westminster, a lot of infighting, of course, within the Tory party. It's going to be very difficult, I think, for Theresa May to find a compromise, particularly with respect to Northern Ireland. So I think the upside for the pound will be limited whilst those sorts of uncertainties really do persist. After that, yes, if there's an agreement, yes, of course there'll be a sharp rally in the pound. But if a lot of the uncertainty is pushed into next year, so if we get a fudge in November or whenever, the potential upside for that rally, of course, will be limited as well.
Jane Foley, thank you so much from Rabobank with the currency briefing this morning. Again, fairly quiet out there in foreign exchange with Turkish lira weaker and that new strength in pound sterling. Coming up from Milan, David Harrell will join us, the great value investor, the international value investor. Yes, David Harrell on EU banking. From Milan, from New York, this is Bloomberg.
This is Bloomberg Surveillance. I'm Sebastian Sarlik, and let's get the Bloomberg Business Flash. Shares of Danish jewellery maker Pandora are rising. An Italian newspaper reports that KKR and Bain Capital are among the private equity firms that could be studying the company. The paper says Pandora is a perfect target and that activist funds may also try to buy a stake in the company. And the billionaire founder of Japan's second largest e-commerce company will be the first paying passenger to fly around the moon. The president of Start today, Yusaku Maezawa, will be on board a rocket built by Elon Musk's SpaceX that's scheduled to blast off in 2023. The spacecraft will make a week-long loop around the moon, but no word what Maezawa is paying. And that's the Bloomberg Business Flash. Tom, Francine.
Thank you so much, Sebastian. Now, in 9 days, Italy's populist coalition government will present its new fiscal and growth targets. Following pledges by the finance minister Giovanni Tria and deputy prime ministers Luigi Di Maio and Matteo Salvini to stick to European Union rules while Italian bond yields fell, investors appear to be staying the course. Now, for more on this growing confidence, we're joined by David Harrow, Harris Associates Chief Investment Officer of International Equities. David, thank you. And of course, we were on the panel together where we were then joined by the finance minister of Italy. And he tried to, I guess, allay market concern. But how's he going to fund it? Do you worry that Italy, either there's going to be a change in finance minister or actually, there's going to be anxiousness in the markets when it comes to bond yields again?
Well, that's the question, is financing it. I mean, there are certainly positive elements to the program that they're putting forward. Very supply-side oriented, flat tax, investment in infrastructure, deregulate, all these things, all very positive. But the only factor I heard about paying for it was the doing away with tax expenditures, tax breaks. Of course, whenever you flatten a tax code, you got to take away all these deductions and all these things. And yes, that can pay for some of it. The question is, will it pay for all of it? So I think they still need better detail on how they're going to hit this 1.5 to 1.75 or 1.8% deficit to GDP number. But, you know, yes, tax expenditures will help, but what else?
So do you like Italian assets? I know you're a big investor in Intesa, and on the panel you were saying that on the dip during the summer you actually took a little bit more of, I guess, Italian exposure.
Yeah, because we didn't really feel that the fall in price, specifically of Intesa and earlier of CNH on the trade wars, was really indicative of the underlying intrinsic value. In fact, we didn't see a real dip in intrinsic value at all. And of course, these assets dropped 20, 25%, and in US dollar terms, over 30%. So they became very attractive to us as a result of the abrupt fall in price, and excluding, there was no corresponding fall in intrinsic value in our view.
But we still have a populist government in Italy. So if we have the rhetoric of actually we'll flaunt EU rules and the markets again become anxious, do you buy on the dip once again or do you sell?
I think that the populist government doesn't really have a lot of choice to flaunt the EU rules because they know the program will depend on having to invest, and that means raising money via the capital markets. And you know, if they keep flaunting, their price of investing and the price of financing will keep going up. And I think they understand that. It appears they understand that. David, you are expert at the cross-border dynamics of Europe. Can the rest of Europe come to the rescue of Italy capitalism through mergers, acquisitions, combinations? Do you see that happening? Well, this, Tom, was one of the topics we covered at the panel today, was the need for, if Europe is going to have a unified financial system, there needs to be, of course, consolidation in the banking sector. However, you have to ensure that you have the banking system in place before you do the cross-border consolidations. Unless you have a unified banking system, the consolidation won't work. Who wants to buy a bunch of local banks in a different country if you just have all these separate banking systems? So until you see a more uniform regulatory environment, a more unified European banking system, it doesn't make sense to have consolidation cross-border. You could have consolidation, as you've seen within Italy, within the border, and that does make sense. In fact, all of these European countries, individually, perhaps we do, before we do cross-border, we need more consolidation within the countries. And then, and only then, if we have a more unified banking system, should you see cross-border. Well, within the cross-borders is the idea of what to do. Are you buy, hold, or sell as a general statement on EU banks? I know we're going to talk about this in about 20 minutes, but is David Arrow long EU banking? Yeah, we're generally long EU banking, but very selectively. As you know, we're very bottom-up investors. And these companies need to meet our value criteria. So very big positions in BNP Paribas and in Intesa Sao Paulo and in Credit Suisse and across the channel in Lloyds Bank. What we think are really high quality financial institutions which are well capitalized, which are poised to do quite well when interest rate normalization happens. In fact, they're doing quite well without interest rate normalization, and they're all trading at extremely low valuations based on a lot of this macro noise. So we think if you look around the globe, one of the last big pockets of equity value is in European financials. But we, as bottom-up value investors, are selective. We just don't buy a basket. We look for what we think are the top performers.
David, thank you so much. David Harrow there of Harris Associates, of course, stays with us. Now, coming up on Bloomberg Markets, Andreas Rentschler. He is the Volkswagen Trucks chief. That's coming up at 10:30 a.m. in New York. That's 3:30 p.m. in London. I know they'll talk about trade, tariffs, and the cost of fuel. This is Bloomberg.
Good morning, everyone. Bloomberg surveillance from Milan in New York. Very quickly, markets quieter this morning. I'd note Turkish lira moving and weaker
in Chinese goods next week. Now, we're back with David Harrow of Harris Associates. David, when you look at the rhetoric, so first of all, there's a feeling in the market that maybe it was dialed back a little bit, but do you worry about a trade war actually hurting your investments? I'm thinking of Glencore, but also some of the banks.
Well, this is very binary. If, as a result of the rhetoric, there's a lasting trade war and there's no resolution, and goods and services are prevented from crossing borders efficiently, this will hurt economic growth, which hurts income, which hurts cash flow, which will hurt share prices. That's one option. If, as a result of the rhetoric and the trade war, we have a system that results in a better trade system, a more level playing field with lower barriers, lower tariffs, this will lead to more trade, it will lead to more economic growth, and it will lead to better corporate earnings, which will be good. So it all depends on the end game of the rhetoric and the initial shots of the trade war. The market at first assumed that from now to perpetuity that the result will be negative. And I think there's a reason to believe that there could also be a positive outcome to the rhetoric of the trade war.
What's priced in the markets right now?
I think a more negative outcome is definitely priced, especially when you look at certain sectors. Just look at the German automobile sector as a perfect example. Even though they've had some tailwinds, the weaker euro, lower tariffs in China, by the way, for imports going into China from anywhere other than the United States, the tariff was cut from 25 to 15%. You think these things would be somewhat positive, but because of this rhetoric, you still see a very, very strong negative influence on the price of the German automakers in particular.
On the panel, you said something that actually really, caught my attention, is that we don't talk enough about Japan. Could Japan be the big positive in the next 5 years?
Well, if they ever do things, and there seems to be a little bit of evidence that they're moving in this direction, but of course they move slowly, but if they ever do things to structurally reform themselves, one of the issues Japan has is an aging population and a shrinking population. And you really need some form of population growth, whether it be from allowing guest workers, immigration, higher birth rates. Something has to give. So we have seen some movement there in terms of guest workers. That's positive. And deregulating to increase productivity would be number two. But it's been dead for a long time.
David Harrow with us with Harris Associates with Francine Lacroix in Milan. Let me tell you about GTV Go, your morning briefing, trying to get perspective across equities, bonds, currencies, commodities across the economic market. Here's Turkish lira, log lira. Steal that chart from me. Stay with us and GTV Go. This is Bloomberg. morning, everyone. Bloomberg surveillance from Milan and from New York. Thrilled that you're with us this morning. Let's get a briefing in London, holding court with our first word news. Here's Seb Salick.
Tom, Francine, the Trump administration is giving a pass to a number of made-in-China Apple products in this latest round of tariffs. Next week, the US will slap a 10% tariff on about $200 billion of Chinese-made products. But a number of high-tech goods will be spared, including the Apple Watch and AirPods headphones. Similar smartwatches and fitness trackers like those made by Fitbit will also be spared. For the first time in 11 years, a South Korean leader is visiting the capital of North Korea. President Moon Jae-in was greeted by Kim Jong-un as he arrived in Pyongyang for a landmark meeting aimed at rescuing stalled nuclear talks between North Korea and the US. It's the third meeting between the two leaders this year. Saudi Arabia is now comfortable with Brent oil prices rising above $80 a barrel. That's according to people familiar with the kingdom's view. The world's largest exporter has tried to keep oil below $80, in part because President Trump called for OPEC to rein in price hikes. But now the global market is adjusting to the loss of Iranian oil because of US sanctions. In Wilmington, North Carolina, officials will hand out food, water and other supplies to residents stranded by record flooding. One road to the city was opened briefly. That allowed military trucks to bring in some supplies. Others are being delivered by helicopters. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sebastian Salek, and this is Bloomberg. Tom, Francine.
Sebastian, thanks so much. Now, Deutsche Bank's chief executive has renewed calls for Europe to create a harmonized framework for the banks. Christian Sewing pushed for the banking union during the Bloomberg Capital Markets Forum right here in Milan.
We cannot ignore the fact that after the Brexit, we have 450 million people in the EU facing off giant regions like Asia Pacific and the Americas, and we need one single standard. How can it be that an investor investing into covered bond in Spain has a different documentation than a covered bond in Germany? We shouldn't be surprised that people obviously have more difficulties with our documentations.
Well, we're back with David Harrow of Harris Associates, who, of course, was on the panel where the Deutsche Bank chief executive was talking about the banking union. And we spent a chunk of time talking about the capital markets union, the banking union. And you made an excellent point, David, which was, what if we do it, but actually without looking at the problems of tomorrow? What if it was a backward-looking banking union?
Yeah, this could be a big issue because, I mean, just look at some of the frontier markets like China, where you have a very different payment system forming, and you have lending, peer-to-peer lending, and all these things that if you don't incorporate into your new system, you're already going to be behind the times in your new unified banking system. You know, the old system of someone goes into a branch, deposits money, a loan officer makes a loan, analyzes credit. You know, all of this has been compressed with technology. If through technology someone could lend to a friend, or if there are safe people to deposit money with, or you have all these modern fintech innovations, and if these are not incorporated in the new banking system, it will literally be dead on arrival. So I think any new system, whether it be in Europe or any place, has to incorporate what the information age has allowed and what digitalization has allowed to happen in terms of financial services.
David, you're also a big shareholder in Credit Suisse. There was a story about, of course, the Swiss regulator talking about some of the risks with, so one trader actually in particular. Do you worry about how risk is taken in a lot of Swiss banks? I know this particular case was actually a legacy issue.
This was a legacy issue and brings up to a good point. With today's technology and information and artificial intelligence and all these tools, which, by the way, Credit Suisse has started to implement and to use, you could get much, much better visibility into individuals, into enterprises, which will allow for better decision making. Better information, a clearer picture, will allow for better decision making, whether you're underwriting a loan or underwriting an insurance policy. And that's what I think should be enhanced and encouraged, is the sharing of information, which therefore will make underwriting far more efficient and less risky.
David, when we look at European banking, it's a question of efficiency. Down the income statement of a given bank, can they find more efficiencies, or are they running lean and mean?
Oh, there should be continuous improvement, because as we transition from this old traditional branch network, renting space on the corner, I think when I walked here from my hotel, I probably passed, 50 banks. You know what? When in 20 years, no one's going to walk into these branches. And with new financial payment systems and with new financial technology, so much of this will be done on your smartphone and digital. And so you can do this in a more efficient manner, using less hard assets. And in a more capital-light way, you could present financial services than the olden days of walking into a branch and talking to a person. Then that person takes your proposal and it takes it up the ladder, and in a week or a month, you get an answer on whether your loan's approved. This is all going to change, and has been changing, by the way. It's been changing, in the last decade. And this means that there's continual opportunity to cut costs via efficiency.
Guess what, David? I don't care. We've got to get to the serious matter, and it's only important, David Harrow, if you are in Milan, Italy. We have an un-American scandal, David Harrow, of ties in the National Football League. Your Green Bay Packers had a tie with the Minnesota Vikings. Vince Lombardi's rolling in his grave. How did we come to a point, David Harrow, where we're like Francine's European soccer and we're allowing ties in the NFL?
I agree with you, Tom. Let them duke it out until the end.
Thank you.
What is this ties? And, the whole thing, the whole league has gotten kind of soft anyway. I mean, the product is changing, and perhaps not for the better.
I should have known better. I thought Tom was going to talk about the midterm elections as a big important thing. We'll get to that in a second, I promise. David Harrow there of Harris Associates stays with us. Now, coming up, Alan Joyce, Qantas Airways Chief Executive. We'll ask him about open skies and, of course, what consolidation there is to come. That's at 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg. This is Bloomberg Surveillance from Milan and New York. Tom and Francine, as always. Now, David Harrow, Harris Associates Chief Investment Officer of International Equities, is still with us. He knows the Republican Party like no other, being a donor of the Republican Party for many years. We have the midterms, David, and I don't know whether the rhetoric in the trade is actually just to win votes for the midterms, or whether actually the saga surrounding the nomination of the Supreme Court, Mr. Kavanaugh, will change women's voters' mind about voting Republican. How do you see it playing out?
Well, I think the rhetoric of trade is really to change the trade rules, to bring it more into balance and for the U.S.'s benefit. Actually, it could be hurting votes. And it just, as a free market economist, I'm happy to see that the Democrat Party and the media has now become ardent free traders, because this is something that was lacking for a long time, and I'm glad they finally converted. But I don't think this is necessarily helping Republicans. In fact, it may be hurting Republicans, even though the objective is to deliver a more level trade playing field. But I think, it's all going to be about turnout in the midterm elections. We're, hearing basically most prognostications saying that perhaps that the Democrats are going to regain the House. I think if the middle America doesn't turn out the vote, there's a very high probability of that, because the left wing of the Democrat Party and of the non-Democrat Party, they are going to vote. They're going to have 100% voter participation. The question is that big bubble of middle America, are they going to vote? And I think if they do vote, the Republicans have a good chance of maintaining both houses. If they don't vote, they're going to lose one of the houses.
But what do they vote on? Do they vote on, the fiscal plans? Do they just vote on the economy and how much more money they have in their pocket?
Well, a lot of this does have to do with the economy. And finally, the U.S. economy in the last 2 years has broken out of its rut. And I think it's basically been as a result of policies that have focused on more flexibility in the economy, lower regulatory environment, or at least an attempt to lower the regulatory burdens on the economy, as well as the tax reform that especially impacted corporate investment. So these are the factors that have really helped and brought positive expectations. So people hire more, people invest more. This is what for 8 years was lacking. Again, back to Keynes's general theory.
David, I want to dive into Wisconsin politics. You know it extremely well as an identified Republican, and I think it's a mystery to a lot of Americans and certainly a mystery to our global audience. Tammy Baldwin out of Smith College is the senator from Wisconsin. She's out of the People's Republic of Madison, as you know it. David, how do Republicans buttress up against a Democrat tendency in your Wisconsin? Do they do it with talk show radio hosts that are hard Trump or even to the more populist side of Mr. Trump, or do they have to go mainstream like Mr. Thompson?
Yeah, I think what you're seeing in Wisconsin, by the way, it's a great test case, because you're right, Tom, there's a very progressive element to it. There's a very, middle working class, hard blue collar attitude in Wisconsin, and then you have, of course, a more conservative side. And I think whoever wins the hearts and minds of that hard-working, middle-class, blue-collar, white-collar battle, wins Wisconsin. And in the last presidential election, you saw Mr. Trump do quite well. The Scott Walker, the governor, has run he got recalled. He won, and then he got recalled. He won again, and then he won again, and he's up for re-election again. And I think the results have been extremely positive in terms of economic development in Wisconsin. It's very robust. It's doing far better than the rest of the country. And, you don't have these problems like Illinois has with these huge pension deficits and huge fiscal imbalances. It's a sound, growing place. And, part of it has been as a result of some of the Republican policies. But in order for the Republicans to have instituted those policies, they needed the support of that middle class, which they've got. And the question is this fall where that middle class will go. Again, we know where the Madison people will go. They're going to go to Tammy Baldwin and company. And the question is will the middle class, those people, come out
Right.
and vote for the Republicans again.
Well, let's stay with the the Madison people, the mining people as well, David Harrow. And with you, a mining person, as always, a discussion on miner and trading house Glencore. The chart of Glencore, folks, is really interesting. The stasis of 3 and 4 pence, 300 and 400 pence, I should say. And down we go, the plummet and the recovery. David Harrow, what is the now what for this investment?
Well, the now what is that they've completely deleveraged their balance sheet. They have a little bit of debt, but they're generating a lot of free cash. And the conventional wisdom was in the past that they were going to use that cash for a relatively busy M&A. They've done a little bit of M&A, but I think now the management and the board of Glencore sees the valuation of their own business and how well their own business is doing compared to that valuation. And you already are seeing greater cash flow returns to the owners of the business via dividend, and they recently announced a stock buyback. I believe the stock buyback is still ongoing, but I wouldn't be surprised to see more stock buybacks going forward because of the valuation of Glencore stock. I think they continue to be good deal makers. They haven't made any huge deals. They've made small deals, and they continue to do well in terms of the key areas of which they're, mining and trading. So I think the stock is extremely undervalued at this stage, and the management recognizes that, and perhaps you'll see more capital returns.
David, what if the China slowdown was deeper than we think it is?
The China slowdown will impact, first and foremost, copper prices, because China has been consuming roughly half the world's mined copper. On the other hand, the demand for copper, as we electrify, as we become more of a digital economy, continues to go up between automobiles and housing and all these things. So it's hard to imagine the demand for copper completely falling off a cliff. And keep in mind, copper is just one of 3 or 4 of the key elements that Glencore mines. There's nickel, there's zinc, there's coal, there's cobalt, there's all these other things that Glencore mines in addition to the trading business. But copper is, usually number 1 or 2 in terms of the earners, and certainly a softer China, all else equal, will be a negative, but there are things to make up for that, especially if you believe that we're going to see in the next decade mass electrification of motor vehicles.
David, you're also a big investor in H&M. I think you own, 7 or 8% of H&M?
Yeah, just under 8%.
Just under 8%. Why H&M and not Inditex?
Well, again, we're value investors, and we look at the price we're paying for what we're getting. And Inditex is a very, very well-run and a very good business. However, it trades at a big premium. The reason why it trades at this premium is because H&M has made some stumbles. Our view is these stumbles aren't structural. They made some errors. To me, the biggest error has been their ability to do what they used to do very well, and that's to adapt very quickly around the world to changing tastes and preferences in fashion retail, low-priced fast fashion. And I think as a result of rapid growth, the response times were hindered. And in the last year or so, they have worked quite aggressively at correcting this problem. I think in order to correct the problem, you have to recognize it exists. And we're very happy that H&M seems to have recognized this problem. Additionally, they have gone pretty rapidly into digital. If you look at their online sales, this has been one of the complaints a year and a half, 2 years ago, but we see they have moved quite rapidly into digital. So I think now it's having systems that can accurately replenish where product is needed and when.
But would a trade war actually impact the supply chain of H&M, but also its competitors?
Yeah, so far it hasn't really impacted. When we talk to managements, they have multi-sourcing from all over the world. So far it hasn't impacted. At some point around the edges, it will have some impact. But in terms of fashion, you've been able to see people still source and move product around. These things have a very short duration. Very quickly, you'd be surprised how Vietnam or Turkey or other places are able to supply fashion.
Within fashion, David, as we see this in New York City, where H&M is, a stone's throw from Bloomingdale's, a stone's throw from Zara as well. It's just on to merchandising, but it's merchandising against Amazon. Is Amazon a stock you can own? Is their revenue trajectory so great that even for David Harrow, Amazon's a global value?
We have owned Amazon in the past in some of our global value funds. We did think 3 or 4 years ago that the market, remember, every time they didn't hit a number, the stock would actually be quite weak. And so what one has to do is measure what you believe that they could generate in terms of future sales, net income, and free cash. And then compare it to the price you're paying. And right now, it just looks a bit rich. All the good news is baked into it, despite the fact we're starting to see, in certain instances, the empire striking back. I think retailers are getting a little smarter, and brands have to be careful, of course, not to just lift the surrender flag to Amazon and lose control. They cannot afford to lose control of the connection they have to the consumer. So yes, Amazon is a very viable entity, but remember, all good things come to an end. And as they succeed, the forces fighting against them will learn how to fight against Amazon. And we have seen some success. I mean, look at the TJ Maxx's of the world, and even Inditex, and to some degree, H&M have done pretty well at defending their turf.
David, very quickly here, and to wrap up with this moment of a continued trade war and new efforts by Mr. Trump to go after China, what part of the international landscape will be the opportunity within and out of this trade war?
Well, you all have to assume who's going to get hit first and hardest and the most. Not today, but if a trade war isn't resolved. And now remember, there's two options. The trade war could get resolved in a better trade system, which there'll be a lot of winners, by the way, or there will be a trade war that will not get resolved. Now, one of the arguments Mr. Trump makes is with a $500 billion trade deficit, they're going to kind of get hurt more than we are because they export these huge amounts to the United States. The U.S., the areas where we export to them, there's some of the German automakers, companies like Boeing, and then, of course, there's agriculture. So the question is, well, can China do without Boeing over the short and medium term? Could China do without U.S. soybeans and pork? And I think the reason why they're probably picking the trade war is because the odds are kind of stacked in America's favor of getting some concessions because of the massive imbalance. If there was a balance, there's no sense to have a trade war. I think because of the imbalance of the trade situation and the intellectual property issues, this is very, very important. We need intellectual property protection, which is something that for some reason through the last decade has been ignored by the West.
Very good. David Harrow, thank you for the perspective from Milan, Italy, in our Bloomberg conference. Mr. Harrow, of course, of Chicago and Harris Associates as well. In London, a briefing. Here's Seb Salick.
Tom, the European Union has launched an antitrust investigation into 3 German automakers. Volkswagen, Mercedes parent Daimler and BMW are suspected of colluding on the development and rollout of clean emissions technology. The EU says automakers may have denied consumers the chance to buy less polluting cars. No comment yet, though, from the companies. There's been another big acquisition in the insurance industry. Marsh & McLennan has agreed to buy London-based Jardine Lloyd Thompson for about $5.7 billion. That'll expand its offering of reinsurance and consulting services. The cash offer represents a 34% premium to Jardine Lloyd Thompson's closing price yesterday. And a British cave diver who helped rescue those trapped boys in Thailand has sued Elon Musk for accusing him of being a paedophile. Vernon Unsworth filed suit in California. When Musk offered to send a mini submarine to help in the rescue, Unsworth called it a PR stunt that had no chance of working. And that's the Bloomberg Business Flash. Tom, Francine.
Thank you so much. Greatly appreciate it in London. And now on energy, with the idea of Saudi Arabia comfortable with an $80 price on Brent, our William Kennedy joins us. Will Kennedy, of course, looking at the pronouncements out of Saudi Arabia. What a bizarre headline. Will, where did that come from? Who's comfortable in Saudi Arabia?
The background is that over the earlier part of the summer, in May and June, Donald Trump made clear through his Twitter account that he wanted Saudi Arabia and the rest of OPEC to keep a lid on prices, and our understanding was that that was interpreted in Riyadh as a desire to keep prices somewhere below $80 a barrel. Now, what's happening in the second part of the year is Donald Trump's sanctions on Iran are having a much bigger impact than many people expected on Iranian oil exports. And there's a very good story out today that shows that exports are already, even before the sanctions kick in, down approaching 40% as countries like South Korea cease buying Iranian crude altogether. What that means is the oil market is tightening very, very fast, and that Saudis, when they're talking to people in the market, are saying, look, we might not be able to avoid prices going above $80 a barrel, at least in the short term. The market may have to live with that.
Well, I think OPEC are meeting in Algeria over the weekend. What will they do in terms of production? Will the agreement they have so far with Russia hold?
It probably will, Francine. I'm not sure that we'll see any dramatic changes in policy in Algiers this weekend. What you're likely to see is a lot of complaining from Iran that other OPEC members are doing what the US want and not looking after their fellow OPEC member Iran in this difficult time. But what is clear is that the Saudis and the Russians have an agreement to gradually put barrels back into the market to compensate for Iran production. What today's story tells you, though, is that it's not clear that they can do that at a pace that will keep a lid on prices. Now, that's partly because if Saudi Arabia were to pump every barrel it could clearly replace those Iranian barrels, but it would also remove any spare capacity from the market, which would also send prices higher. So their policy options are limited for really taking the sting out of Iranian sanctions price-wise.
Will Kennedy, thank you so much. Greatly appreciated this morning on petroleum and, of course, the idea of $80 Brent. And I should look over here at the Bloomberg terminal with Brent crude up a nice $1.22 right now as well. This is a real treat. There were 842 lookbacks to Lehman. Noel Rubini did something different. How about Professor Rubini looking forward to 2020? Coming up, without question, our interview of the day, Professor Rubini on the view out to 2020. And this, of course, is with the heritage of Noel Rubini and his view forward in 2005 as well. Much more to talk about with Noel Rubini. We'll do that. Francine Lacroix in Milan. I'm Tom Keene in a beautiful New York. Please stay with us. This is Bloomberg. this morning, forget 200 billion and 260 billion of goods. Your new tax is 20 billion, becoming 50 billion, who knows, down the not-so-Silk Road, maybe 116.75 billion in new taxes. It's the Trump math of the Trump trade war. Well, no word from Beijing, but they will retaliate. Quiet markets as Turkish lira weakens. Mr. Erdogan distracted as he and Mr. Putin agree to demilitarize along the Syria border. And in this hour, we search for the perfect 2020 storm. We do that with Professor Rubini. Good morning, everyone. This is Bloomberg Surveillance. We're live from our world headquarters in New York. I'm Tom Keene in Milan at our European Capital Markets Forum. Francine Lacroix. Francine, what did you learn in Milan?
Well, I learned, first of all, that there's a little bit of angst amongst European chief executives that the U.S. investment banks are stronger than them. I also learned from David Harrow that actually he's adding to some of the assets he owns here in Europe because he sees value. What I also learned is that not everyone on my panel thinks that the banking union will take a shape that will be useful for market consolidation. We also spoke to the finance minister, at least he gave the keynote. So we'll talk a little bit about that shortly, Tom.
Oh, very good. And Mr. Saving of Deutsche Bank with comments as well. Now to our first word news in London. Here's Sebastian Salek.
Tom, Francine, President Trump has ramped up the trade war with China. The U.S. will impose a 10% tariff on about $200 billion in Chinese goods next week and more than double that rate next year. Beijing today again vowed to retaliate. If that happens, the U.S. will impose further tariffs on about $267 billion of Chinese imports. President Trump says China has been unwilling to give fair and reciprocal treatment to American companies. A Russian military reconnaissance plane has been shot down mistakenly by Syrian forces, and Moscow blames Israel. The Kremlin says the Syrians were fighting off an attack by Israeli warplanes, and the Russian plane was caught in the crossfire as it returned to base. All 15 people on board were killed. It'll be high drama on Capitol Hill, an explosive public showdown with a seat on the Supreme Court at stake. The White House's pick for the High Court, Brett Kavanaugh, and the woman who accuses him of a decades-old sexual assault will testify next week before a Senate committee. The hearing has delayed the Republican plan for the panel to vote on the nomination this week. America's allies in the Middle East are trying to contain the fallout of President Trump's attempt to rewrite rules that have underpinned peace talks for decades. Among them, the U.S. has cut off funding for Palestinian refugees and recognized Jerusalem as the capital of Israel. Bloomberg spoke with Egypt's foreign minister.
I think there's an obligation on everyone to avoid violence, to work to achieve stability and to consolidate the peace. But definitely there are many pressures that are created by unilateral decisions.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sebastian Salek, and this is Bloomberg. Francine, Tom.
Seb, thanks so much. Let me look at the data very quickly here. Just one screen today. Equities, bonds, currencies, commodities with a lift to the market, up 6. Euro churning. Brent crude now with a lift off of the Saudi comments on $80 per barrel. And I noticed Turkish lira 6.37 as well. Let us go right now, and very importantly, to a discussion on trade, and there is no one better to do that with than Nora Rubini of New York University. Professor Rubini was acclaimed at getting out front of the crisis of 2007. I personally did that with him in Davos at one point in 05 or 06, and it's thrilling to have Nora here on this important day. Let me bring up from end to current in Hong Kong a chart which is great because it's hard to read. I really mean that. It's hard to read this chart. Bring it up right now on radio. It is the massive disproportion of U.S. imports of China stuff versus what they take from us. Here we are with the tariffs here, the tariffs there, and China is just tiny, tiny, tiny. Professor Rubini, this is the arch imbalance of President Trump's certitude. I heard this from Lawrence Kudlow yesterday at the Economic Club of New York. They speak of us as equals in trade dynamics. We're not, are we?
We're not equal in terms of trade dynamics, but China has many other ways to retaliate. Of course, they've only 130 billion of imports from the U.S., while the U.S. imports from China more than 500 billion. But let's not forget that the U.S. firms, whether it's Apple, GM, hundreds of others, have done hundreds of billions of dollars of foreign direct investment in China. In the past, when China had friction with Japan or Korea, they took action against these foreign investments, and therefore they can retaliate, and they're going to start doing it in many different ways. China can also retaliate by letting its currency weaken. The RMB has already fallen 8%, and then there's the nuclear option of dumping U.S. Treasury. I don't think that's likely. So the idea that there is an imbalance and China cannot retaliate, I think it's actually a wrong argument.
Your heritage of being born in Istanbul, of study in Milan, study with Jeff Sachs at Harvard, your international sense, your old world sense is a study of how China will react. Jonathan Spence 101 at Yale University. How would you presume that China will react to this approach by Mr. Trump?
First of all, the Chinese can be flexible. They need to do reforms, and some of the reforms are going to have upper hand. But China and President Xi Jinping cannot lose face. And what happens is that the United States is starting not just a trade war with China, but geopolitically wants to contain China. China has never given up on its own Made in China 2025 program, for example. And therefore, the risk is that if you try to contain China, China is going to become actually more aggressive and less cooperative. And I think that's what's going to likely happen. They're going to retaliate in many and different ways. So this is going to be counterproductive.
Hi, Nouriel from Milan. Do we underestimate the dangers of a Chinese GDP that is slowing down, or even the size of shadow banking in China?
Well, there has been a slowdown in China, but every time there is excessive slowdown, after tightening of monetary, fiscal and credit policy, there is an easing of monetary, credit, fiscal policy. China has not run out of tools. Yeah, there has been a significant correction of the stock market, 25%, but the wealth effect is small. Yes, default rates have gone up because they are reducing leverage and allowing more flexibility. But, you know, that's manageable. And the currency weakening actually is occurring right now when they have capital control, so it's not like a free fall like in 2015 and 16, and that actually helps China. You know, the currency goes down by 8%, the U.S. imposes tariffs of 10%, is a bit of a wash in terms of the competitiveness. So China has the macroeconomic policy tools to manage its own slowdown. Of course, China so far has kicked the can down the road and not dealing with too much and too fast enough with the issues of overcapacity, over leverage and debt. But China is going to do it gradually, and China is going to take the long-term view. China is going to be in a long-term competition with the United States. Once Mao was allegedly asked what he thought of the French Revolution, he said, too early to tell. And China takes an approach that is decades long. We have midterm election, we have election every 2 years. China has no elections, so they can take control of their own policies and face and threaten the U.S. over the medium-long term. So they may win this war.
Right. But Nouriel, I guess what I'm trying to get at is they do have the tools to manage a slowdown, but if they only focus domestically on what they need to do they let the emerging markets down? And what does that mean for markets overall?
Well, you know, of course, the emerging markets are hurting right now for a number of global factors. China is one of them. The risk of trade wars is one of them, either directly or through China. But then U.S. Fed policies and fiscal policy matters. Higher long and short rates, stronger dollar, and a stronger dollar means a lower dollar price of commodities. So these are the global factors that all EM are facing. But if China were to react to the risk of a trade war by boosting domestic demand and maintaining its own economic growth closer to their 6.5% target, and recently actually they're growing faster than 6.5%, then that's going to be a backstop for emerging markets. So of course, if China were to go into a hard landing, then that's going to hurt emerging markets, but also the U.S., Europe, and the world economy. But in my view, China has still some of the policy tools to manage that economic slowdown.
I saw Ambassador Hormats yesterday, Robert Hormats, who assisted with Secretary Clinton, and there's someone with a certain set of views, and I think of someone he works for, Dr. Kissinger, or Robert Kaplan, who was my book of the summer, writing about China in the Pacific Rim. All of that is a neo-realist view. What's the neo-realist response to a president who wants to put on layers of taxes called tariffs?
Well, the Chinese know that effectively, by imposing these tariffs on China, we're going to increase the cost of lots of goods up to $500 billion that are used by U.S. consumers. And the fact that, for example, they may introduce first at 10% and push it to 25% only January 1st is they don't want to have a sticker shock for consumers during the holiday period as well.
I don't mean to interrupt, but this is critical. This is Rubini 101 at Stern School, New York University. Yeah. Are we able to say that within all this mumbo-jumbo, a tariff is a tax on an American consumer? Is that a safe statement?
Yeah, it's absolutely true. You know, whenever you impose tariffs, you're increasing the price of imports, certainly for consumer products, but also for a variety of other intermediate products that affect also the business sector. But this first impact is a tax. And by the way, it's a very regressive tax because those kind of consumer goods that we buy from China are usually bought at Walmarts and other types of firms and are bought by lower income individuals. So not only is it a tax, but it's an extremely regressive tax.
And this is important, Francine, with you and Milan. I mean, the bottom line here is this is not a tax on Gucci, is it?
Well, let me ask Nouriel, away from Gucci, is this a tax that could actually plunge the U.S. into a recession in the next 18 months?
No, I don't think that that alone is going to plunge the U.S. into a recession, even if I prediction that a variety of other factors can push the U.S. into recession by 2020. Monetary policy, fiscal policy, the trade war, other frictions, what's happening in the rest of the world. But certainly, I think that people underestimate the impact of this trade war on the economy because they say the trade impacts directly and indirectly are too small to matter. That's not true because, first of all, you have retaliation, and as long as you have retaliation, the impact is bigger. Secondly, is a tax on consumer reduces disposable income. It's going to slow down consumption. 3 is going to affect both business and consumer confidence. Additionally, it's going to push down emerging markets, are going to hurt them, it's going to push down the price of commodities. And finally, it's going to have an effect also on investors' confidence. The stock market in China has gone down 20% this year under the threat of trade wars in February, later in the summer. The U.S. market was going down as well. So if there's going to be a generalized trade war, not 50 billion, but it's going to be 500 billion, and there's going to be retaliation, there's going to be other things, that's going to be a bigger impact. And right now, this is not just a trade war. The U.S. is going to impose restriction on inward FDI into the U.S. by China to outward FDI by United States firms. They want to have all U.S. firms getting out of China. They're going to disrupt global supply chains, technology transfer, and so on and so on. So this is not just about trading goods. It's about technology. It's about IP. It's about FDI, inward and outward. And you're going to a world that's going to become deglobalized, it's going to become balkanized, in which these frictions are going to have a negative stagflationary impact of reducing growth and increasing inflation globally. That's the danger of this trade war.
All right, well, that gets us started. Certainly, Nouriel Roubini there of Roubini Macro Associates stays with us. Now, coming up next, Corrado Passera. He's a SPAC's chief executive and founder. It's a challenger bank. We'll talk about European banking and Italian banks. Not only Italian banks, but also the upcoming budget law. This is Bloomberg.
This is Bloomberg Surveillance. I'm Sebastian Sarlik, and let's get the Bloomberg Business Flash. Shares of Danish jewellery maker Pandora are rising. An Italian newspaper reports that KKR and Bain Capital are among the private equity groups that could be studying the company. The paper says Pandora is a perfect target and that activist funds may also try to buy a stake in the company. One of the biggest legal battles in the tech industry may be nearing an end. Qualcomm CEO Steve Mollenkopf tells Bloomberg that his company and Apple now have an increasing incentive to settle their fight. The two companies will soon face legal proceedings in the US, China and Germany. Qualcomm and Apple have sued each other over patent infringement and licensing fees. And the billionaire founder of Japan's second-largest e-commerce company will be the first paying passenger to fly around the moon. The president of Start today, Yusaku Maezawa, will be on board a rocket built by Elon Musk's SpaceX that's scheduled to blast off in 2023. The spacecraft will make a week-long loop around the moon, but no word what Maezawa is paying. And that's the Bloomberg Business Flash. Tom, Francine.
Thank you so much, Sebastian. Now, in 9 days, Italy's populist coalition government will present its new fiscal and growth targets. Now, following pledges by the finance minister Giovanni Tria and deputy prime ministers Luigi Di Maio and Matteo Salvini to stick to European Union rules. Now, Italian bond yields actually fell. Investors appear to be staying the course. Well, I'm pleased to be joined by Corrado Passera. He's SPAC's chief executive officer and founder, former Italian minister of economic development, and for almost a decade, the chief executive of one of Italy's biggest banks. Still with us in New York, Nouriel Rubini of Rubini Macro Associates. So thank you for sticking around, Nouriel. Welcome to the program.
Thank you.
Corrado Passera, when you look at Italy, there was a lot of anxiousness out there in the markets over the summer. Do you think now investors' concerns have been allayed because actually this government, like any Italian government, needs the markets?
Absolutely, and anxiety was justified because of some of the announcements that were made in the first weeks after the creation of the government. But even today, the statements, the announcements that Tria made were the right ones, because he talked about growth and growth through investment. Increase the investment, both public and private. That's the key word, in my opinion. And he said very clearly, we will stick to our commitments in terms of debt reduction. So growth, investment, commitments on debts is the combination of things that markets expect. Then we will look at the stability law in the details, but these three main announcements are good ones.
Is there a discount to Italian banks because of the political situation? You're actually starting a challenger bank. It's a niche bank that actually tries to lend to SMEs.
Challenger and niche are two concepts that probably do not convey the right message, because niche means small and it's not the kind of...
Well, for now it's small.
The bank is small, but the market is really booming, and an untapped need for financing with SMEs is very big. On the other side, challenger gives the right message, but we will be a specialty bank. I mean, we want to do only a number of things, 3 asset lines with SMEs that are very interesting, profitable, and useful for the country, and we will do it in a totally new paradigm way. So it's at the end is a challenge to others, but in a number of ways we will also collaborate with incumbents, because we will buy UTPs, unlikely to pay, we will buy NPLs, we will manage to help second-tier SMEs that have potential to grow. So it's more than that.
Okay, you didn't answer my question on Italian banks. I'll come to you in a second.
No,
but actually,
right.
Nouriel, what's your take overall on Italian banks and the Italian GDP? Should we worry about it, like Mr. Pierre Moscovici tells us, or should markets remain cool about it?
Well, there are some positive about Italy, is that the market constraints in the EU are going to force them to keep the budget deficit for next year around the current level as a share of GDP. That's the positive, and the Euro membership is not on the table, so they've been controlled and contained by market discipline. However, spreads on Italian debt are still 250 basis points, first of all. The economy is slowing down very sharply. And even if they want to maintain the deficit around 2% of GDP, it's going to be problematic because they want to spend more and cut taxes by 1%. They don't know how they're going to finance it. They might fudge it by making estimates about growth for next year too high, 1.6, when market estimates are more like 0.8. And many of their policies are leading to a reduction of potential growth rather than an increase of potential growth, reversing the reform of pension, restricting the labor market flexibility, and so on and so on. So actual growth is falling, potential growth is falling, real rates are higher even before the ECB has ended up QE, and a loosening of the primary balance implies that it's going to be very hard for them to stabilize the debt ratio and reduce it. It might go higher, and therefore Italy is still on a knife edge situation from an economic point of view. And there is still political risk. Salvini is popular, and after the budget law is passed, he might go to election. And that's going to create more uncertainty. So in the short run, I don't think that the spreads are going to widen. Things are going to stabilize given the fiscal commitment. But Italy is facing a number of economic, fiscal, and financial challenges over the next couple of years.
I want to explain this distinction. Mariana Mazzucato and Kenneth Rogoff sat right where you're sitting 5 or 6 days ago. And sometimes the body language, Jason, bring it in here. The body language we see on camera, like if I'm like this, I'm like really bored, and then you sit up straight and listen. No, Ken Rogoff sat up straight when the topic was Italy. Why is a guy like Ken Rogoff totally focused on Italy?
Well, it's not just Ken Rogoff, it's also the markets. You know, when a couple of weeks ago, Salvini and Di Maio said we're going to increase the deficit from 2 to 3. The spread suddenly overnight went from 250 to over 300, and they flip-flop in 24 hours. And they decided then to say, no, we're going to stick to the EU rules. And therefore,
is it the heritage of Italy? Is it the adjacency of Italy? On the Bloomberg screen, it's a G7 country. Why the focus on Italy?
Well, Italy has now become, for the first time, a country run by populists. Italian debt is 135% of GDP and is the largest debt in absolute terms after US and Japan in the world economy. Greece could be bailed out by a Troika program, was after all only 200 billion euro public debt problem. Italy is 2.3 trillion public debt problem. So Italy is too big to fail, but also too big to be saved. There is no Troika program that could backstop Italy if Italy goes in the wrong direction. Therefore, Italy is systemic for Italy, for the Eurozone. If Italy were to leave, there'll be a systemic shock to the Eurozone, and it could be a threat to the global economy. That's why people are interested in Italy.
Francine?
Right. Yeah, Nouriel, I would go a step further in saying this is not, an obsession on Italy. It's also an obsession with Italian banks. Is there a problem with Italian banks? Do the markets actually discount them and forget sometimes, all of the work that's done on non-performing loans over the last 3 years?
No, but Nouriel is right in listing the risks, and banks obviously are a sort of proxy of the old country. So if all the wrong things are done, we will have troubles. But I don't expect all the wrong things will be done. We all know that the so-called government contract that the two coalition parties have agreed upon is not feasible, and it will be implemented, in my opinion, only partially and only gradually. Having said that, banks have gone through at least 3 main crises: the financial asset crisis, reasonably well managed; the credit asset crisis, and we are digesting it. We are getting out of it. I mean, NPLs and UTPs are still an important component of our asset balance sheets, but they are being diluted. We had a number of single banks crises, some of them very, very bad ones, but now sold, partially paid by the taxpayers, but now gone. And now we are going through the more structural transformation, reshaping of the industry, because digital technologies, regulation, the entrance by big tech companies in the credit world, and the monetary policies are making the traditional business models very unsustainable. But new winners are coming in that area.
Okay, but do we need a banking consolidation in Italy? It's almost difficult to deny that actually Italy's not, overbanked.
No, it's not overbanked, but...
It's not overbanked?
It's not overbanked in the sense that we will have a new mix of players in the next years. Small and medium-sized banks, too generic and too traditional, to sustain the competition will get out of the market for sure, and some of them through consolidation. Some of the big ones will keep investing in innovation and they will be players. Some entrants from other industries will be players, but we will certainly, we can expect a number of specialty players, new paradigm kind of players in terms of business system to enter the market. And so the market will change a lot. In terms of consolidation, Italy has been one of the countries that have consolidated most. I mean, take, for example, Germany. I mean, much more than Germany. And now with the law that has been passed on Popolari and rural cooperative banks, 300 of them will become 3. So at the end, we will have in the round of 100. That still is a large number, but if compared with the 1,800 banks in Germany, I mean, it shows that we have done a good part of the road ahead.
Nouriel, do you think we'll see a banking union in our lifetime, and will that help with consolidation?
Well, I fear that for the time being, there is not going to be a full banking union in the Eurozone. Even the proposal for a common deposit insurance scheme in the Eurozone is being pushed back by Germany. Germany fears that risk sharing is reshifting and a fiscal union effectively becomes like a transfer union. And given now there are political uncertainties in Italy, Germany is pushing back. Even the limited proposals of Macron have not been accepted. They pushed them from June to December, and then there'll be EU parliamentary election. And therefore, any agenda about finalizing the banking union and increasing the element of risk sharing is not going to happen until Germany and other parts of the North are going to have more security about what's happening in Italy in the periphery of the Eurozone.
Nora, let's continue here. Nora Rubini with us in New York. And we thank Corrado Passera in Milan. Please stay with us. GTV Go, your charts, your briefing, including, we did this for Nouriel, log Turkish lira, logarithms, Turkish lira, Istanbul. This is Bloomberg. morning, everyone. Bloomberg surveillance from Milan, from New York. Trade in China, trade across the Pacific Rim, NAFTA, Mexico, Canada, and of course the knock-on effect to a major American trading partner in Europe. Guess what? The story's about Washington. Now joining us, our chief Washington correspondent, Kevin Cirilli. Kevin, both Bloomberg and the Washington Post talk about an immediate China response. What will we see from China, and how will the Trump administration react?
They're going to respond with tariffs of their own, Tom. But how the administration is going to react, whether or not they add additional tariffs to the $200 billion worth of tariffs that were formally announced last night that go into effect on September 24th, we don't know. And in fact, the administration officials that were on the briefing of this last night, they didn't say. We should also note that there is no scheduled meeting between U.S. and China officials at this time. So there doesn't seem to be a clear endpoint. Yesterday, I was talking with some Republicans inside the Beltway, and they don't know what the end goal is between these negotiations.
Kevin Cirilli, Lawrence Kudlow yesterday with Rebecca Quick of CNBC in a confab among the gathered elite in New York, Economic Club of New York. He circled back constantly and constantly and constantly to give us time. Do they have the time allotted? Does Capitol Hill, are the people of the Midwest, agriculture, are all the different trade people in Texas, in California with China, are they going to give Lawrence Kudlow and Donald Trump time?
No. And in fact, I think that you've seen from Republican lawmakers who have tried to urge the president to reconsider some of how he's negotiating trade policies, but they like what he's done with China in particular on the issue of intellectual property. But the second point that I would make very quickly, Tom, is that really the base of the Republican Party has not deserted the president on this, particularly on the issue of agriculture. And you would maybe suspect that, but we haven't seen that. So while politicians and C-level executives are making one argument, it's the constituents in the base of the populist movement that truly have not deserted the president as he's negotiated on trade.
Kevin, talk to us about the midterm. Does the president, think about the midterms in everything he does? Of course, we talked about Hurricane Florence, we talked about Kavanaugh, we talk about everything. Is his optic just getting midterm election wins?
I think that definitely, absolutely, 100% that the president and the administration are focusing on the midterms, as is all of Washington, D.C., in terms of how this is going to play out. And I was speaking with Democrats and Republicans yesterday, Francine, who actually are making the case that they believe the administration feels that the issue of trade is going to help motivate some turnout, get to the polls in states like Ohio and Michigan and Wisconsin, where a lot of the voters who candidly were deciding between Bernie Sanders and Donald Trump are motivated by the president on how he has negotiated these trade deals. I would note that the issue of Kavanaugh, Judge Kavanaugh, we're now hearing that there could be a public hearing next Monday, that might motivate progressives to get to the polls in the midterm elections.
Kevin, thank you for the update. Kevin Cirilli, our chief Washington correspondent in charge of tit-for-tat analysis between China and New York. In London, with our first word news, here's Sebastian Salek.
Tom, Francine, the Trump administration is giving a pass to a number of made-in-China Apple products in this latest round of tariffs. Next week, the US will slap a 10% tariff on about $200 billion of Chinese-made products. But a number of high-tech goods will be spared, including the Apple Watch and AirPods headphones. Similar smartwatches and fitness trackers, like those made by Fitbit, will also be spared. For the first time in 11 years, a South Korean leader is visiting the capital of North Korea. President Moon Jae-in was greeted by Kim Jong-un as he arrived in Pyongyang for a landmark meeting aimed at rescuing stalled nuclear talks between North Korea and the US. It's the third meeting between the two leaders this year. Saudi Arabia is now comfortable with Brent oil prices rising above $80 a barrel. That's according to people familiar with the kingdom's view. The world's largest exporter has tried to keep oil below $80, in part because President Trump called for OPEC to rein in price hikes. But now the global market is adjusting to the loss of Iranian oil because of US sanctions. And in Wilmington, North Carolina, officials will hand out food, water and other supplies to residents stranded by record flooding. One road to the city was opened briefly. That allowed military trucks to bring in some supplies. Others are being delivered by helicopters. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sebastian Salek, and this is Bloomberg. Francine, Tom.
Seb Salek, thank you so much. It is one thing to talk about immigrants, for we are all immigrants. There is actually the generational doing of it. One person that knows this cold is Nouriel Roubini of Roubini Macro Associates and a course at New York University, one of the world's acclaimed international economists. And now we speak with where he started out, Istanbul in Turkey. How long were you in Istanbul for? A cup of coffee?
Well, I was born there, and this summer I was there for about a week. I went to Istanbul, I went to Ankara, I saw the new senior policymakers, and so on. And I was there right at the time where the currency was plunging from 5 towards 7.
Is it traditional economics? Is it Irving Fisher economics, where right now the currency links right into interest rates, links right into inflation, and shows potential dampen GDP and, frankly, crisis?
Yes, there is a severe risk of a balance of payment crisis, of a sudden stop of capital. There's a huge amount of dollar debt, especially in the banking system, the corporate sector, and the currency going from 3 to 5 to 7, now is around 6.3, implies a massive negative balance sheet effects on the corporate and the financial sector. That's why actually the currency is not leading the fall of the currency to an economic stimulus. If anything, the economy now is going into a recession. The latest economic data suggested that Turkey is going to have a credit crunch, is going to enter a recession by probably the third quarter of this year. So you have the impact that the currency depreciation with dollar debt is contractionary rather than being expansionary. It leads to higher inflation. It forces the central bank to hike rates. Finally, they've shown some independence. But monetary tightening is not sufficient because you had massive fiscal, quasi-fiscal and credit stimulus in the economy that led to overheating for him to win the election, and therefore now they have to tighten also credit, fiscal and quasi-fiscal policy. But they have a regional election next March, and therefore they want to avoid the recession because they want to win those important local elections, and therefore they're not tightening the fiscal and credit reins as much as they should.
Right. So, Nouriel, what will it take to put Turkey on a more stable footing? It seems that the central bank actually did quite a lot, and yet investors aren't convinced.
Well, in Argentina, the policy rate were pushed to 60%, with inflation slightly above the one of Turkey. In Turkey, finally, they pushed them from 17 towards 24%. That's a positive, especially because it signals that the central bank is now slightly more independent, even if Erdogan, the president, keeps on attacking the central banks and the interest rate lobby. But as I pointed out, you had massive imbalances, both internal on the fiscal side and the savings and the spending of the private sector, and external with a very large current account deficit. Therefore, you need monetary tightening, probably more because inflation is going to rise, fiscal tightening and credit tightening. But that implies you have to accept a recession. The economy is already going into a recession at a time where politically his support is deriving by having strong economic growth, and you'll have election coming next spring. So I don't think they're going to be doing enough, because if they're doing enough, they're going to plunge the economy into a recession. At this point is unavoidable, and therefore the weakening of the currency is going to continue to occur even after this monetary tightening. We've seen in the last couple of days as the currency is weakening again, and there are political uncertainties as well. So they're not doing enough. Argentina was at least promising enough, and the currency is still weakened. Turkey is not even promising to do what's necessary. Yes.
But so how do you find the floor in Turkish lira? Do you assume that it just continues falling until politically, I guess the ruling class accepts that they could go into recession?
Yeah, first of all, inflation is going to go higher given the currency depreciation. So even 24% on rates is not enough. They'll have to tighten more as inflation goes higher. And as I said, the main imbalances are not just on the monetary side, but fiscal, quasi-fiscal, and credit. And that slowdown has not occurred. They've promised a fiscal tightening, has not occurred. And politically, for them, accepting a recession is going to be very painful. And they're going to try to kick the can down the road at least until March of next year, until after those elections. Given that situation, I think the currency can weaken in nominal and real term, even if it has fallen significantly. It can fall more if inflation gets higher. So I don't see yet the bottom for the Turkish lira.
Okay, Nora, I want to talk about this right now because a lot of people say, what's the big deal with Nouriel Roubini? Here's why Nouriel Roubini's famous, going back to 2005 and 2007. I'm going to drive it forward. This is a fancy physics question, which is a sinusoidal function, a sine wave function. And what Nouriel Roubini's famous for is this A right here. which is the amplitude of a given wave. And Nouriel, this goes back to 2006, which was the amplitude of the crisis that everybody underestimated. Is that where we are right now, where we really don't understand the amplitudes of Turkey, the amplitudes of Argentina, or frankly, the amplitudes that could have come out of this trade war?
Yeah, we don't know it because we don't know what the policy responses are going to be in Turkey and Argentina. Therefore, the market, given uncertainty, they tend to overreact, and there is overshooting of prices. In the case of the trade war, we started with 50, then 200. Now they're saying 267. Then it's not going to be just trade. Okay, it's going to be technology, foreign direct investment. Could be a global trade war.
Because of time, Nouriel, this is a critical question. Then do you overlay a new kind of shadow banking where we all underestimate the A in that equation, the amplitude of a potential shock? Do you know the shadow banking right now?
Well, you know, the shadow banking in China is in serious trouble. They've tried to rein it in, but we have also shadow banking in the global financial system. People say the banks are now have more liquidity, less leverage, more capital. Yes, but a lot of financial transactions have gone in the shadow banking system globally. Debts have been rising, leverage has been rising, and therefore we're always fighting the last war. The last war was the banks were the problem. This time around, it might be the rest of the capital markets, could be the shadow banking system, certainly in China, but even in the United States. You have algo trading, you have all these credit funds that are open-ended and are illiquid. You have a variety of things like the market makers are not there, they're not warehousing, the broker-dealers are not doing those activities. Those are sources of illiquidity and amplification of economic and financial shocks over time.
And not only, Nouriel, that, but the dollarization, which maybe we'll have time to get into. Nouriel Rubini with us, Rubini Macro Associates, Tom Keenan, New York, Francie Lacroix in Milan. For your briefing, coast to coast and indeed worldwide. Bob Moon, Karen Moscow on Bloomberg Radio. They do Bloomberg Daybreak. Listen in. Please stay with us. This is Bloomberg. you 10 years on from Lehman and then 10 years forward as well. Let's do that with a brilliant essay. Rosa and Rubini writing in Project Syndicate. The space for fiscal stimulus is already limited by massive public debt. Mr. Kudlow didn't want to talk about that yesterday. Unlike in 2008, when governments had the policy tools needed to prevent a free fall, the policy makers who must confront the next downturn will have their hands tied while overall debt levels are higher than during the previous crisis. This is a surprising essay, Nora Rubini. Why will the policymakers have their hands tied? I thought regulators were doing a great job.
Well, on fiscal policy, we're running now another $2 trillion fiscal deficit over the next 10 years. So when the next recession comes, higher deficit, and that implies that we don't have room to do stimulus. The Fed is not going to have much headroom, even if we reach 275 before the next recession. Typically, you have 500, 600 basis points.
Right.
So you're going to go to zero. Forward guidance is not going to be enough. And doing quantitative easing is going to be more difficult. And then the political willingness to backstop the banks or corporates is not going to be there. There's a populist backlash. And many countries in the world are insolvent governments, so they cannot even bail out their own firms, even if they want to. So all the policy tools are going to be much more constrained next time around in a world in which overall debt levels are higher.
Of these menu of items,
Yes.
the one that is immediate is yesterday, Mr. Kudlow made very clear that he believes that you can grow your way out of a deficit. He cited not once but twice in his conversation at the Economic Club of New York that they've already modeled out new Trumpian growth that will bring in taxes to pay the deficit. I know you don't buy that.
Yeah.
I didn't think the audience bought it as well. Push against the idea that you can grow your way out of a deficit. What does history tell us?
Well, it's voodoo economics. Reagan tried it, Bush tried it, and this time around, look at the latest number. The deficit since last year has already in August doubled. And it's going to double because you have a $2 trillion budget deficit. Next year, we're going to have a budget deficit that's going to be overall $1 trillion, the deficit. We're going to add to the public debt $1 trillion per year for as far as the eye can see. So it's totally voodoo economics. Of course, you cut taxes. There is some short-run improvement in growth, but it's going to be minimal. The CBO estimates over a decade, 0.1% increase in GDP level. Okay, there's nothing, it's close to zero. Then you'll have a fiscal drag through the effect on long-term short rates and the dollar. There'll be a crowding out of that growth. And to contain it, then they have to increase rapidly taxes on the household sector starting in 2024. So there'll be a massive drag starting then, but there'll be already a fiscal drag in 2020. The economy is growing now 3 rather than 2, because this year and next year there's a fiscal stimulus. By 2020, that stimulus becomes a small fiscal drag. So not only are we going to go from 3 to 2, we're going to go below 2. We're going to go towards 1.8. So it's an artificial fiscal stimulus, unsustainable. Peacetime, first time ever, during not a recession, and it's going to crowd out economic growth over time.
What does that mean for yields, Nouriel, Treasury yields?
Well, over time, the combination of U.S. monetary policy and the Fed tightening and this fiscal stimulus implies the long-term interest rates have gone higher, and they're going to keep on going higher. Now, what keeps a lead right now on long-term trades in the U.S. is that while the Fed controls the short end of the yield curve, ECB, BOJ, and other central banks are controlling the long term of the yield curve, because there is still unconventional policies in other parts of the world. But guess what? The ECB decided we're going to finish QE and then start normalizing rate next year. Other central banks in Europe are going to do the same thing. Therefore, global liquidity is going to start to shrink. And therefore, once that happens and you still have the stimulus, U.S. long-term interest rates are going to tend to go higher. Short-terms are going higher. The dollar is going to strengthen. The current account deficit is going to become higher. And therefore, there'll be a crowding out by late next year of that economic recovery into a fiscal drag in 2020, into a tightening by the Fed towards 3.5%. That they have to go towards 3.5% because the fiscal stimulus leads to an overheating of the economy. And that tighter fiscal policy and tighter monetary policy could plunge the economy into a stall by 2020. If you add the trade frictions, the capital market frictions, the fact there'll be a slowdown in emerging markets, in Europe, in China, and the fact that asset prices, as we know, are frothy. Profit P ratios are 50% higher than the historical average. So when the market see the slowdown occurring into 2020, there'll be a market correction that's going to have a negative wealth effect. So you might have by 2020 a perfect storm for the US and the global economy.
Okay, will the central bank have enough tools to deal with this perfect storm if we were to have it by 2020?
I think there are differences this time around, is that we are having policies that are stagflationary, that reduce growth but also increase inflation. For the last decade, all the shocks were stagflationary, meaning lower growth, lower inflation, and therefore central banks were doing even more and doubling down on more unconventional policies. But if you're going to have trade restriction, if you are going to have restriction to capital flows, if you're going to have restrictions to FDI and technology transfers, if you're going to have restriction to migration, if you're not going to invest into renewable resources, if you're not going to invest into infrastructure and there is no plan, all those shocks are stagflationary, are going to reduce growth, are going to force inflation higher, and when that happens, when the economy is overheating, that's going to force the Fed to hike more, faster and sooner rather than ease. As it happens whenever you have had a policy shock that has been stagflationary, like the oil shock 73, 79, 1990, because if you don't tighten, inflation expectations go higher, and then you're in a worse situation. So the type of policy that is going to be followed by the U.S. are going to imply forcing the Fed to have to tighten rather than ease, even if growth slows down, because inflation expectations are going to go higher. That's a difference in the ability and willingness of the Fed and other central banks to react to that economic slowdown. It's driven by negative supply-side shocks.
All right, thank you so much for all of that insight to Nouriel Roubini there of Roubini Macro Associates. He stays with us. Now, coming up on Bloomberg Markets, Liam Fox, the UK Secretary of State for International Trade. He'll have a thing or two to say about Brexit, I guess negotiation, what kind of divorce he sees. That's at 1:30 p.m. in New York, 6:30 p.m. in London. Of course, I'm sure they'll also ask Mr. Fox about a challenge to Premier Miss Theresa May's leadership. This is Bloomberg.
Have a target of doubling our free cash flow. So we generate about $1.4 billion in free cash flow. Scripps generates about $8 billion. And we think we can get to 2.8 or 3 through revenue synergies by coming up with a lot of cost synergy, mostly cost synergy. And so in a turbulent time, if we can emerge with almost $3 billion of cash, it creates like a moat in a turbulent time. We're different than most media companies in the world, and there are a lot of great companies. But whether it's Disney or whether it's Rupert or Comcast, NBC, CBS, they're mostly in the scripted and movie business. Netflix, Amazon, that whole side of the business is focusing on, as if it was a soccer field, the ball is scripted series and scripted movies. So it's very crowded. It's getting very disrupted. And, you know, the number of scripted series have gone from 200 to over 500. And Apple and Amazon and Netflix alone are spending almost $20 billion on top of these companies. So we look at that and we say that we're not that. Well, we're on the other side of the business. The other side of the business is we own all of our content. It's real-life entertainment. We see ourselves as a global IP company, whether it's with Oprah, with Discovery, with Animal Planet, with ID and crime or science or cars. And with Scripps having food and HG and cooking and travel, we put it all together now, and we're on a different area of the field. And so we say very good luck to them. I think there's a lot of great companies. It's going to be very disrupted. And our game is to take those great brands around the world, and as people over the next few years look to pull content onto devices and phones, we think the functional value of food, home, cooking, science, cars, that we'll do better, or we have a chance to do better, than if we were, if somebody was going to pay to watch The Crown on a mobile phone. So a lot of it is about owning IP and figuring out a way to get to mobile where people will pull your content.
Well, let's talk about getting to mobile, because that's the big disruption everybody in media is talking about as a practical matter. How will this help you get to scale, as it were?
Well, we're about 20% of the viewership in the U.S. at any given time. And we have 4 of the top 6 or 7 cable channels for women with HG, Food, ID, TLC. And then we have OWN, that's #1 for African American women. So I think we have a great menu to offer to an advertiser. Discovery is in 220 countries. We have an average of 10 channels in every country in the world. So we're kind of a factory machine of driving IP all around the world. And so we could do what very few media companies could do. We could do a global offering of food. We could do a global offering of all of our content.
In this new world of streaming, will viewers be watching for platforms like HGTV or Discovery, or are they looking for programs like The Crown, like Game of Thrones?
Well, it's hard to tell behaviorally exactly what people are going to do. But by doing this deal and generating free cash flow and taking a look at the assets that we have, by owning science globally, by owning every piece of IP that we own effectively, except for sports, we're long IP. We've spent a lot of money to own it on all platforms. And that gives us the opportunity. If Amazon said, I'd like to do an offering globally, the only other media company that could do that would be Disney, and it would be in the kids space. And so we would raise our hand and say, terrific, we have a great family offering. And so for us, it's about the long tail. And we think in the end, people that love food are going to pull it. We're not sure exactly how it's going to work, but we think the fact that we own all of our content and we have passionate viewers that they love us like they love a sports team. They'll come home and they put on HG all day long, or they'll put on food. And so we have a sustainable growth business with our synergy. And then we have all this IP that we could take direct to consumer, and we've started to do it.
Can you win in streaming without going through the bundlers? I mean, do you have to be on Hulu? Do you have to be on YouTube? Or can you do it directly? Is your product strong enough?
We don't know. Everywhere else in the world, we're on almost every skinny bundle. Here in the U.S., we're in most of them. We're not on Hulu, and we're not on YouTube, but we're on most of the others. And people love our channels. And so, one, we think that over time we'll get on those skinny bundles. We hope to. We'd like to partner with our distributors because they helped us build our business. And in many cases we are. We're partnering with AT&T on DirecTV Now. We partner with Brian on Comcast on his offerings, with Charter. So that's the best way to do it, kind of regionally. But there is an opportunity for us to go direct to consumer ourselves, which we're already doing in a number of areas, in cars and in sports. But we could also go to those big companies. If you take a look at what NBC, ABC, CBS, and Fox spent 3 years ago, and how much is being spent by Amazon, Netflix, Apple, and Google, there's a massive amount of share shift that's going on there. And these are real global companies, the likes of which we've never seen before. So if any one of those companies wanted to offer for $5.99 a compelling family-friendly service, we would either be most of it, we would argue we'd like to be most of it, or we could be all of it and see how it goes. Because anywhere you go in the world and you say Discovery or Animal Planet or ID or Oprah, people know our brands and they value them.
How will you make that decision about whether you go direct to consumer or you go through middlemen, essentially? How do you make that decision as CEO?
Well, look, right now it's not a fair fight because the direct-to-consumer businesses, the Netflix, the Amazons, we in media used to trade at about a 14 multiple because the view was that this great dual revenue stream cable and free-to-air business would go on forever. And the view now is that it's getting disrupted by some of these direct-to-consumer platforms that are global. There's a question of who's going to emerge and be the winner. We think, looking now, it's only the second or third inning, but we've carved out a very compelling spot of quality brands that people love, that we can offer globally, and we could offer them ourselves.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you? You talk about disruption in media. There was a time not too long ago when you were the disruptor in chief, in some sense. I watched you from Capital Cities ABC across the street as you created MSNBC and NBC. You created CNBC. How does this compare with that disruption when you disrupted broadcast? Basic cable came in and really disrupted it. How does it compare? What did you learn from that experience you can apply now?
Patience. In that case, Jack Welch and Bob Wright were committed to try and take the broadcast business into cable. For people that were around at that time, it was pretty unusual. And it's important because the business that you think you're going to launch that's going to work is never the business that works. The audience is always going to tell you what they get nourished by. And that's what our business is about. That's what most businesses are about. When we launched with Oprah, the Oprah Winfrey Network, we had a dream, Oprah and I, that it was going to be about living your best life. And we looked strategically at the space and said, we can do this. But when we went out with the content, Super Soul Sunday worked terrific, but a lot of the other stuff was too earnest and the audience went away. And we had to figure out, what are they going to come back for? And it took us a lot of years, but we started to listen, what do you like? That's what our business is about. We don't want everyone to watch, but the Oprah Winfrey Network now is the #1 network for African American women. So for us now, we've broken our company in half, essentially. We got half the company that's about growing our channels, doing what we believe we can do as well or better than anyone in the world. Then there's a whole group that has to figure out, okay, how do I get over the top? What do people want when they consume content over the top? You know, and I think you have to be willing to recognize failure and use it kind of optimistically. Good, we know that now.
And you can do it without the blockbusters.
The way people watch our channels, they don't. It is hit driven if you're a broadcast network. The way people watch our channels, they come home and HG gets me. Discovery is my channel. TLC in Middle America is the channel that I love. I love Oprah. That's the channel that I watch. That's how they curate. Where do I get nourished? That's the business that we're in. We think that's going to be sustainable, and we think that ultimately they could either pull one of those really big, expensive platforms, or when they're looking to pull something that they want that's family friendly, with brands they know, characters they know, everywhere in the world, for a lot less than they would have to pay for that, we look different. And we got to, over time, we'll see if it's an aggregated offering, if it's an individual offering, but I think we got a game. But the first thing we got to do is execute on this.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
Well, first, we're in every country. So when I say we're in every country, we have a sales team, we have a distribution team, we have creative people, we have marketing people, and we have strategic people. So we kind of know. And we wrote 10 things that we thought we knew for sure. 8 of them were wrong. And the users told us. They said, okay, you know, we tuned in for the French Open, but we didn't want to watch Tour de France. We love tennis. Or they told us that maybe the most interesting takeaway that we applied to the Olympics is that when people consume content on a device, they expect to hit the device when they get up in the morning and see content. And then they expect a few hours later to hit that device. You need to multiple publish. So if speed skating is starting at 2 o'clock in the afternoon, the people that love speed skating have to get up in the morning and see a 1-minute video or 2 1-minute videos or some information about, and we downloaded 700 pieces of short form content in 21 languages every day to our Olympic player. And that's one of the reasons why we were able to aggregate about 500,000 subscribers. They love the sports IP, but they really, when people look at content on a device, they expect to be entertained and nourished whenever they hit it. And if you hit it and nothing is new, you're disappointed.
Can you do that and not step up into the really high-priced sports projects? Because that, to some extent, sounds a little bit like ESPN in the United States in the early days. They had lesser sports, and then they had to get into the NFL, they had to get in the NBA, and that, as you know, costs enormous amounts of money. Can you have a strategy that stops short of that?
Well, opportunistically, we have taken football. But we haven't taken football where we get in a bidding war with anyone. If you want to offer your content on a pan-European basis, there's only one place to do it, us. Or if you're a federation, if you're the Speed Skating Federation, you could sell it in every country. And the difference between the U.S. and Europe is in the U.S., it's one culture, one language, and everybody likes the same four sports, essentially. 90% of viewing, 80% of viewing is football, baseball, basketball, hockey. In Europe, there's a lot of sports that are number one in Northern Europe that are number 10 in Southern Europe. And if you're a federation, we're the one stop. And we've been very effective about getting a lot of content. And all the sports content we have with Eurosport, we've, as much as we can, we've gotten it long term, and we own it on all platforms.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. 24/7 news streaming live on Twitter.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you and you're already paying a $100 bill can then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt because you do have more debt on your balance sheet than a lot of other media companies do. You said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days. It's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are 1-over-1 companies. We have 12 channels in the U.S. They have 6. So we're in the same business. We have 220 research people. They have 140 research people. We have 650 salespeople. They have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said, when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who's a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, or how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running Discovery, which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC. That is a channel in a very different place. What do you think about the media landscape today in the United States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane. And what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincy spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincy aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously, even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes.
Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts. How does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helps create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day. So, you know, we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who were brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000 more or less nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. You know, we would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers, so that it's not so disruptive, and then they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think, you know, leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect. So can it be made better? Yes, I hope they can make it better. But I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted and he had panels that he talked with as well. Do you get to talk, either President Trump or the administration, about things like NAFTA? I mean, do they consult you, or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that everyone they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there are conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington who say, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiations negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out. And trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in a referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
It does a bit go back to my point about negotiations. You're never really sure until till the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on. It's very important to get it right for the UK. And to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better. Because it will provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception of people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government or any organization, it's going to be very hard. So I think, from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, tremendous global system, sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly,
people are already changing their behavior.
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it. Yeah, so we have employee surveys where we ask people. We can look at the sales number and measure the success rate, or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide insight. TikTok by Bloomberg. 24/7 news, streaming live on Twitter.
Technology. It's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, you know, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally, it's changing rapidly. With the consumer, around the world, you know, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world, it's still the biggest vehicle. But a lot of it's going into social media. We work closely a lot with a lot of the new tech companies in social media, trying to find ways to, you know, continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end. But what I'm totally clear of, it's going to be different in 5 years, and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When you just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the U.S., but really at a par. I mean, you know, the U.S. in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the U.S. So, you know, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu.
Yeah.
So let's have that Coke or that Diet Coke.
Yeah.
You don't have that when you're on your app.
No, but you have to get it. I mean, you know, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30–50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you know, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we've had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think it for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, you know, top 1 or 2 of place to do business in the U.S. for many years in a row. The local political system has done a great job. So has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're what, $200 billion market cap? It's a pretty big acquisition. But there are some pretty big consolidations in the food industry out there.
I think firstly, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say never, which then causes confusion because people say you haven't ruled anything out. I say no, it's a question of what's most logical. And beverages are the most not logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top line growth, which we believe we can with our strategy of total beverages, we will attract an investor base that will be very happy with us over the long run.
By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic? World without waste. Great goal. You have a big new packaging announcement. Why is it important to Coca-Cola, not just as a corporate citizen, but as a business?
It's important to us for a very core part of our values. We've always believed that to have a healthy business, you need to be operating in a healthy community. And one of today's biggest problems is packaging waste. We've done a lot on making things recyclable. We've actually invested a lot of R&D in making progress on reusing it. What we need to do is collect it. So this announcement is about the big missing piece in generating a world without waste, which is collecting back the plastic and creating a market economy for that collected plastic. And I think that's going to do great things to help us grow into the future without creating waste, which which is good for us and it's great for communities.
How are you going to attract all that plastic? By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic?
Well, to give you an idea of the dimension, we need to bring back, every person in the world, if they bring back 2 bottles a month, we bring back all our bottles. That's our objective. 2 bottles a month for every person. We collect every bottle we put out. How are we going to do it? Well, there'll be different systems in different countries. You know, every country needs a solution, but it won't be the same everywhere. There are kind of places where it's reasonably advanced in Europe, to more informal economies where the collection happens. So there's going to be different solutions everywhere. We're going to have to work with NGOs, other industrial companies and governments to put in place these solutions. But it's absolutely doable. And I think that's what's exciting about setting the objective.
We're very conscious of this in the United States, but what about in other places, like China, for example?
Yeah, look, I think the emerging and the developed countries are where more of the problem is than the US or Europe, which is probably at the leading edge. So we need to do more there. But recognize that in a lot of these countries, there is some informal collection system already going on across a wide range of waste. What we need to create is the circular economy. We need to create value for that. So often in the case, and we did this in Mexico, for example, you go back a little more than 10 years, it was less than 10% of the plastic was recycled. Now it's 60%. How? The informal economy was collecting the waste, but there was no market for it. No one wanted to buy it. So we went into the marketplace and bought the plastic, invested in factories to recycle that and reuse it in our bottles. So I think there's a model there for the Chinas and other parts of the world on how to create value out of plastic and get it reused.
You've laid out a bold strategic vision for your company called Total Beverage Company that includes things beyond Coca-Cola and even beyond Diet Coke. It goes on beyond that to these 5 categories. What's driving that? Is that basically to get away a bit from sugar drinks?
Actually, we're following the consumer. When you look at what's happening around the world, as the world is urbanizing, as people have got more disposable income, they're spending more money on a range of things, including beverages. So what's important within that growing market of beverages is they want more choice. Different people want different things. So if we really want to be able to serve the customer, serve the consumer, we've got to follow them. We've got to get into more categories. Coke is likely to remain the heart and soul of the company. It's the world's biggest fast-moving consumer good brand. But we need more. We need to offer consumers what they want all day long. We have to offer choice. And I think that's what's going to guide us forward. And in a way, it goes back to where we started. If we pay a lot of attention to what the consumer wants, they will take us to where the business needs to grow. And then it ultimately ends up in growth for the business.
I understand that on average around the world, people consume about 8 ounces of a beverage per day. And Coca-Cola, I was told, is about a half an ounce. What is your goal? How much of the market share of total beverage can you really take globally?
I don't think there's a end of history moment when we reach nirvana. I think what we're looking to do is gain share every year. I mean, it's a competitive marketplace. We have a lot of well-funded competitors doing a lot of exciting things. So what we're focused on is, can we serve the consumers and gain a little bit of share each year and generate a growing business system that our objective is to create value for everyone who touches that business system, whether it be the economics of the people who are in the value chain like the customer, or even society with initiatives like the packaging one, which I think builds on our heritage of creating shared value in the world. 10 years ago or so, we set ourselves the objective of being water neutral by 2020, and we achieved it a few years early. So we return to the environment all the water we use, which is one of the things that gives us confidence that we can achieve this packaging objective. So we get business growth and doing it in the right way for society.
Okay, thanks very much. We're wrapping up there. This was terrific. Thank you so much. That was really fun.
Thank you.
President Trump throws down the gauntlet. White House announces a 10% tariff on $200 billion worth of Chinese imports, with more to come. Tech companies like Apple avoid the worst-case scenario. Dysfunctional WTO. Economic advisor Larry Kudlow attacks the trade organization as the world awaits China's retaliation. We speak to the former Deputy Director General of the WTO. And Jack Ma, beware a 20-year trade war. Markets take the latest trade battle in stride, while Jack Ma says the trade battle could last decades. We break down the business implications with China expert George Magnus.
Welcome to Bloomberg Daybreak on this Tuesday, September 18th. I'm David Weston, right here with Alex Steele, as we try to sort out, is it really temporary, or is there a longer-term effect here?
And the shorter term, if you're buying an Apple Watch or baby wipes or a rare earth metal, you're good to go.
Exactly. Or playpens.
Or playpens and car seats, at least for the next 24 hours. In the markets, though, this is really what David's talking about. It's the short-term versus the longer-term effect. So short-term, S&P futures are up by 6. You're looking at a classic sell the rumor, buy the news kind of scenario. Euro dollar also higher by about 0.2%. The story is that maybe China might come in the market, support any sort of economic loss, infrastructure spending, something along those lines, and that's really helping risk appetite across the board. And you can see it in the bond market here with 10-year yields at 3%. Brent crude getting a lift along with other base metals, but David, this is also a Saudi Arabia story saying, hey, they like Brent around 80. They like it above 80. They like it. More market share, more prices. You cannot go wrong for Saudi Arabia in that scenario.
Maybe they think the president of the United States is busy, so he's not paying attention.
That's right. Just hit him up. Hit him up. Midterm elections.
We got a chance to get those prices up. Okay. It's time now for the morning brief. Today, the leaders of South Korea and North Korea began their two-day summit in Pyongyang, the first such summit to take place in the North Korea for 11 years. And at 12:30 this afternoon today, Eastern Time, President Trump is going to be greeting Polish President Andrzej Duda on his first official visit to the White House. The two are expected to hold a joint news conference at 2 o'clock this afternoon. And at 4 o'clock, we'll get tick data showing money flows in and out of the United States. So that's all coming up today. In the meantime, let's return to the trade story, which is really our lead story today. Markets largely took the announcement of new U.S. tariffs in stride today, and the Chinese response for that matter as well. But some people are warning that this is part of a much larger problem, going to the very heart of the WTO system of international trade. National Economic Council Director Larry Kudlow said this very directly at the Economic Club of New York yesterday.
Countries are raising tariffs, non-tariff barriers, subsidies. The World Trade Organization has become dysfunctional. The biggest culprit has, in fact, been China, but not the only culprit. And I will say right here on China, we are ready to negotiate and talk with China anytime that they are ready.
And earlier today, Alibaba's Jack Ma warned that we could be seeing the beginning of a 20-year trade war. Welcome now from Washington, D.C., Rufus Yerxa. He's National Foreign Trade Council President. He's a former WTO Deputy Director General. Rufus, thank you very much for joining us again today.
My pleasure.
So one of the things we're trying to sort out is the short-term effect seems to be pretty modest right now, as reflected in the markets. But is there a larger danger here? We heard Mr. Kudlow saying basically WTO is dysfunctional. We've heard the president criticize WTO. Are we really putting in jeopardy, perhaps for the next 20 years, the overall international trading system?
Yeah, look, I don't know why the administration is deciding to trash the WTO at this moment. I mean, obviously, the U.S. and China have now taken their dispute largely outside the WTO. But let's not forget, the WTO has 160-plus member countries. It governs our trade relationship with a lot of countries around the world. It's succeeded in bringing down tariffs and non-tariff barriers. It's created a lot more trade rules. And for a lot of U.S. trade, that's been good. That's been important. I don't think it really helps the U.S. to be seen as trying to undermine the system or talk it down. We should be saying that China needs to live more within the rules, and that's what this dispute is about.
But Rufus, in fairness to the president for a moment, the WTO hasn't helped sort this out. There seems to be a pretty broad consensus, not just in the United States, but in Europe and elsewhere, that China has not been playing by all the rules, particularly when it comes to intellectual property. Let's quote now from what the president said yesterday as he issued this. He said, "For months, we have urged China to change these unfair practices and give fair and reciprocal treatment to American companies. We have been very clear about the type of changes that need to be made, and we have given China every opportunity to treat us more fairly, but so far, China has been unwilling to change its practices." Does the U.S. really have any alternative but to deal with this on a bilateral basis, because the WTO and the rest of the world is not helping us?
Yeah, I think we do have alternatives. I think actually Japan, Europe, a lot of other countries, the countries that negotiated TPP with the U.S., they were all ready to help us create stronger rules and more pressure on China to change those kinds of practices. There were a lot of things in the TPP agreement that would have been effective in pressuring China to live more within those norms. But look, you know, the U.S. has decided instead that it's going to take a more unilateralist approach to China. That raises questions about whether we're ready to live within global norms, and it gives the Chinese a kind of a talking point with countries around the world, which is exactly what the Chinese are doing. They're cozying up to a lot of the countries that we should have on our side in this dispute.
Well, at what point does that lead the Chinese actually to change their trading patterns and sort of go around the United States, as it were, to seek other markets for their exports?
Well, right now, the U.S. is only about 16% of China's total exports, and clearly they're going to diversify. But not just China. Let's remember, we've also imposed tariffs on Europe, on Canada, on Mexico, on Brazil, on a lot of countries in steel. We're talking about doing the same thing in automobiles. So from those countries' perspective, it's the U.S. that's cracking the rules of the system and deciding to act outside of with our national security restrictions. And this is going to give China a great opening to talk to those countries about closer trade relations. In fact, a lot of those countries are negotiating free trade agreements with each other. And the big danger here, you talked about the long term. The big danger is the U.S. is raising tariffs on a number of products, isolating itself from world markets, while a lot of our trading partners are actually getting together. The Europeans have just negotiated a deal with Japan, for example. That means U.S. pork exports are going to have less access to Japan's market. And that goes along with what's happening between the U.S. and China at this moment.
So, Rufus, we've heard from the president repeatedly, including just this week by tweet, that the United States really has the cards in its hands because our economy is robust. It is growing faster than a lot of the rest of the world, not faster than China, but even in China, the growth pace is slowing down some. Is the president, does he have a point that actually he does have leverage right now against people like the Chinese?
Well, look, those factors can change very quickly. I mean, there are short-term impacts and long-term impacts of this tariff fight with China. The short-term impact is really simple. For a lot of businesses, it increases uncertainty in costs. Yes, the U.S. economy is strong, and it continues to grow, and so maybe a lot of producers and consumers can absorb those costs, but let's not deceive ourselves. This is going to be a tax on shoppers at Walmart and Home Depot. We can afford to pay that because our economy is doing well. Longer term, high tariffs really don't have a positive impact on your economy, and that's, to me, the most disturbing thing. I listened to some of the president's tweets, and he's talking about the fact that tariffs are going to make our economy much stronger. That's really a misreading of just about all economic history. We're not going to strengthen the U.S. economy over the long term by making it a higher cost, higher price economy. We've got to compete with nations around the world, and we have to force countries like China to open their markets more. I fully agree with the administration there. 80% of the growth in the middle class in the world over the next 20 years is going to be in Asia. If the U.S. doesn't have open markets in Asia that it's able to compete for, we're going to lose out. And we're not going to get those open markets by deciding to retaliate against every country in the world and raise our tariffs at home.
It's a really powerful point. Rufus, thanks a lot for being with us today. That's Rufus Yerxa. He's president of the National Foreign Trade Council and former WTO Deputy Director General. Alex?
All right, well, short-term markets are calm, but long-term experts are warning of new and dangerous territory.
What is being threatened here is not some dispute or spat, however difficult to resolve, between China and the United States. We're looking at quite treacherous waters here, which could considerably destabilize global economic confidence and threaten a future recession.
People underestimate the impact of this trade war on the economy because they say the trade impacts directly and indirectly are too small to matter. That's not true.
This kind of trade conflicts are actually raising downside risks to the economy. So certainly we see this is a worrisome development, and I expect that it's going to have some negative effects on the economy.
This is not just about trading goods. It's about technology, it's about IP, it's about FDI, inward and outward. And you're going to a world that's going to become deglobalized, it's going to become balkanized, in which these frictions are going to have a negative stagflationary impact of reducing growth and increasing inflation globally. That's the danger of this trade war.
Nori Rubini always makes me feel so good. Joining us is Phil Camporelli, JP Morgan Asset Management Asset Allocation Strategist. I make light of that, but it sort of dovetails with David's conversation of the short-term impact versus the longer-term impact. As an investor, how do you look at that?
Yeah, as an asset allocation strategist, you have to balance those two. So you do a long-term strategic asset allocation, but in the near term, Alex, you have to be able to trade these markets tactically. What we received last night, and you said it a couple of minutes ago, classic buy the rumor, sell the fact. We've seen this a million times with geopolitics. After the Brexit vote, market went down, market went back up in short order. After the U.S. election, market went down, market went up that night. So what we see from last night is clarity. We also see that only 10%, I know it should go up to 25% by the end of the year, but for us, the sentiment in emerging markets was so poor that just after this news was released, it allowed EM to kind of recover. And I don't think a lot of people would have expected to wake up this morning to see the Chinese stocks up close to 2%.
Definitely not. I definitely didn't. Yeah. But what's interesting is the Bank of America, a fund manager survey, sort of highlighted that, just how bearish you were. One was on EM. It was short the EM, long dollar, long FANGs. And so part of that, you're seeing that reversed. But yet, you have individuals that they surveyed are the most optimistic in U.S. equities in years. And U.S. equities still grind higher. Yeah. How does that make sense?
Yeah, for good reason. You can make an argument right now, Alex, that the U.S. recovery right now that started back in 2009 is the strongest it's been in the cycle. You can make that. There are more job openings right now than there are unemployed people. That's pretty spectacular. And you think about soft data and hard data. So soft data in the U.S., small business confidence, highest since 1974. Consumer confidence highest since 2000, but you're also seeing it in the data. So GDP in the second quarter and the third quarter, 4+% second quarter, 3+% in the third quarter. For us, it is a very strong fundamental and earnings story that leads us to the U.S. It's almost validated by the data to belong in the U.S. markets.
Phil Camporelli of JP Morgan Asset Management will be staying with us. And coming up, trade tensions grow, and they're about to drag in the biggest part of the U.S. economy, the consumer. We'll look at the sectors under pressure. That's coming up next. And this is Bloomberg.
escalating trade tensions between the U.S. and China do have big implications for U.S. companies. We're going to kind of break them down on a sector level. Here's the retail angle. State by state, here is the areas that are going to be impacted by tariffs. Amazon, Nike, Costco, P&G directly being a hit on consumers. So with us is Phil Camparelli of J.P. Morgan Asset Management. We're going to break through some of the sectors here. So start with retail. In some ways, they got a pass. Hey, diaper wipes, baby wipes, car seats, not on the docket. How do you play a consumer staples, consumer discretionary space right now?
Yeah, I think that's really important. So we go back to the 10%. That's what has been announced. What does the 10% tariff mean? It means that, you know what, the U.S. dollar actually rallied versus the yuan by 10% this year. So you could almost make a case that it's a wash, that they can still get their supplies from China at kind of an equal price level, which means that it won't be passed on to the consumer at the 10% rate. 25% rate can change that. The other thing, J.P. Morgan sell side did a research report saying even if it goes to 25 on 250 billion, it's about 15 basis points worth of GDP and about 0.2% worth to CPI. While that's not nothing, that is pretty much contained in the grand scheme of things.
Well, we just had a nice chart up that showed the products that come in from China. A lot of them we don't think about. Obviously, cell phones is huge, but it's also the basic stuff like socks, for example. What we have seen, though, is tech rotate out. So if you come inside the Bloomberg, you can see the number of NASDAQ companies that are below their 50-day moving average versus the S&P. The white line is the NASDAQ. Is this going to be just sort of sell the stocks that have done well scenario, or is this a fundamental shift due to the macro?
Yeah, and I've said this a couple of times this year with this rally that we've seen in tech. Tech was almost seen, Alex, as a flight to quality sector. Tech is not a flight to quality sector. And every time you're going to see at least some specter of the rates moving higher in the long end or a re-steepening of the yield curve. It doesn't seem like you're going to get it, but anytime you get rates at or around 3% on the 10-year part of the curve and the specter of it moving higher, I think tech is going to face a little bit of a headwind there versus some of the value stocks that have been under-owned over the past 18 months.
So as you look at this short-term versus longer-term strategically within a portfolio, how does small cap versus large cap figure in? Because they could have took a big run up after Trump got elected, then they came back down again.
Yeah, then this year they're doing pretty well also. That's almost like a follow the Fed trade, right? If you believe that interest rates in the U.S. are going to move higher, okay, so if you get a steepening of the yield curve, I think that's more of a large cap story, David, than a small cap story. I think a small cap story is more of a U.S. is growing, rest of the world isn't growing. So those small cap companies that do all the business inside of the U.S. tend to do well. That has certainly happened this year. Not something that we would expect to continue, especially into 2019, as we see some sort of renormalization, hopefully, of what the ECB is doing with rates, of what global growth is doing. But for this year, it's been a nice run in small cap, but we are more balanced between large and small cap this year.
So what sectors can you not own because of the macro?
Oh, that's a good question.
And by macro, I mean specifically today, the China-U.S. trade sort of calendar at the end of the day.
Yeah, so EM is still an underweight in the portfolio. Okay, so from a sector asset allocation perspective, EM is still an underweight. In fact, we came into this year within our equities, about 50-50, U.S. versus non-U.S. That has moved now to about 70% U.S., 30% non-U.S.
Isn't that overcrowded, though? I mean, if you have the majority of hedge fund managers for Bank of America survey are the highest level invested in U.S. equities in years, are you overcrowded?
Yeah, it's important to see that data. However, it's also important to manage that kind of contrarian kind of indicator with the fundamental story. And Alex, right now, for us, EM is still an underweight, especially since there's not really much specter for dollar weakness in the near term. The dollar is so important to that EM trade. Even without any of the trade concerns, Alex, the dollar would be stronger this year because the U.S. growth rate has gone parabolic compared to the rest of the world, right? So although it's crowded, for us, it's warranted. Back to the point that I made earlier, you can make the case that the U.S. economy right now is the strongest it's been since this recovery began.
Interesting. Okay, Phil Camparelli of J.P. Morgan Asset Management will be staying with us. Coming up, rising wages weigh on FedEx earnings. Shares down in the pre-market. More on that story next. This is Bloomberg.
Okay, it's time now for 3 company stories that we are watching today. First, CVS and Express Scripts. They're back in the news because the Department of Justice has now given them clearance. They let the Hart-Scott-Rodino Act time expire, and now they've got clearance from the Justice Department. They still have to get some state regulation to approve it. But basically, they said they're going to close this deal this year. Finally, this has been around forever.
Well, I was going to say, does this mean that more M&A that we're waiting to happen can actually happen? Does this say something about the broader antitrust worries?
Yeah, exactly.
Antitrust lawyer man?
Well, well, I think that there was a vertical merger, and so nobody was worried too much about the Department of Justice. The bigger question, I think, is in healthcare generally, does this open more floodgates for more consolidations, and particularly those kind of vertical integration?
100%. All right, I'm paying attention to General Mills here. So their earnings came in better than estimated. Their sales were a little bit light. Their organic volume growth was actually down by 1%. But I wanted to look at their gross margins because they missed estimates by just a touch. But part of that seems to be a one-off, like 130 basis points came from their Blue Buffalo acquisition. So maybe not as bad going forward because they did wind up saying they're going to see a better fiscal 2019.
Oh, that explains it, because I couldn't figure out how the gross margins were down and their earnings were up.
But going forward, I mean, they seem to have a positive outlook there.
Okay, now for our third story, we turn to FedEx. Shares are down in pre-market trading after posting earnings that fell short of expectations. We're joined by Helene Becker. She's Cowen Senior Research Analyst. She's on the telephone. She has an outperform rating on FedEx with a price target of $280. And Helene, first of all, welcome to the program. Good to have you here. But I'm going to jump right to the chase, for me at least. What happened with wages and benefits? I mean, according to Bloomberg, up 11%. How can that be?
Yeah, well, if you recall, there was this tax act that went into effect in January, and normally FedEx would give their employees a pay increase October 1st, and they pulled that forward to April 1st. So you have very tough year-over-year comps in that line item for 6 months. And once you get into past October, so the 4th calendar quarter, the numbers won't look so, so huge. So that was a big reason for the salaries, wages, and benefit line to go up. And the other big line item you saw that went up was transportation purchased, which includes fuel, and that was up. Fuel costs were up 40%. So those two conspired on the cost side of the equation. And I would say revenues were a little better, I think, than we thought they would be, $17.1 billion for the quarter. They're on track for, I think, $70 billion is the forecast for this year. And, we think that they'll achieve it. I think, the issues facing the company obviously are higher fuel costs, tariffs, higher wage rates. They're going to hire 55,000 people for the peak shipping season, and a lot of those people will stay on after January 1st.
Well, they can only be hiring that many people if they think that their business, the volume, is going to grow rather remarkably. What is the capital investment they're going to have to make to offset that?
Yeah, $5.6 billion is this year's CapEx, and that's about 8% of revenue. And if you go back and you look over the last, say, decade and a half, they've historically, so I'll call that historical, they've been in that 8 to 10% range, and they continue to reinvest in the fleet. They've got, between them, UPS and DHL, the younger fleet. Obviously, if the economy turns down or if tariffs and hampers trade, you'll probably see them replace aircraft rather than, go for growth aircraft. And then hubs, CapEx for ground is actually down this year. But this is the first year it's down after a number of years where they've invested in automating hubs and building out hubs closer and closer to the end user.
Helene, how do you buy this stock when we're in the midst of a trade battle with China?
Yeah, I think that's a fair question for me, given the fact that we have the outperform. And the way I think about it is, so far, all of the tariffs and the trade really affects goods that don't get carried on aircraft. I think the next wave of tariffs are the ones that probably affect things like technology items, because, you think about what goes on air, and it's all high-value goods, aircraft parts, most of which are manufactured not actually in China. You think about auto parts, you think about technology components, and then there's life sciences, healthcare. Those are a lot of the areas where FedEx is growing, small and medium-sized businesses. That's the growth. So, yeah, it's going to affect them, but I think they pointed out last night that it's something like 2% of revenue.
All right, Helene Becker, thank you very much. Cowen Senior Research Analyst with an outperform rating on FedEx. Worrisome was the CEO on the call. Quote unquote worrisome for trade. All right, well, coming up, a serious mistake. That's how China's state-run newspaper describes President Trump's move to force the government to make concessions on tariffs. We'll break it down with George Magnus. This is Bloomberg. This is Bloomberg Daybreak. I'm Alex Steele. Trade war panic, not so much in the markets. You take a look at Dow Jones futures up by 49 points, S&P futures up by 4. Classic, sell the rumor, buy the news. Even emerging market equities pretty much go nowhere. In other asset classes, though, I want to take a look at what's going on in the dollar. Pretty much flat on the day. You have euro dollar flat. You have dollar yuan flat. That's the offshore cross. 210 spread here a little bit steeper, but as you have a little bit of selling come in the back of the bond market, not any kind of rush to safe haven trade at all. And Brent crude up almost 2% on a headline from Bloomberg that the Saudis like. Brent crude over $80 a barrel. And the Bank of America Fund Manager survey says that investors are bearish growth, but they like the U.S. still. They're bullish on that U.S. decoupling. My question, David, is for how long can you feel that way?
Yeah,
I'm pessimistic on everything except for the U.S.
Okay, good for you. Okay, let's get an update now on what's making headlines outside the business world. For that, we turn to Kaylee Lyons, who is here with First Word News. Kaylee?
David, President Trump has ramped up the trade war with China. The U.S. will impose a 10% tariff on about $200 billion in Chinese goods next week and more than double that rate next year. Beijing today again vowed to retaliate. If that happens, the U.S. will impose further tariffs on about $267 billion of Chinese imports. President Trump says China has been unwilling to give fair and reciprocal treatment to American companies. For the first time in 11 years, a South Korean leader is visiting the capital of North Korea. President Moon Jae-in was greeted by Kim Jong-un as he arrived in Pyongyang for a landmark meeting aimed at rescuing stalled nuclear talks between North Korea and the U.S. It's the third meeting between the two leaders this year. And a Russian military reconnaissance plane has been mistakenly shot down by Syrian forces, and Moscow blames Israel. The Kremlin says the Syrians were fighting off an attack by Israeli warplanes, and the Russian plane was caught in the crossfire. All 15 people on board were killed. Israel says its planes were already back in Israeli airspace by the time the Russian jet was shot down. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg. David.
Thanks so much, Kaylee. As Kaylee just told us, we know now more than we did yesterday about U.S.-China trade relations. Now the question is what the effects of all these tariffs and counter-tariffs might be. To take us through it, we welcome now on the telephone George Magnus, associate at Oxford University's China Center and former chief U.S. economist at UBS. So, George, welcome back to the program. You are also the author, I will remind everybody, of Red Flags, Why Xi's China is in Jeopardy, something we all need to read. So, George, I'm going to start off with what effect this could have, these tariffs could have on China. Bloomberg Economics did a study, and what they've come up with as projections are basically, if it remains at a 10% rate, this additional $200 billion worth of imports taxed at a 10% rate, it'll have a half a percentage point effect on GDP growth in China. If it goes up to 25%, as is projected at the end of the year, Bloomberg Economics projects it'll go up to 0.9% on the GDP growth. Do those numbers make sense to you, and how concerned should President Xi be about this?
Yeah, I think those numbers do kind of resonate a bit, David. I mean, the issue for me is that I think for the moment, okay, even with the 10% tariff on the $200 billion, the impact on the Chinese economy is, it's a bit of a rounding error for me. And actually, in any event, it may already have been offset by, A, the 7% depreciation of the yuan against the US dollar since the middle of the year, and the combination of easing measures in China, which have been undertaken by the government and by the People's Bank of China for other reasons to do with the domestic economy and the consequences of the financial clampdown. But I think your Bloomberg citation about bigger damage to the economy the longer the trade war goes on and the higher the tariffs go, I think I sympathize with that, and I think I could see that happening, because I think one of the important things that we have to watch for, of course, is A, whether the Chinese retaliate, which they said they're going to, whether then President Trump decides to expand the tariffs to the whole of the imports of America from China, which he said he would, and actually how the Chinese retaliate, because if they start threatening the supply chains and products of American companies, then this will have domestic consequences too.
Well, and yet, is it more likely they might do something like that, interrupt the supply chains of U.S. companies, rather than the easing measures you described? Because those easing measures come with a price tag. After all, President Xi was saying he wanted to move toward deleveraging, and if he has to re-leverage in order to make up for the tariffs, does that put pressure on him and his regime?
Yes, I think it does. In fact, my view is I think President Xi has been wrong-footed by President Trump's resolve to prosecute this trade. I was going to say spat, but it's more than a spat. It really is a bit of a trade war. And so I think the Xi Jinping regime has been wrong-footed by this. I think it's reflected slightly badly on him, actually, because we have started to hear some criticism during the summer from unexpected quarters about his leadership style and characteristics. And of course, to the extent that the government is kind of under pressure to kind of relax its stance on deleveraging, it really complicates what they set out to be one of their core objectives, which was financial stability and the clampdown on risk-taking. So this trade war is coming at a very unpropitious time for Xi Jinping.
George, what sectors in China are most vulnerable right now?
Well, I think, I mean, at the moment, the trade, certainly the external, I know this is not what you're asking me, but I'm going to get round to answering your question. The external sector in China, so the foreign trade sector, is at the margin. It's a bit of a drag on the economy, the whole of the external sector, which, of course, encompasses lots of things like consumer goods, and intermediate goods and finished goods. And I don't even think that the tariffs are having that much of an impact on that sector at the moment. I mean, it's having some impact, but I mean, China has kind of registered a kind of a small balance of payments deficit in the first half of this year, which is rather unusual. I don't think this necessarily reflects a huge change in the kind of imbalances within China, but I think it's certainly to do with changes in the structure of trade and trade policy. So, what would worry me, I think, about sectors really is if China starts to target American companies, which I think is something we might expect, because in past political disputes with countries like Japan, South Korea, the Philippines, and Vietnam, they did target the companies of those countries. So it's much riskier politically for Xi Jinping to do this, or for the Chinese government to do this. But I don't really see what other choices they have other than devaluing the yuan, which I think would be even more provocative.
So, George, finally, an unfair question, but a simple one. If roughly, I am told, 16% of Chinese exports are to the United States today, if this continues for a period of 2 years, 3 years, what will happen to that number? Will they start dealing with other countries more than they deal with us?
I think it'll be a two-sided affair, because I think a lot of American companies will and probably foreign European and Japanese companies too, and South Korean will be looking to evade or avoid some of the tariff pressures that come from doing all of their supply chain business within China. But China too, will probably it will try to find other customers. But actually, there's nobody that's really as big as the United States, other than the EU, and the EU feels very similarly to all of these issues that the United States is raising, and so I think in a sense I think it's going to be very tough for China to find an external kind of escape route.
George, really great to get your perspective. George Magnax, Associate of Oxford University's China Center. Thank you. Also with us on set, Phil Camparelli of JP Morgan Asset Management. George was really outlining sort of the longer-term implications. You mentioned that you were overweight EM, or 50 US EM at the beginning of the year. Is there something on your buying list if sort of the macro trickles down, but there's still some micro opportunities somewhere in EM? Yeah, so I want to really differentiate the underweight in EM now, Alex, versus what we were seeing in 2015. The biggest difference between now and then, remember in late August in 2015, the Dow opened down 1,000 points, right, for the first time ever because of fears of China and hard landing. But we're growing. The world is growing in 2018. I think that's the biggest difference. So while we had no emerging markets in the portfolio in 2015, we probably have about 5 to 6% emerging market equity in the portfolio and another 2 to 3% in emerging debt. And why is that? It's because the world is growing. So we are seeing opportunity there because of still the fundamental global story, but we have to underweight it because, first, the dollar, which I mentioned, which we see very little specter of weakening in the sustainably weaker. And the second is the trade concern. Now, trade concern are alleviating somewhat this morning. We have clarity, but it's not 2015 underweight EM. It's not as serious as that. We have a better global growth story to see at least some emerging in the portfolio.
And how do you differentiate among emerging markets? Because they're quite different from the other. And particularly if you see increased risk from trade and perhaps from other things, how important does it become how deep the capital markets are and how transparent they are and how liquid they are as a practical matter? Because the emerging markets really vary a fair amount on those sorts of indicators.
Yeah, I would say more on the equity side you're able to differentiate than the debt side. I think on the debt side it's a little bit more illiquid, a little bit more in tune with the dollar, but on the equity side there are very, very liquid instruments that we can trade the beta or the risk of the market in and out of the portfolio. And I think that is critical right now, especially when earnings are driving returns. There are still good earnings to be found within emerging markets if you look for them. And I think it's a little bit more of a liquid story when you're trying to trade the risk in and out.
right, to broaden it out, sector rotation. What do you like? What do you don't?
So what we like now, kind of globally or within EM, are you asking?
Globally.
Yeah, so globally, what we like right now is anything that's tied to the consumer. As I mentioned before, not only did you have an average hourly earnings number at the highs of the cycle in the last payroll number, but you have more job openings than unemployed people in the United States right now. So anything tied to the consumer we like. And financials are still an overweight. They have to be an overweight in an environment where the Fed is moving policy rates higher. Really clear, though, on the Fed. I don't think at this point that they have interest in going into what's called restrictive territory, which is moving rates above what they consider a neutral rate. I think that has profound implications for asset allocation, because if they signal a pause in the next couple of meetings, emerging markets are going to see some sort of relief rally, right? So it's important to keep your eye on what the Fed is signaling, especially into 2019.
As long as they can find that magical star that
that's
Sharon
right.
Powell's looking for, will all be said. Okay, Phil Camparelli of JP Morgan Asset Manager, thank you so much for being with us. Alex?
All right, well, coming up, flooding and road closures from Hurricane Florence putting a strain on the trucking industry. We're going to discuss it with the CEO of one of the largest truckers in the country, Eric Fuller of U.S. Express. This is Bloomberg. This is Bloomberg Daybreak. I'm Kaylee Lyons in the Hewlett-Packard Enterprise Green Room. Coming up later today on Bloomberg Markets, Alan Joyce, Qantas Airways CEO, first on Bloomberg. Now to your Bloomberg Business Flash. One of the biggest legal battles in the tech industry may be nearing an end. Qualcomm CEO Steve Mollenkopf tells Bloomberg that his company and Apple now have an increasing incentive to settle their fight. The two companies will soon face legal proceedings in the U.S., China, and Germany. Qualcomm and Apple have sued each other over patent infringement and licensing fees. The world's largest food company plans to stick to its most profitable businesses. Nestle has agreed to sell Gerber Life Insurance to Western and Southern Finance Group for a little more than $1.5 billion. The deal does not include Nestle's Gerber Products unit, which makes baby food. And the billionaire founder of Japan's second largest e-commerce company will be the first paying passenger to the moon. The president of Start Today, Yusaku Maezawa, will be on board a rocket built by Elon Musk's SpaceX that's scheduled to blast off in 2023. The spacecraft will make a week-long loop around the moon. No word what Maezawa is paying.
And that's your Bloomberg Business Flash. David.
Thanks so much, Kaylee. There's some news just crossing the Bloomberg right now that Robert Lighthizer, USTR, and Chrystia Freeland from Canada now say they're going to get back together and start NAFTA talks again on Wednesday. We knew they were going to get together sometime this week. Now we're told we'll be coming up on Wednesday.
Hey, you're on a roll. You get some good headlines from China. You're playing it tough.
Yeah, that's right.
Why not go and take it to Mexico and Canada?
Get a deal on with Canada. That would be nice. Okay, then we're going to turn now back to that extreme flooding from Hurricane Florence. It's making life very difficult for everybody down in the southeast, particularly for trucks who are trying to get access to certain areas. Trucking company U.S. Express says between 10 and 12% of its cargo loads were affected due to store and road closures. Joining us now over the telephone from Chattanooga, Tennessee is Eric Fuller, U.S. Express CEO. So, Eric, welcome back to the program. Good to have you on. Give us a status report as of right now. What's going on down there in North Carolina, South Carolina, or through the southeast?
Sure. Thanks for having me. Yeah, we're seeing widespread flooding that's affecting not only the coastal regions, but we're seeing things affected even further inland, I think, than we expected, and things continue to deteriorate. I think we're expecting probably another day or two before things get to the point to where they'll start to recover, and we'll be able to move product into those areas. And so it is creating a lot of disruption, not only to the coastal regions, but even a couple hundred miles inland.
So, Eric, you not only use other people's trucks, you own a fair number of your own trucks, as I understand it. Did you get all your trucks out of that region so you have not actually lost a lot of equipment?
For the most part. I mean, we had some trailers and stuff that were still near the coastal regions, but for the most part, anytime we see these storms, we usually try to move equipment back inland to position them. So as soon as the storm moves away, we're able to move equipment back into the storm area, because we typically spend a couple of weeks in the recovery working with our customers, trying to get product back into the storm hit areas as quick as possible.
The other story, Eric, in the market during this time is that it's hitting in a very tight labor market. Can your workers actually get to work, and are you competing for staff because there's going to be a reconstruction effort?
Right. Yeah, we saw that last year in Houston. So Houston became a very, very tough hiring market for us probably within a couple of weeks after the storm, and I anticipate the same thing. As there's a rebuilding effort, we compete directly with construction. So as construction starts to go into a rebuilding time, then that really does affect our ability to hire in those markets. And so that's absolutely an issue.
So that comes on top of what you've had as something of a challenge already. Last time we had you on, you were talking about how difficult it is, particularly in part because of lifestyle issues. How difficult, is that eased up any at all, your ability to get new truckers?
Not at all. If anything, I would say it's actually continued to deteriorate. So as we sit below 4% unemployment, you see construction, manufacturing, warehousing, markets that we compete directly against, hiring at record levels. It's really creating a lot of pressure on our industry. So we're trying to do everything we can to provide new opportunities or come up with, unique type of benefits or things to attract new drivers.
Hey, Eric, for the broader macro backdrop here, we have this trade battle that keeps progressing between China and the U.S. How does that affect your business?
It definitely affects on the equipment side. So we're seeing the cost of trailers, the cost of tractors start to go up. From a shipping standpoint, I'm not seeing a lot of our customers necessarily affected. One thing we are seeing, though, is a lot of our customers have ordered product earlier out of Asia than maybe what they typically would for the peak season going into the holiday season. So certain people thinking they can get out in front of the tariffs by ordering early, which is a good thing for us because that will only extend our peak season, which is typically November 1st into Christmas season, and we think that'll extend it because of some of this early ordering.
So, Eric, as we go into this Christmas season, if you can put aside trade, you can put aside the consequences of Hurricane Florence, two big things to put aside. What does your business tell us about how the U.S. economy is doing overall? What's the overall demand for shipment of product right now in the United States?
Oh, it's extremely strong. I mean, we're seeing demand probably the strongest levels in our business since probably 2004, 2005. So we're seeing a very robust environment, and that's coupled in our industry with a very, very tight supply market with for drivers. And so we're seeing that market continue to be robust, and I don't anticipate that changing in the near term.
Well, a lot of what we talk about when it comes to, say, trade and the consumer is pricing power, and more companies are able to pass through their prices. How do you deal with that, and what have you noticed from your clients?
we are finding the ability to pass along any kind of increases to our customers. For the most part, our customers are aware of the driver situation and are concerned enough about being able to find capacity that they are understanding, for the most part, on any type of increases that we are asking for from a pay standpoint. So really, where our customers are more focused around is making sure that they have capacity, making sure that they are comfortable that they're going to have a truck whenever they have freight that needs to be moved.
So, Eric, do you see any difference in demand geographically? Are some regions more robust from where you sit right now than others in the United States?
We have seen it a little bit. We've seen some weakness out on the West Coast, though recently as products coming off of the ships from Asia, we are seeing the West Coast start to pick up. I think partially that's because people are ordering early, whether it be tariffs or trying to get out ahead of any kind of peak season surge. But the interesting thing with these storms is they don't just affect the coastal regions, they actually affect the entire supply chain. So the truck capacity in California will actually be affected by the storm that actually hit the Carolinas. And so it really does disrupt the entire nation.
Eric, so great to get your perspective. Eric Fuller, U.S. Express CEO. And David, talking about trade, so Apple CEO Tim Cook says he's optimistic U.S. and China will sort out their trade issues. He's talking to ABC. He's feeling good. He's like, hey, my earbuds aren't done.
And his iWatches, they're fine.
The
Apple Watches, they're okay. They're exempt. He's in good shape.
All right, well, coming up, Brent crude jumping after reports that Saudi Arabia is okay with oil above 80. More on what I'm watching next. This is Bloomberg. What I'm watching, shocker, Brent crude. So jumping near $80 a barrel. There's a report that says Saudi Arabia is now comfortable with Brent above $80. Joining us now from London is Stuart Wallace, Bloomberg executive editor for energy and commodities. Okay, the range was 40 to 60, then the range was 50 to 70. Is the range now 60 to 80?
Yeah, I mean, I don't think they're really setting a price target as such. What's changed here, it's a very subtle shift. But as we approached $80 on the Brent price, the market assumed that Saudi Arabia would intervene, largely because they're trying to keep the US on side as well. If you remember back in May and June, we had those rather furious tweets from President Trump talking about how OPEC was manipulating the oil price. in the intervening months, Saudi Arabia had stepped in to increase supply. It appears now that the position they're taking is, given that the sanctions in Iran are so effective, given that the increase in volume from OPEC is coming from very precarious jurisdictions like Libya, like Nigeria, and so on, given all of that, maybe there's very little they can do to stop it popping over 80. That doesn't mean they like it. They're aware that this is in the danger zone, but it also means that they're not going to panic every time it gets to 80.
Right, Stuart, and good point. And I also wondered if it spoke to their lack of spare capacity as well as Russia's. They may talk a good game, but the reality of them pumping more quickly is far from the truth.
Yeah, I mean, they could probably get a few 100,000 more barrels out. I mean, it remains to be seen how fast that could happen. But the same with Saudi Arabia. I mean, it's clear that the nameplate capacity is absolutely enormous, but they've never had to test the top end of that. And remember, in the definition of the oil market, spare capacity is something you can bring online pretty quickly and then maintain. So yes, you could spike production for a month or two, but after that, can you really keep it going? Is the infrastructure there? Is the engineering there? You know, again, that remains to be seen. We are in a very, very tight market.
All right, Stuart Wallace, thank you so much for joining us from Bloomberg in London. And as you pointed out earlier, President Trump to the midterms is not going to like $80 a barrel.
I was going to say, there is a November 6th election coming up.
Yeah, exactly. All right, well, that does it to Bloomberg Daybreak Americas. Coming up on Bloomberg Markets, The Open with Jonathan Farrow, Mona Mahajin, Allianz Global Investors' U.S. investment strategist. This is Bloomberg.
From New York City for our viewers worldwide, I'm Jonathan Farrow. 30 minutes until the start of trading. This is the countdown to the open. Coming up, the US unveiling watered-down tariffs, imposing a 10% duty on Chinese goods, rising to 25% in 2019. Apple coming out unscathed, the Trump administration sparing a category of high-tech products, leaving equities on a firmer footing, even as the Chinese Ministry of Commerce vows to retaliate. 30 minutes away from the opening bell, then here's your scorecard. Futures are positive, up 7 points on the S&P 500, up 0.25%. Euro-dollar reclaiming a 117 handle, and Treasuries grinding higher by 3 basis points to 3.01% on a US 10-year. So you wake up on Tuesday and it feels like Groundhog Day once again. President Trump up in the ante in a trade war with China, and China vowing to retaliate.
China's going to take the long-term view.
The most aggravating thing for Xi Jinping and China's leaders are they're not sure they're even reading from the same script as the Trump administration.
China is going to be in a long-term competition with the United States.
The reason why they're probably picking the trade war is because the odds are kind of stacked in America's favor.
China is going to do it gradually.
What is being threatened here is not some dispute or spat, however difficult to resolve, between China and the United States.
China has no elections, so they can take control of their own policies and face and threaten the U.S. over the medium-long term. So they may win this war.
We're looking at quite treacherous waters here.
These frictions are going to have a negative stagflationary impact of reducing growth and increasing inflation globally. That's the danger of this trade war.
Let's head over to Kevin Cirilli, Bloomberg Chief Washington correspondent, joining us now from the White House. Kevin, good morning. What's the latest?
Well, President Trump imposing $200 billion worth of tariffs set to go into effect against China on September 24th, 10%, and then next year it'll be up to 25% on a host of different products, ranging from everything from agriculture and dairy products to men's gloves, mittens and mitts of leather or composition leather, and batting gloves as well, just in time for baseball season. Now, Jonathan, a lot of different companies have raised concerns that this could ultimately lead to higher consumer prices. Organizations like Samsonite have said that they might have to increase the cost of their luggage as well as handbags and other goods, whether lined or not lined. And that really, I think, is where this is all headed, is just how will this ultimately impact consumers. Meanwhile, President Trump, for his part, has said, quote, "We have given China every opportunity to treat us more fairly. But so far, China has been unwilling to change its practices." So this despite the Republican Party as well as the business community urging President Trump to reconsider how he has negotiated with China. China, as we've reported, is saying that they are ready to retaliate. Quote, "The U.S. side insisted on imposing tariffs, which has brought new uncertainty to the bilateral negotiations. We hope that the U.S. side will recognize the negative consequences of such acts and take convincing measures to correct them in a timely manner." I want to note something. Yesterday on that call with senior administration officials, they did not announce, Jonathan, any scheduled talks between China and the U.S.
And that's an important point. Kevin Cirilli, thank you. And an important headline crosses the Bloomberg: China to levy tariffs on $60 billion of U.S. goods effective September 24th. I'm losing count. Michael McKee does not lose count. He's going to join us a little bit later, Bloomberg International Economics and Policy Correspondent, to break down what is happening, how many goods have been tariffed by the United States government. Joining us now, I'm pleased to say, from San Francisco on technology, joining us right now on technology from San Francisco is Bob O'Donnell, Technalysis Research Founder and President, joining us from San Fran. Bob, great to catch up with you. I want to talk about tech and what's coming out of the United States. Apple comes out of this unscathed. Just how good a job is Tim Cook doing lobbying this government?
Well, obviously, he's doing a great job, because the fact that they were able to get, obviously the phones hadn't been touched initially, but the fact that now even Apple Watches and AirPods and the HomePod smart home speaker are not being touched says a lot about Cook's ability to influence Donald Trump, clearly. And that's, you got to give him credit for that, because not a lot of people have been able to pull that off.
Bob, he's been able to pull it off. And as that headline crosses the Bloomberg that China's going to tariff the $60 billion of U.S. imports, I'm just wondering whether that puts a target on U.S. tech for the Chinese, because they now know how important this is to this administration.
Well, I think you're absolutely right. And look, that's the long-term concern that, everybody was talking about in that opening package there. I mean, you've got a lot of unknown consequences when people start restricting access to certain types of devices. I mean, China talking about limiting access to certain key components. I mean, the challenge you have in the tech business is the whole supply chain is there in China. This is not something that people really understand all that well, I think. And that's part of the problem, because it's about the people who have the displays and who have the different chips and all the pieces. All of those elements are there in China. That's why the finished good factories are also there in China. That's very difficult to replicate. It's one thing to say, well, we're just going to bring, the smartphone manufacturing here. The problem is you've got to transport all the components along the way and have the right suppliers. It's a very difficult thing to overcome long term, and I think that's the question mark is how far does this thing go, and does that start to impact the ability for these companies to get access to the components that they need?
So, Bob, big question then. If you want to onshore some of this production, talk to me about what took it offshore in the first place and how you reverse that, get it back into the United States. If it's not tariffs, what is it?
No, it's way more than that. I mean, fundamentally, again, you've got to think about the fact that there are these very long supply chains of people who make, the raw materials and chemicals and plastics and things like that. Then you've got the chips. Then you've got the displays. You've got the modems. You've got the antennas. You've got the speakers. All these little pieces. And all of those component pieces moved to China a very long time ago. And then over time, people realized the efficiencies of having all this stuff nearby. And so to change that is going to be very difficult because, it involves everything from things like the quality of the transportation options you have available there, the interconnectedness of all these different parts. And of course, part of the challenge in the past, quite frankly, has been the types of loans that the Chinese government has given to these companies to spur them further on, and some have argued those have been unfair. And that's why this whole Made in China 2025 thing is a big concern that we've heard addressed, because they're trying to drive that even further. They want to leverage the position that they are in, that is China, to maintain control of this tech supply chain. But at the same time, of course, we've seen the U.S. start to push back much harder against that one. It's not an easy problem to solve, and I don't really see any particularly easy answers.
Bob O'Donnell of Technalysis, great to have you with us on the programme, and we'll have a much more in-depth conversation with Bob, I'm sure, in the future as well. Let's head over to Michael McKee to get the count, shall we? Bloomberg's international economics and policy correspondent. Mike, just where are we? How many goods and what tariff?
Well, right now, it looks, John, like we are playing truth or dare between Donald Trump and the Chinese. The president imposing sanctions last night, $250 billion, and saying they had $267 billion left in reserve. This morning, just a few moments ago, he tweeted that if the Chinese retaliated, he would impose those $267 billion rather quickly. Well, you announced it on this program just a moment ago. The Chinese said they would go ahead with $60 billion in tariffs, upping their total tariffed products to pretty much everything the U.S. sends them, about $130 billion, and we're at $110 right now. The U.S. is imposing tariffs on 5,700 Chinese products, so a very broad section, and as you were just talking about, a lot of it in electrical machinery. That's the biggest category that it's affected, and it goes into other things. Now, this will have an impact on China. They are willing, it seems, to put up with it for the time being. Best estimates are that we could see anywhere from 2 or 3/10% cut from their GDP to 1.5% if the president goes ahead with that $267 billion in additional tariffs. This is for 2019, although analysts say China will put out some sort of fiscal stimulus to help keep its economy on an even keel. So that leaves the question of what happens to the U.S. economy. Well, the general consensus is that adding the $267 billion in, what you might see is a 3/10 drop in U.S. GDP next year. This is the forecast for 2019 GDP, the consensus forecast that economists surveyed by Bloomberg put together. And you can see as the tax bill starts to take effect, people ramping up growth, that would come way down if we saw a real trade war, an extensive trade war break out. And so that's the real question, what happens next? And I just threw this in here. Remember the washing machines we put tariffs on back in February? Look what happened to prices. That's what American consumers could face in the long run if we see the full trade war and prices go up for everything that they pay for, because, of course, tariffs are not paid by the Chinese, despite the president's tweets. They're paid for by American companies who may pass that along to consumers.
Bloomberg's Michael McKee, great to catch up with you. Joining me around the table here in New York, Mona Mahajan, Alliance's Global Investors U.S. Investment Strategist, Dan Skelly, Morgan Stanley Equity Model Portfolio Solutions Head, and George Bory, Wells Fargo Securities Credit Strategy Head. Mona, where are we? It does feel like Groundhog Day, doesn't it?
It certainly does. You know, look, this $200 billion of tariff, like you said, it is a bit watered down. So we thought it'd be $200 billion, 25%. What we actually got was $200 billion, 10%, and some industries are actually excluded. That's why I think you're seeing the market reaction that you're seeing today. In addition, it just seems like the market's now been trained. You hit the tariffs and the U.S. goes up and the rest of the world kind of falters. And so it feels like the market's kind of saying, you know what? Thus far, the U.S. has not been impacted. President Trump has reiterated this. You know, the numbers look solid still in the economy. So is this just rhetoric, or does this actually eventually impact GDP growth?
Is that a dynamic you expect to remain, George?
Well, I think you got to watch the bond market very closely. Bond yields have been creeping a little bit higher, and one of the relief valves here clearly could be inflationary pressures, which, you know, as we just saw in the last chart, it's still very isolated. It's not being felt in a broad-based sense. And so I think there is this kind of almost like blasé kind of attitude in the bond market right now that inflation is going to remain very subdued. But as escalation creeps higher and the potential for price increases starts to work through the system, then, you know, I think the long end of the yield curve is certainly where you'd start to see it. Not seeing it yet, but we might see a little bit of pressure.
Not seeing that yet. In the market right now, we do see futures turn just a little bit lower. The argument, Dan Skelly, is just keep your long U.S. exposure on. If you're going to wait regionally towards anything, wait towards America. Do you keep that way of thinking?
We think you can start adding international assets here. We think the divergence in international and U.S. has been extreme, and we actually think we might be somewhat in peaking trade tension territory right now. It's notable to us that when you look at U.S. industrial stocks, they actually look like they're breaking out of a long-term downtrend. So a lot of the areas that have started to price in trade, notably U.S. cyclicals and international stocks and EM stocks, we think might be starting to bottom relatively soon, and we think there's some long-term value there.
Mona, you appear to take the other side of the trade, focused on small caps, focused on U.S. high yield. Why?
You know, I think over the near term, you know, at least through year end, I think we see the U.S. story continue to strengthen. We have, obviously, the tax reform was passed, but I think we still have a good 2 to 4 quarters left where we will see increased capex spending, increased, you know, confidence levels, increased, you know, in terms of repatriation. That comes back, and that will certainly flow through U.S. small caps. And, you know, hand in hand with small caps, I think the U.S. high yield story still remains somewhat interesting. You have to be a little bit more cautious as we get further in the cycle, but it's an area that's somewhat isolated to the trade tensions as well, and obviously no default cycle on the horizon.
George, high yield in the United States looking pretty tight to investment grade. Abroad, we've seen some pain in high yield. Can the U.S. remain that resilient?
I think the core part of the high yield market's in pretty good shape. As you said, it's sort of relatively insulated to trade wars. As long as you sort of be careful in terms of your duration exposure, try and skew yourself towards the front end of curves. So relatively high stream of income, which I think most people find pretty attractive. And also, with the economic backdrop being pretty healthy, as Mona said, you know, the default cycle is still relatively benign. So I think high yield's a pretty good spot to be.
George Bory of Wells Fargo sticking with me alongside Mona Mahajan of Allianz and Dan Skelly of Morgan Stanley. In the markets, then, futures do turn just a little bit lower as China comes out and says that tariffs on $60 billion of U.S. goods effective September 24th. The line from China is that the rates on $60 billion on U.S. goods will be 5% or 10%. They respond in kind, not quite. Futures positive 0.1% on the S&P 500. Dow futures up by 0.08%. Coming up on the program, FedEx falling as earnings fall short on higher labor costs. That's coming up next. This is Bloomberg. From New York City for our audience worldwide, good morning, good morning. Here are the scores for you 14 minutes out from the opening bell with futures positive 2 or 3 points on the S&P 500. We are up by around about 1/10%. Elsewhere, shares of FedEx getting hit on the heels of a mixed earnings report. The package delivery service citing higher labor costs for a miss on the bottom line, but raising its full-year outlook. Joining us now for more is Bloomberg's Romain Bostic. Romain.
Yeah. Shares of FedEx coming off basically a 4-day run. They were up about 13% over that time, but the earnings disappointing a little bit. Keep in mind they beat on revenue, coming in at about $17 billion in the quarter. That's slightly above where the estimates were, but they got squeezed on profits, coming in at about $3.46 on EPS. The estimate was for $3.80. Now, FedEx is remaining a little optimistic here. They did raise their outlook for the fiscal year that's going to end May 31st. They're giving a fiscal year adjusted EPS range of about $17.20 to $17.80. That's a bump up of about 20 cents on the range. CEO Fred Smith basically saying the company not only remains optimistic about that, but it basically says that its FedEx Express operating income, that target was to boost operating income there by about $1.2 to $1.5 billion by 2020, says that the company is still on track for that. But one key element to meeting that, of course, is going to be capital expenditures. This has caused a lot of agita on Wall Street. Capital expenditures have been going up along with labor costs, and they really haven't seen the benefits of that showing up on the bottom line numbers. The company basically saying that they're going to slow spending a little bit. So for this fiscal year, 2019, basically saying that it will slow to about $5.6 billion. That's about down from $5.7 billion in 2018. So a little bit of optimism there that if they can get those costs under control, combine that with strong economic growth, and of course, this boom in online spending, that could be the recipe to give a little bit more lift to EPS and, of course, a little bit more lift to the shares.
Romain, thank you. Joining us now on the phone is David Campbell, Thompson Davis research analyst and senior vice president. He's got a buy rating at $360 price target on FedEx. Great to have you on the show, David. Let's just start with that labor cost pressure. Was that unexpected for you?
You know, the labor costs the company had were on target, actually a little bit less than I was estimating. The labor costs are not the problem. My feeling was the biggest problem in the quarter was a little light on international package revenues. International package revenues were a little under my forecast.
Do you see that picking up? What's the base case for the company?
No, I think the big growth of the company is going to be from the 6-day, the startup of the 6-day ground operations, operating their ground network for 6 days a week instead of 5. That's going to be a big boost to revenues and profits in the next 9 months.
David, the stock's down. I won't let price dictate the narrative too much, though. The stock is down. But your view on these kind of companies and how well the economy here in the United States of America is actually doing?
Oh, yes. I think the stock will react on a quarterly basis to the earnings, but in the long run, the company has tremendous earnings potential that will continue to make the stock one of the most attractive that I follow.
David Campbell of Thompson Davis. Great to catch up with you, sir. Thank you. Still with me here in New York. Mona Mahajan of Allianz, Dan Skelly of Morgan Stanley, and George Bory of Wells Fargo. Dan Skelly, this is a big theme. Labor, margins, costs, pushing up. Do you see it becoming a bigger theme in the quarters ahead?
Absolutely, and it's not just that. It's the input costs, it's material costs. We've been hearing about labor costs rising since the beginning of 2016. And that's really, truly when the bottom scale of the income spectrum started to get a raise for the first time in this cycle. It had taken longer than average because of all the technology, innovation, all of the slack in the economy. But we've been hearing about it for a while. And so key to that, Jonathan, is going to be what companies have pricing power, what companies have brand equity and moats that they can pass on these costs.
Mona?
Yeah, no, I mean, we agree. I think generally speaking, we have seen a rise in input prices, a rise in wage prices and wage costs, and clearly the tariff wars exacerbate that. But generally speaking, you know, it feels like companies have been able to utilize globalization, utilize technology to, you know, offset some of those rising costs. And I think that's kind of what we're seeing at this price, or at this point in the cycle. Corporations are still at high levels in terms of profitabilities.
Yeah.
And, whether or not we're seeing a peak, we're certainly going to see a peak in earnings this year. 25% S&P earnings growth year on year, probably falling to about 10% next year, partly due to this rising input and labor costs.
George, the story for inflation is that you don't hit some magic number on unemployment and all of a sudden it appears.
Right.
It happens slowly.
Right.
And then quickly.
Right.
Is it happening slowly now?
It seems to be happening on a gradual basis. And I think as we kind of look at it sort of at the macro level, there's this kind of slow creep. But as my colleagues have mentioned, you're seeing it in isolated spots. And we particularly see this in some of the high yield companies I mentioned before. Being able to pass those prices on are kind of difficult, so you have to absorb them in margins at least initially. But as each sort of sequential price kind of creeps up, a little labor here, a little input cost there, at some point you need to start pushing prices a little bit higher. You can have a thing like a big hurricane, which can sort of dislocate sort of supply chains temporarily, but that opens your window to sort of bump your price, and you might start to see those types of things come through.
For a company like Apple, just for the sake of talking about consumer price tolerance, there is quite clearly some consumer price tolerance.
Yeah.
Where does it exist outside of technology? What sector does that exist in right now?
Well, I mean, when we look at it, on the services side is certainly where you see a lot of willingness to absorb price increases. The goods side, it's still very kind of either selective or you get some material value enhancement that kind of, in theory pushes the price down, but in reality, you're actually paying more in dollars. Yeah. But on the services side is sort of where you actually do tend to see kind of prices go up and then get absorbed.
You see that too, Dan?
I would just add that on the manufacturing side, you really have to focus on the brand leaders, the market share leaders that also have technology advantage. So as an example, Deere in the machinery space, we think is going to be able to put through pricing over the next couple of quarters to offset some of the costs. And our team at Morgan Stanley Research did a phenomenal piece on data era leaders, and they actually cited Deere as one of the leaders who's doing a lot with precision agriculture and different data aggregation.
Final word, Mona?
Yeah, I think generally speaking, it feels like we're at a point in the cycle where, yes, late cycle environment, U.S. equity markets can continue to climb here. We are getting more and more cautious as we go into 2019. So.
Mona Mahajan, sticking with us of Allianz, and Dan Scully of Morgan Stanley alongside George Bory of Wells Fargo. Coming up on the program, the analyst action that you need to know. That's next in our morning calls. In the markets about 7 minutes away from the cash open, with futures just slightly positive, up 0.1% on the S&P 500. From New York this morning, good morning. This is Bloomberg TV. 5 minutes away from the opening bell in New York City. After a day of losses, we could get a little bit of a snapback this morning. We're up around about 0.1% on S&P 500 futures. It's time now for some morning calls. A look at some of the big movers on the back of analyst recommendations. We begin first up with JP Morgan cutting its price target on Facebook to $195 a share. The analyst saying the company's upcoming investment increases are not yet fully priced in. Next up, Pivotal Research cutting Discovery Communications to a sell with a $26 price target. The analyst warning about fundamentals and long-term weakness in national TV advertising. And finally, Macquarie cutting United Airlines to neutral with a $95 price target. The analyst citing the company's high valuation. That stock down in the pre-market by just over 1%. From New York then, with the opening bell up next, futures positive. This is Bloomberg. From New York City this morning, good morning. 23 seconds away from the opening bell after a day of losses. Here's the snapback. It's a mild one. Futures positive 24 on the Dow, up by around about 1.5 points on the S&P 500, trimming earlier gains in the face of increasing trade tension. Apple unscathed, so maybe some optimism around there out on the tech story. There's your opening bell here in New York. Switch on the board and the bond market yields higher by 2 basis points, 3% back again above that number on the 10-year. In the FX market, the euro reclaiming 117 against the dollar, 117.09 is where that trades, and crude catching a bid on WTI and Brent. That conversation coming up a little bit later in the programme. So there's the cross-asset snapshot this morning. Let's get you some stock movers. Here's Bloomberg's Abigail Doolittle.
Well, we certainly have some earnings movers this morning, John. Take a look at the shares of FedEx, down 2.5% on a mixed quarter. They beat revenue estimates, but they missed on the earnings side due to rising labor costs. Despite that, they actually raised the full-year earnings view above guidance. Net, this stock is about flat on the year. It'll be interesting to see how it plays out. Down sharply, Oracle, well, actually off of its lows, its pre-market lows, down about 3%, another mixed quarter. Now, they beat earnings but missed sales. It has to do with the transition into moving the cloud-based business into the legacy software. Investors not liking it right now, and the shares are lower on this. It'll be interesting to see how this one plays out, too. And then we do have, finally, we are looking at Sempra Energy and Athena Health, and here we see Sempra trading up 0.8%. This has to do with activist investor Elliott Management. Paul Singer has won one board seat, and it's thought that maybe the company will be split up, but Athena Health not so much. The New York Post, John, reporting that they have dropped their $160 bid per share, and that this could mean, according to RBC, the stock could drop down to $110 to $120. Time will tell.
Abigail, thank you. Thank you very much. The other big story this morning, Bank of America Merrill Lynch delivering the key trends in global markets in its September Fund Manager Survey. I'm really pleased to say joining us, as they do every single month, is Ronan Carr of Bank of America Merrill Lynch. Ronan, great to get your thoughts this morning. The top line for me, just having a look through the research, investors' bearish growth and increasingly bearish growth. What's your takeaway?
Yeah, hi, Jonathan. Good to be with you. Indeed, I think the most striking thing this month is the decline in optimism on the global economy. It's at a 6-year low, the question on growth expectations globally. And that's also reflected in increasingly pessimistic view of the profit outlook. That's particularly the case outside the US. Expectations for US profits are much healthier, but that overall is feeding into a more cautious tone in the survey.
Ronan, just in terms of the tail risks, I noticed also that the overwhelming consensus is no longer just about trade. The tail risk, the up-and-coming tail risk, appears to be a Chinese slowdown. What do you make of that?
Yeah, it's interesting. The kind of pessimism around trade risk peaked a couple of months ago. It's still, cited as the biggest tail risk, but it has been receding, which I think reflects the fact that trade worries are better embedded in market sentiment. But you're right, Chinese growth is kind of moving up the ranking in terms of what people are worried about. I think that reflects the fact that growth has been slowing in China. I think there's interaction between these two as well, because a full-blown trade war, an extended trade war would be potentially damaging for the Chinese economy. And I think that's maybe the thing people are worried about, that's less priced into markets potentially here.
Ronan, something I'm trying to figure out by just talking to fund managers and people on the buy side is just how stretched this decoupling theme has become, how one-way that trade has become, and how crowded the trade is right now. Just how crowded is that trade, the US continuing to decouple from the rest of the world?
Yeah, we think it's getting quite stretched. In the absence of a global recession, we're seeing the underperformance of non-US markets hitting relatively high levels, the worst since 2008. Sentiment metrics for emerging markets are also deteriorating quite materially, and in the survey today we see allocations to EM took a big fall, at the lowest since early 2016 at the lows for emerging markets. Conversely, sentiment around the US is very, very upbeat. Like I said, profit expectations quite high, unlike in other regions, and the allocation to US equities is also at the highest in a number of years. So I think it's starting to become stretched. I think it could get more stretched if we went into a full-blown downturn. That's not our base case, and therefore we think it's going a bit too far now.
Ronan, it's not exactly euphoric in terms of how they're positioning in the United States. What comes up in the report, the survey, is long equities, yes, but also long cash. What do you make of that?
Yeah, I think overall it's a fairly cautious tone. The cash allocation is at 5.1%, which is above the 10-year average, which is 4.5%, and it has been rising in the last few months. Equity allocations are still positive, but have been falling. So, it is a pretty cautious tone. There's a preference for the US as a kind of higher growth, more defensive market, but overall, the sentiment of the surveys is becoming more and more cautious.
Ronan, I want to wrap it up with the contrarian trade that comes up in the survey. Long EM versus the United States. What's the catalyst, and how brave do you have to be to put that on right now to see that materialise?
Well, I think what EM really needs is the dollar to stop going up, and we have seen some hint of that in the last couple of weeks. Our internal positioning data suggests longs in the dollar globally have really increased over the past 6 months. I think ultimately the kind of key political catalyst will be progress towards de-escalation of the trade war. And obviously there's, this week we should see the announcement of the next round of tariffs on Chinese imports into the US. But I think if we see progress on talks, that will be a very important catalyst. And that's what we'll be watching for in the next month or two.
Ronan Carr of Bank of America Merrill Lynch, great to catch up with you. Still with me here in New York is Mona Mahajan of Allianz and Dan Skelly of Morgan Stanley, alongside George Bory of Wells Fargo Securities. Mona, what do you think of that, just in terms of where the consensus is, where the bias is right now?
Yeah, I think that's probably spot on. U.S., that trade is quite crowded right now, the U.S. long, the short EM. It is interesting when I think of contrarian trades. I do think at some point China does become interesting here. Valuations are now down 20-25% lower than what we saw at the beginning of the year. And, they're still growing well above average globally. They have been committed to China 2025, One Belt, One Road. I do think any de-escalation in trade tensions could create an opportunity in China. And I do think the way President Trump has structured these tariffs, 10% now escalating to 25% by year end, maybe gives an opportunity for China to come to the table.
Many ways to play that. If you wanted to play the long China story, what bucket of securities would you do it through? You could do it through basic resources, the old economy stuff. Chinese tech has been beaten up really hard. How would you play it?
Yeah, we like the China A-share story as well. I think there's a way to play that basket, and that includes the tech and includes the old world industrials. But I think general exposure to China makes sense, at least as you cost average in over this year.
George?
The biggest, I think, interesting and perhaps most overlooked component of that survey is sort of the rising cash component. And the reality is that cash rates are going up, and they've gone up pretty materially. Fed funds at right around 2%, likely to be at about 2.5%. So the hurdle rate for investments are going up. That's particularly true in the world of fixed income, and you have a relatively flat yield curve. It gets harder and harder to generate sort of performance from kind of the more traditional fixed income returns, which are just simply roll down and carry. So you have to sort of strategically position yourself within your portfolio. We've had a very strong bias for the shorter duration, the shorter maturity parts of the curve. That's worked out very nicely this year as it relates to total returns, but it's still tough to generate strong total returns in the world of fixed income when the Fed is raising rates. And what we like to call it, it's basically the march back towards cash. And it's happening. We see it in the fund flow report. We see it when we talk to clients, and you can see it in the asset performance returns. You need to be able to beat that rising rate of cash, and if you can't, you're going to be vulnerable, which is why you have started to see some pressures around the world.
So many people have identified, acknowledged, and forecast that basically income is going to become the bigger component of total return over the next several years. Is that where you are?
Well, income has, absolutely. Income is going to be your biggest driver, especially if rates do kind of continue to reflate here. The 10-year sits right above 3%. Our house view is we're at around 320 by the end of the year. And even further looking out, we've got a 365 target for the 10-year for next year from our economics team. That's a pretty big move. You're not going to have a lot of capital gains if the 10-year is in fixed income, if the 10-year is at 365 by the end of next year. So income, be at the front end of the curve, be as low down the rating spectrum as you possibly can, capture that income, because you're going to need to offset some of those mark-to-market losses from higher yields.
It's a very simplistic argument, but it basically goes as follows. The risk-free asset now has a return. Cash returns something. It's become an asset class once again, and that means global risk assets need to reprice. To what degree have we seen an aggressive repricing internationally already, Dan?
We've seen a massive repricing both internationally and in U.S. value stocks. And I would just say, I don't think you necessarily need a resolution or more clarity on the trade war to get a reversal in some of these consensus trades. Keep in mind, China 2025 is over 6 years away. Okay, so this thing could go on for a pretty long period of time. I think you actually could see more fundamental weakness in tech and cloud next year, simply because you're going up against really, really tough comparisons. We had a lot of money plowing into corporate cloud spending after the tax cuts, and they're frankly going up against very tough compares next year. Just seeing a second derivative slowdown in that type of sales growth could cause some of the reversal in these trades.
Mona, final word on tech?
Tech right now, it's interesting. We're probably seeing a little bit of a sell-off. Historically, September and October has been weaker in the U.S. cyclical economy and in the U.S. stock market. What we're coming up across is midterm elections in November. And when you look historically, the analysis shows post-midterm elections, actually that November and December period does quite well, well above average historically. And so we could be setting up for something similar to that. You know, it's always hard to call, but we could be getting a period of volatility now followed by a period of strength towards year end. So we could be setting up for buying opportunity.
Mona Mahajan of Allianz, it's been great to catch up with you. Thank you very much for joining us. Sticking with me, Dan Skelly of Morgan Stanley and George Bory of Wells Fargo. Coming up on the programme, oil climbing higher after Saudi Arabia is said to be comfortable with Brent rising above $80 a barrel. That conversation coming up next. In the markets, about 11 minutes into the session, equities positive here, up 0.4% on the S&P 500, up 1/3 on the Dow. Switch up the board in the bond market. Treasury yields bleeding hard by 3 basis points to 3.02%. And in the FX market, the euro getting back to 117 at 117.12. From New York, this is Bloomberg.
This is Bloomberg Markets, The Open. I'm Kaylee Lyons here in the Hewlett-Packard Enterprise Green Room. Coming up later, Andreas Rentschler, Volkswagen Trucks CEO.
"13 minutes into the session here in America. Let's get you up to speed on the scores. Equities positive by 1/3 of 1% on the S&P 500. Some watered-down tariffs from the United States and the Trump administration. 10% on $200 billion of Chinese imports, rising to 25% early next year if negotiations don't take place. China responding with some watered-down tariffs of their own, and Apple comes out of the whole thing unscathed. Net positive for now. Switch up the board in the bond market. Here's the picture for you. Treasury yields grinding hard by 3 basis points on a 10-year to 3.02%. And in the FX market, euro dollar positive by about 1/4%. The euro firmer at 117.10. Looking at crude now, oil prices rising. Saudi Arabia saying it's now comfortable with Brent trading above $80 a barrel. That's according to people familiar with the kingdom's view. Let's get to the reporting out of London, shall we? The team leader, Stuart Wallace, Bloomberg Energy and Commodity Executive Editor, joins us now from London. Stuart, talk to me about what the team has learned in the last 24 hours, just about where Saudi Arabia is at and what they're comfortable with.
Yeah, good morning, Jonathan. So it's a very subtle shift of language, it's a very subtle shift of tone, but it has huge financial implications. So what happened? Cast your mind back to May, June, when prices were rising. The US president went through a series of fairly furious tweets talking about OPEC manipulating oil prices. In the intervening months, it became clear that Saudi Arabia was prepared to add barrels to the market to cap that price, that really $80 a barrel was a step too far. Now, what's happened since then, of course, is that the Iranian sanctions have been far more effective than anyone imagined. The increased barrels from OPEC are coming from some very precarious jurisdictions, so the likes of Nigeria and Libya and so on and so forth. In that context, Saudi Arabia is not exactly looking for $80 a barrel. More, it's saying that there may be limits to what it can do in the short term. So it's not a major change of policy, but it is a change of tone. Now, in terms of the financial implications, the world is consuming somewhere between 90 and 100 million barrels of oil a day. This change of tone has added about $1 to the price of a barrel. Multiply one by the other, that is the daily effect on the global economy of money shifting from the consumers to the producers.
So, Stuart, it seems to me that the Saudis have somewhat changed course at a time that we're expected to see the OPEC +1 agreement become somewhat more formalised. Does that still happen now with this as the backdrop?
Yeah, I think so. Ultimately, what they want is this symbol of unity. In other words, that the major producers, outside of the US, of course, are prepared to act together to stabilize prices. So it's going back to the old rhetoric of the original OPEC. I think we will see some sort of formalization of the deal as we come up both in Algiers this weekend and into the OPEC meeting proper in Vienna in December. But I wouldn't expect any fireworks.
Stuart, have we got a better idea of what happens to the Iran crude supply and who fills the gap?
Yeah, it's looking really precarious at the moment. So, as I said earlier, you know, these sanctions have been far more effective than anyone could have imagined. What's transpired in the intervening months is that Europe, despite it wanting to stick to the agreement, actually really can't do very much about it. It's because the minute you touch any dollars, suddenly you're subject to the US financial system. And of course, they're very worried that European companies, amongst others, would then be pursued by the US government for breaking those sanctions. So who can fill in the barrels? I mean, it's really not easy to say. Yes, it comes down to grades, but ultimately, you know, we're going to be looking at the same people again, or the same countries again, to fill in those gaps, primarily Saudi Arabia.
Hey, Stuart, great to catch up with you. Great work from the team, as always, over in London. Stuart Wallace from Bloomberg. Still with me, Dan Skelly of Morgan Stanley and George Bory of Wells Fargo Securities. Dan Skelly, a reason to be long energy equities right now?
Yeah, our team is actually pretty bullish energy. So, number one, from a market perspective, energy tends to be a late cycle outperformer. It's taken longer this cycle to outperform because of the unique nature of that boom-bust cycle in U.S. shale. But fundamentally, we actually see a couple key drivers here. Number one is increasing capital discipline on the part of U.S. producers. Part and parcel to that is the fact that we're seeing bottlenecks and rising costs, be it labor or material costs, actually impeding production growth. Part of it's related to serious problems in international markets, be it Angola, Venezuela. You mentioned the Iran sanctions coming back. The key risk, however, Jonathan, is China. China's been trying to weaken the currency to offset their export trade slowdown. If China demand for energy and oil goes down, that could be one of the risks.
What's your base case?
We actually see oil going over 80, 85 over the next year or two.
WTI or Brent?
That's WTI.
George, your view?
From the fixed income standpoint, I think there's basically two things to focus on. Number one, as Dan mentioned, revenues continue to rise at a pretty rapid pace for most of the energy complex, and costs are relatively well contained. So from our standpoint, kind of the cash flow generation looks fantastic, and companies are actually deleveraging, which is a major driver for fixed income investors. And so it's been our top pick as a sector all year long, and where oil prices are today, we're going to stick with that trade.
So I guess from the downside, it's a sector that's more insulated. I'm trying to think of this from the upside, whether the credit is the best way of capturing that.
Well, I think you can capture the volume production. You know, things like pipelines are a very cautious way to kind of capture it in the world of fixed income. That's very attractive. You can look at refiners. They're doing pretty nicely. If you want to go down a little bit more towards the E&P side of things, you got to be a little bit more selective there on single names. But the general U.S. energy complex is actually in a pretty favorable position and has been behaving in a pretty bond-friendly way. Total upside, you're going to catch it on the equity side.
Yeah.
You're going to have a much better return. The last point I'd make is, again, just from the macro standpoint, as oil prices go up, as we just heard, the transfer from consumers to producers, it's inflationary. Watch bond yields. They're creeping up a little bit, but that's another sort of outlet, of a relief valve, if you will, of materially higher oil prices.
And Dan, it's coming at an interesting time. If we take the Bank of America Merrill Lynch Bond Manager Survey, people aren't exactly bullish international growth right now, yet you're calling for $85 Brent. Can the macro backdrop tolerate $85 WTI, rather?
Yeah, we think so, because we still see a pretty strong consumer story, and there's a discretionary income, rising wealth story going on in the middle classes. A lot of people haven't talked about India this year. It's actually been one of the bright spots in emerging markets. We actually think that economy is doing quite well. That's going to be a massive driver of energy demand going forward.
Dan Skelly of Morgan Stanley, George Bory of Wells Fargo. Guys, it's been great to catch up with you, over the last 50 minutes or so. Coming up on the program, the market-moving events that you need to be watching through the next week or so. That comes up in our trading diary in the here and now. We're about 21 minutes into the session here in America. Stocks positive, up 1/3%. Stocks doing okay in Europe as well. In Frankfurt, the equity benchmark in Germany, the DAX up by 0.2%. In the bond market, back through 3 on a 10-year, and no drama in equities. Who'd have thought it? In the FX market, euro dollar 117, dollar yen 112.21. From New York this morning, good morning. You're watching Bloomberg TV. It's time now for the trading diary, what you need to be watching through the rest of this week. President Donald Trump hosting the president of Poland today at the White House. On Wednesday, we get a rate decision from the Bank of Japan delivered by Governor Haruhiko Kuroda. On Thursday, some earnings. Carnival will be delivering, and Darden Restaurants releasing its quarterly report as well. Joining me to discuss is Bloomberg's Lisa Abramowitz. Lisa, what are you looking for?
I'm watching a leveraged financing deal that may price today. It's a $13.5 billion deal set to finance Blackstone's deal to take private a unit of Thomson Reuters. This is the Refinitiv unit that basically supplies data to a lot of institutional investors. It comes at a time, what you're looking at right now is just spreads on high yield bonds. It comes in this time when there is incredible demand for riskier debt despite all of the headwinds. And actually, there is incredible amounts of demand for this, even though it is the fourth largest buy buyout deal financed by bonds and loans since the credit crisis, the 9th in history. And we have covenant-light loans. We have debt to EBITDA going up to 8 times. That's one estimate out there. That's compared to the 6 times levered that regulators had said was prudent for banks to finance. This deal is coming in and is completely oversubscribed with more than $30 billion of orders to buy this, and it could price today.
The irony is that when people talk about buying leveraged loans, they're talking about going up in quality. How much quality is there?
Well, right. So this is a long-standing debate in the past couple of months. People have been saying that actually loans are going to recover much less the next downturn simply because the covenant-light ratios, a huge proportion of them, have few investor protections. Basically, this allows companies to take on more leverage going forward. It allows them to engage in practices that might not be investor friendly and reduce the value of their companies. You also have the idea that a lot of companies are just borrowing in the loan market.
Yeah.
So, you know, great, you've got first lien debt, but there's nothing behind it. So if you end up wiping out, that debt goes first.
Let's elaborate on that because I think it's really important. People think they're going up in quality because they're going further up the capital structure. But if you're a loan-only company, there's nothing below you.
Correct.
You're it.
Right. And what you've seen is a huge expansion of the leveraged loan market to more than $1 trillion. Well, you've seen almost a stagnation in the high yield bond market, at least when you look at the outstanding debt, simply because people have been shifting to the loan market because there's so much more money there. It's fascinating times. Really interesting to see this incredible risk on at a time when people are pinpointing the corporate sector for possibly having the highest risk heading into the next downturn.
Really interesting stuff. Bloomberg's Lisa Bravitz, thank you very much. That conversation, no doubt, going to continue on Bloomberg Radio with Bloomberg's Pim Fox. Coming up at the top of the hour, don't miss that. Right here, right now on Bloomberg TV, 26 minutes into the session, a check on markets for you. Equities doing okay, up 1/3% on the S&P 500. The Dow also up by a similar amount, call it 0.31%. In the bond market, 3% and change on a US 10-year. That's your yield. In FX, euro dollar 117, dollar yen 112. Risk appetite doing okay in the face of heightened trade tensions. From New York City for our audience worldwide, this was the countdown to the open. This is Bloomberg TV.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease beside disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
The lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFaul.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections. Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valleywag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature. And it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven. Get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with Dat Stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man, just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. Let's do the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a trigger like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
it's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons.
The demons told me everything, they whisper in the night. This is not a threat, I promise.
Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here
at 1.
I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son. Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit, and then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers' touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards?
Yes, please.
Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's Jade.
Oh. So you can talk to Jade through this?
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. I have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
Written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
她没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中身はアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになっていて。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the US government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room, they had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada,
is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Vinous.
Antonio, tell me, what are you trying to build at Vinous?
Well, at Vinous, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinous is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents